right, good morning. All right, good morning, everyone. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It's Wednesday, October 1st. Government shutdown behind us or underway. Apple is up. Microsoft is moving higher. Broadcom moving higher. Tesla looking for a bounce. Tesla increasing the prices of their cars after the federal subsidy expires. We rallied into the close yesterday, S&P 500, and we finished on basically one-to-one up-down volume. So one-to-one up on the Qs, the SPY, New York Stock Exchange. Let's look at the New York Stock Exchange, come to think of it. Yesterday, the pharmaceuticals had a big day, so keep an eye on those. Let's see what Merck is doing right now. Merck. Riot is up. UNH is still hanging out at 344 and change. Nike had earnings. Nike turning the ship. The first quarter returning to profit earnings growth. That's significant. So the turnaround in Nike is perhaps underway. Okay, Merck. Let's see. Merck is higher today, pre-market. Yeah, it's up about 50 cents right now. Let's see what's the top of the S&P 500. AES, Nike's number 2, Coinbase number 3 with Bitcoin. Big move with Bitcoin. Google, Meta are all putting hundreds of $billions into this CapEx expenditure around AI. Yeah. A commitment to be building data centers into the future. The CEO of SoftBank the other day said NVIDIA is in fact net undervalued, which is amazing. That stock in February 2023 was $108. February 24, it was $900. It got to 1,200 and split 10 for 1. Right. It is the best of breed in the AI space. And had 2 upgrades yesterday. Exactly. Right. So to think that somebody as big as the CEO of SoftBank. Okay, so Bitcoin is higher. Number 3 is Coinbase. Okay, Merck is looking good. Merck is up as well. Merck is like number 8.
So you still sound hot on tech. I mean, I know you talk to Dan Ives a lot. I know you don't necessarily give recommendations, but are you in or out on this market?
I'm totally in.
Totally in. Don't leave the cash on the sidelines in.
You know what? Look, it's hard to tell somebody when the market's been trading, and we've had 29 record highs in 2025 already. Okay? Yeah. It's hard for people to say, why would I ever buy it? Okay, Mark looks like it's number 8, number 9. Amgen is in there. Bristol Myers is in there. Pfizer, BMY, Pfizer, Amgen. The enthusiasm in the market, they're buying everything. They're buying crypto, they're buying gold. There's nothing inverse going on. There's sort of no flight to safety, right? Everybody is putting money to work. I think you have this new, there are 50 million strong retail traders out there. Okay, we're just a little bit underneath the London pivot high right prior to the open. Okay, let's see how much time we got. 7 minutes. Let me show you what I'm talking about here. TradingView is, since I don't trade with TradingView, I believe you have to upgrade it or whatever to get real-time data on the futures. Everything else is real-time.
Anyway, so futures. Okay, so what I'm looking at is the pivot low during the London session, right in here. We dropped on that, so let me pull this down. That's down there. And pivot high is right there. We're right near the pivot high. We were off over 50 handles at one point. Okay, so here's a pivot low, pre-market, London session low, swing low, London session swing high. And what we're looking for is one of these levels to be tested, probably the upper level, in the first hour and a half of the New York session, 9:30 to 11. Okay, so that's futures. We're close to that level, around 37.15. That was a similar level yesterday. It basically gave back the last couple of hours of yesterday's rally. 67.15. Where were we? Oh, here. Yeah, here's yesterday. You can see the rally up here. Came back down below that liquidity level, turned back up. We got a swing low and a swing high just prior to the open London session. And we might just go right from the open. Let's look at Trace. You can see that we have support right below at 66.40. I don't see much overhead. Okay, 67.50. Okay, support and resistance. Okay, so these are your levels. All right, so if we take out the London session high and continue, that would occur. That would indicate maybe we see a rally. There's resistance overhead. Resistance. 6,600. And right here.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk.
All right, so you have the levels now. Okay. I'll put this in the room. Okay, we got 4 minutes to go. 4 minutes to go.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Okay, Diamonds, thank you. That's good to know.
I'm Marley Caden, live from Chicago. We're tracking market movers, earnings reactions, and what traders are watching next.
Yeah, that's negligible. I don't use it to trade anyway, but be good to have.
Trading at Schwab is powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles.
Okay, we'll watch for Farmer to continue
just for traders.
today. We want to pay attention to Nike as well. Nike might be a nice trade. Return to profitability and earnings growth. Nike looks good. Expect to see some profit taking first thing.
Welcome back, friends, to the opening bell. I'm Nicole Pedalides. We're live on the floor of the New York Stock Exchange, and that's our countdown to the start of trading. The bells will be ringing, and Sam Bonas is here with me, taking a look at some of the action. Some of your big picture thoughts here.
Yeah, it's sort of starting the month in the fresh quarter
Yeah, whatever.
Are manufactured at this point. But you're starting to see it really pivot in the direction of hybrid. Good example, Toyota. The RAV4 is
Okay,
no longer
let me get the
anything other
levels
than
here.
a hybrid, plug-in hybrid, where you
Let me
can
get the
use
levels for today.
That's it. You can't just buy a straight internal combustion engine version of a new Toyota
Okay.
RAV4, which I think is the third or fourth best-selling vehicle in this country. And you're going to see more automakers really start to make that type of pivot over the next couple of years because that's what the consumer wants.
That's generally how it works, Phil. We still await another big piece of the puzzle in Tesla deliveries later this week. Opening bell, just a few moments away.
Okay. Let's see, vol trigger. We're right above the vol trigger right now. You can see right there. Okay, vol trigger is right here. So liquidity is right above. So watch for a liquidity grab and a reversal back below the vol trigger, or a move through liquidity and a push higher from here. Okay, so we'll watch for both. I'll leave that on for now. Okay, we're open. First 15 minutes, all I'm doing is taking profits off the table. There goes Merck. All right, so we got a nice bid in the markets right here. Okay. What happened to... Okay, Merck on the move.
Sell-side analysts actually coming out to responding to this today. We've had the folks over at CFRA talking about how on Oxy they have a hold recommendation on the shares.
Okay, Lulu on the move. Okay, Lulu. Lulu finally. For those of you who are trading Lulu. Okay, that was a nice little pop there. Lulu trying to follow through. Futures is chopping around. Broadcom just dropped off there. Broadcom underneath yesterday's low. Broadcom. Apple's at the high. Apple. Okay, we should see Bitcoin. Okay, looks like we got a buy. Let's see how far we go with this. Okay, they're buying. They're buying at the moment. Okay, let's see what Trace is saying. All right, looks like a big pop here. 0 day getting bought. Okay, let's see where they are in 0 day. 6,700 looks like a big level. 6,700. 6,700. All right, trying some lottos. Let's see how far we go with this, or if we get slammed. We got some shorts covering right there.
They beat expectations on both the top and bottom line. EPS coming in at 49 cents a share. That was a big beat. The street was looking for around 48 cents a share.
Okay, Apple's still pushing. Microsoft's still pushing. Okay, Broadcom.
That was much better than expected, and it's up 1% year over year. So the expectation is that, or the result rather, is that we are seeing the company at least turn the corner.
SPY looking for the follow through. Let's see if we get any kind of follow through right here.
So that reflects some weaker demand and tariffs.
Hedging flows dropping off a bit, so closing some positions down below. Let's see what they closed. No, not much. Not much. Let's go to Okay, not much here either. Not much here. Let's see how they build 0 day. Okay, nice rally so far. 6,700, very active. A lot of flow in the 6,700 strike. 6,000 contracts already. That's the highest. 6,700. Okay, there goes Apple. Okay, let me do this. Let me grab this and drop it into the slot. Into my trade window, 6,700. Okay, nice pop there so far. Okay, if we do drop, where do we go? Below 66.25, already building 66.25. Okay, 66. Let me grab 66.25. Okay.
They talked about the digital shift in used cars, and they think Carvana is best positioned to benefit from consumers just moving more online. We saw CarMax's numbers recently, and they were weaker than expected. Now, CarMax does that mix, both online and in person. But now it looks like there is a shift. We buy everything online nowadays. Why not our cars? So consumer preference is about 30%.
All right, give it a few minutes for the markets to settle down. All I'm doing is taking profits off the table if it makes sense to do so. If I'm up 50, 100% overnight, a lot of times I'll take some profits. Apple is up big here. Apple. Okay, 265 is the middle of my butterfly. Okay, calls are up big. I have 257.50 calls. If you remember, I bought those yesterday. 257.50. I'm going to go ahead and take some profits off into strength. Apple. Okay, so we took out the London session high. We took out London session high. Okay, S&P. Okay, so London session high is right about here. So we'll keep track of that. Just extrapolating with the S&P cash. All right, nice little follow through so far. Tesla, boom. Amazon, boom. Okay, so what shut down? Markets are ripping. Okay, nice move here. We're going to be at 6,700. That's the call wall, 6,700. All right, so far looking really good here. So far. All right, puts are catching a bid, so just be aware puts are catching a bid. Still going here, S&P. Okay, futures continue. Let's look at Trace. Okay, hedging flows have turned up. SPX hedge flows. Okay, hedge flows have turned up. They're bullish.
Well, layoffs are the last thing we want to see in this environment. Right now, the job market is frozen. There's not a lot of hiring going on. There is some firing, there's some cutting, some layoffs. But overall, we seem to be in this stasis of sorts where people are really quitting their jobs. They're not confident enough to companies aren't really hiring. They're not really.
All right, nice rally.
Changes if layoffs take up, but of course we've.
Oh, those are calls. No wonder that doesn't look right. I said, wow, how's that possible? Put's getting such a bid. Okay, I grabbed the wrong thing here. Okay, let me get, what's that level? We got 66.25 below, just in case. Let me grab this. Now, those are going for 2 now. All I'm doing is filling my trade window, if you guys have been paying attention. All right, looking for the follow through. Okay, hedging flow is starting to peak out here.
Writing that with growth still running hot, the upside risks to inflation are growing.
Okay, I'm going to sell half of these, 100%. Sell half of these calls, 100%. Okay. I'm sorry, 50%. Now, what did I get into these? I think that's right? Let me just check. Let's see. Filled orders. Oh, no. Okay, so in at $1.75, out at $2.90.
As a sign that inflation could keep surging in the near term, which leads to longer yields and kind of a rotation that you see in different sectors of the stock market.
Yeah, we continuously hear from Wall Street Walters that the impact of tariffs still needs to make their way through the economy. But Callie, Brooke, Inez, stay with me. And much more opening.
See how far we go with this. Okay, hedging flows turning back down. Okay, nice rally, S&P. Futures should still stay on a 60-minute buy signal. Okay. So much for the government shutdown. All right, so we're starting to see a little profit taking. Let's see if they buy this dip. Let's see if they buy this dip. Everything is on a buy signal, 5, 15, 30, 60 minute. Tick cumulative is rising. Most stocks look pretty strong. Okay, let's see what Netflix looks like. Netflix, some negative commentary about Netflix. Microsoft, a little profit taking. Apple still pushing. Apple, I took some profits on Apple early. Coinbase, let's look at Coinbase. Okay, looks like they're going to push this a bit more. Coinbase, Supermicro up again today. Supermicro. Who was that guy bad-mouthing Supermicro? Okay, Supermicro, follow-through day. This looks pretty strong. Very, very nice price action here. Supermicro. Probably going to add to Supermicro. SMCI, probably add ABCD today. BC pivots. Okay, that looks really good. Supermicro. MicroStrategy up finally. MicroStrategy. What do I have on MicroStrategy? I have October calls. Should I take that off? It doesn't really work that well. MicroStrategy. Where's Cayman? He on vacation? Okay. Let me MSTR MicroStrategy. Let's see. Brent always talks about this one. Says he doesn't like it. MicroStrategy, pretty cheap calls. MSTR, cheap calls. Okay, we're reversing here. Hopefully, you took some profits off there. I don't trust the markets at the moment. For taking you out and then reversing and going back in the prevailing direction, which is up right now. But let's see. All right, so Palantir is still pretty cheap. Costco pulled back a bit. Costco. Palantir on the move. Okay, Palantir on the move. Supermicro, okay, MicroStrategy. Let's see, Coinbase. COIN. Coinbase. Day 2, actually day 3 above the 50-day over there on the right. Okay, Coinbase looks pretty good. Okay, let's go take a look at Bitcoin. Bitcoin, nice follow through.
Directed their focus to direct to consumer. Now, on top of all this, this was a company that year to date has been under pressure because of the implications of tariffs. And even though
okay, we're almost 18. We're 18. 18 minutes into the trading day, looking for a little bit more clarity here. We just reversed off the high. Okay, S&P. Okay, we made it into the gap, about 50% into that gap. Just shy of 50% into that gap. Let's see if we get a buy. Let's see if we buy here. Okay, hedging flow is turning down. We got support at 66.25, resistance at 6,700. You can see that clearly on 0-day. Let's see what regular options look like. All right, support at 66.45, 66.45 cash. That's just shy of 20 points, 66.45. Okay, we're back below London session pivot high. More selling pressure at the moment. Apple. Okay, what are the pharmaceuticals? Look good yesterday. Merck continuation. Pharma continues. Merck, PFE, Gilead, J&J. Netflix. Yeah, I saw your comment about Netflix this morning, Mondo. Really, you never want to have Elon on your bad side, at least in the short term. All right, we're right back down where we came from.
Major running footwear style each season. They said that they then will introduce that to football, basketball, training, and sportswear, all those platforms from the key findings that they had from running. And this just goes to show that you need to
Merck up nicely.
Price point, which now that returns that full price model.
Okay, let's take a look real quick. I just want to check out these credit spreads and iron condors. Let's look at Broadcom. Okay, Broadcom. We got wicks starting to show up in this area. 1, 2, 3, 4 wicks. Out of the last 5 trading days, 4 wicks down here is showing that there is some buying. We'll see if there's some more buying shows up because I have a iron condor. I'll manage that one. Broadcom looking for a bounce. Okay, what else do we want to look at here? Costco. Okay, Costco pulled back a little bit this morning. Okay, looking for this to follow through. It looks like it's basing down here. Had a nice day yesterday, Costco. Also, Charter Communications. Charter. Okay, we're looking for Charter to stay here or move slightly higher or marginally higher. As long as it stays above 250, we're good. Okay, what else? CoreWeave. What's CoreWeave doing? CoreWeave. CRWV. CoreWeave. Okay, consolidating.
I think the stock market could be a bit shaky, but in being shaky, you could also see some gains, especially in those in the bond market.
CoreWeave.
Medium-term fixed income or quality fixed income assets.
What's Micron doing? Micron. Where are you? There you are, Micron. Okay, Micron climbing a bit more. Okay, we're up against resistance for now. Okay, what's Oracle doing? Oracle down again today. Oracle just kind of little pop. Had some profit taking in Oracle. Okay.
But it is a reminder that rebalancing is especially important, even as economic data slows and as the job market
Oracle.
kind of grinds to a halt here. Because if you see a sell-off, the highest value names will likely get hit the hardest.
Okay, and UNH. Let's just take a look at Oracle real quick. Oracle. Okay, do we get a bounce here? Let's see what Trace is saying. Okay, hooking back up. Okay, looking for a bounce.
Seasonally, also the fourth quarter tends to be very strong for Bitcoin as well. You also have stable coins which have really been accelerating.
Okay, we're coming into the 10 o'clock hour.
Has been good for networks like Ethereum,
Okay.
Solana. So you're seeing.
Okay, United Health. Want to take a look at that real quick. Oracle continues to slide here. UNH just hanging in here. This iron condor is fine. $285 per contract, 5 contracts. I usually start with 5 and then adjust 5 and 5 overhead. I closed the October. I still have the November, and I have some puts, the 260 put, which is right where the 50-day is, if that tests it. Micron drifting a bit higher, watching that. Charter Communications, we want that to move higher. Put credit. Costco and Broadcom. Okay, those look good. Let's see. Merck is still going. Merck's still going. Merck is ripping here at 85 and 90 calls. Okay, let's see if we get a bounce here on the S&P.
We know that Walmart is a top pick among many companies. We also know that Costco has about 24 buys and 16 holds.
Merck's still going. Let's look at the sectors. XLB, XLC, XLE Energy, IHE Pharma, following through Pharma. Let me just do this. Pharma, XLF, financials, flat. XLK Tech is strong. XLK Tech, SMH, strong. XLK, SMH, strong. All right, nice reversal here. Coming through, nice reversal. SMH Tech looks good. XLI Industrials, okay. XLY, okay. Tesla just off the highs. Snowflake bouncing. Broadcom flat. Microsoft looking for a bounce. Okay, XLP still trending lower. XLU utilities, fixed income investors. Hold on one second. My wife and mother are arguing. Okay, XLU, XLV Healthcare. All right, XLV. XLU, XLK. Turn it back down again.
We put our kids to bed and then took a vacation. Since not everyone is a total stoner like my husband, it takes the guesswork out of cannabis, so you know exactly how you're going to feel. Whether you're a ganja guru or just
Microsoft up today. Let's see. I got flies on this one. Microsoft 545, 535. Okay, ISM manufacturing PMI slightly better. ISM PSI, PMI 49, actual 49.1. Forecast was 49. So it's flat. ISM PSI, PMI. PMI was slightly better, basically flat. Let's see if we can get any kind of follow through here. All right, so Merck Pharmaceuticals stocks with meeting with the president, companies. Lilly, another one. Lilly's supposed to be talked about, I guess, not confirmed yet. Lilly. Johnson & Johnson, that was at highs already. A little profit taking. Pfizer, big gap up. My favorite is Merck. So when Merck gets going, this is a good stock to own. So 2 days in a row, Merck. I've had Merck calls forever. They've been underwater. They're finally green again. Okay. Okay, looking for this to turn back up. Looking for S&P to turn back up. Okay, we're just kind of chopping people up right now. You can see price action hasn't moved much. We had a nice little pop, came right back down into the morning low. Okay, watching hedging flows here. Let's see what S&P looks like. SPX. S&P. Okay, got fair value gaps overhead. We might hit either of these and roll over again. We need to blast right through these. Again, super micro, pretty strong. Super micro looking good. I'm probably going to add to this one. I added super micro January 60 calls yesterday. Those looking good. The October 52 call, that's looking good. Let's see how far we go with this S&P. Hedging flow is trying to turn up.
2019. Joining me now is Brian Gardner, Stifel Chief Washington Policy Strategist. Brian, it's good to see you. Here we go again.
It's a chop zone in this area right here. You can see that. In here, you can see all these positions have been taken off. We've moved in both directions. Let's see if this one pops to the upside.
People talk about it, and I do all the time in terms of the longest shutdowns, 34, 35 days, but it wasn't a complete shutdown. And by the way, during that shutdown, if you look at the before and after, the equity markets were up about 10%. So, yeah, investors just
S&P.
how could this be different? If it is
Okay, top 10 on the NASDAQ 100, AstraZeneca, MicroStrategy, Regeneron, Biogen, Amgen, Datadog, ARM Holdings, Vertex, Micron, Constellation Energy, Applied Materials, and Copart. Lulu climbing the list, Lulu.
Negotiations necessarily. I mean, both sides are pretty entrenched here. So what sides of optimism are you seeing?
I think the vote in the Senate last evening is the signal of where we're heading and how quickly we may be heading. For those who didn't see it, 3 Democrats broke ranks. They voted for the Republican plan to
Okay, looking like we're going to follow through on the pharma. The top 10 on the NASDAQ 100, about 6 of 10 are all pharma related. Biogen, Regeneron, AstraZeneca, Amgen, Vertex Pharma. Looks good.
So he's kind of boxed in. That doesn't mean that his members are boxed in. And I think you're starting to
60 minutes still on a buy signal. 5-minute went on a sell, but we got 15, 30, 60 are still on a buy signal. Tick cumulative is green. Let's see what up-down volume looks like. Up-down volume is 1-to-1. I would expect to see a little bit more. NASDAQ is seeing NASDAQ composite 2-to-1 up volume. Let's take a look at NASDAQ. Okay, let's go see what NASDAQ looks like. NDX. Okay, it looks okay. NASDAQ. Same thing, choppy. Okay, Palantir with a nice pop. Palantir. Okay, Palantir looks good. These software as a service companies are the first companies that are making a nice return on investment as it applies to AI. You hear them talking about AI, comparing it to the .com period. What we want to see is earnings continue to grow, more focus on the software as a service companies like Palantir. We got stocks like Meta, which should be pushing a bit higher. They're spending a lot of money, so that's having an impact on them. But you got Google, Amazon, and many other companies that are making money utilizing AI, at least the beginning parts of AI. We're still chopping right now on the S&P. So watch those. Watch the tech stocks. These are looking pretty good. AMD is on the move. AMD, I want to see a move above the 50-day. AMD is looking okay. Merck is climbing here. Merck looking good. Nike is flat, so it looks like some profit taking on Nike. I wouldn't mind buying some Nike. They've finally returned to a profit from what I was hearing yesterday, or a little bit more selling now. Nike beat expectations. Okay, earnings growth still minus 30%. So I don't know. You have to do your own research because CNBC and whoever else was talking about a return to growth in Nike. Let me see what they say here.
That being said, it would not surprise me if there is a deal Friday night, weekend, Monday morning, or pick whatever day, we get that deal. That there could be some kind of relief rally in the equity markets.
And I'm also curious what you're hearing in terms of this threat from the administration to make some of these furlough
Revenues were up.
cuts.
Okay, revenues were up
Very short shutdown. Do you think that's off the
1%.
because obviously that feeds through into some of the
Okay, gross margin decreased
Yeah.
320 basis points. All right, so I'm still gonna, wait on doing anything with Nike. I don't see anything worth going after. The pharma, obviously, a story here with pharma. Okay, pharma meeting with executives, I don't know if they did it on Zoom meetings or what. They probably did Zoom meetings, right? I don't think he actually met with anybody. Does anybody know for sure? Anyway, so there was some negotiations with, I'm not even sure it was with the president. It might have been with some of his staff. But positive reactions yesterday. Many of those stocks zoomed higher. If you look at Merck's candle from yesterday, very positive response. Okay. That's the biggest move we've seen in Merck since 2021, I believe it was, in one day. The volume was above average, so we'll see if we get a second day above average volume. We're above the 50 and the 200-day moving averages. 50s are going to cross up through the 200-day probably in about a month or so. So shorts covering for sure, and new money probably coming in. So keep an eye on those. We also saw a lot of activity in XLU, fixed income investors. You got companies like AES that pay a nice dividend. ED, Consolidated Edison, American States Water. Okay, so we're looking for those to turn. All these stocks pay nice dividends. You could also just trade SPHD, the ETF. This pays a dividend once a month. And the stocks that are in here are pretty commonly held. A lot of pharma names, a lot of electrical utilities, tech, biotech, like AbbVie. Let's see what AbbVie looks like. AbbVie, higher. Okay, so that's a good story there. That's probably going to play out over the next few weeks, next couple of months. Lilly is one that hasn't hit yet. Palantir on the move. Palantir, been talking about Palantir ad nauseum. How all of this activity up here, they've managed to keep this above the 50-day, elevated away from the 50-day, right below recent highs. And buyers keep showing up. Okay, so if you're a little concerned about Palantir, the fact that all these buyers showed up in this area is a big plus. Okay. At the 50-day, you note where we had this right here, the arrow pointing at the volume. Okay, right at the 50-day, that first day we hit the 50-day, they started accumulating shares, accumulating. We push away from the 50-day on above average volume. That's a good story there. The thing with Palantir is you got to buy it on a dip because it dips intraday, always dips intraday, and gives you an opportunity. So if you're going to trade Palantir, wait for the dip. Okay, you see the dip over here? Okay, we run up to the highs, and then we dip. Then you buy it again, and it rips even higher. Or you just stick with it if you don't mind the dips. But it does dip intraday. S&P is trying to go again. Let's see what Trace looks like. Okay, this is starting to bottom. You can see that hedging flows are picking up here. Hedging flows are picking up. Okay, hedging flows picking up. Okay, I'm just going to scroll back to the open. Scroll forward. Okay, you can see the hedging flows are starting to hold this area. Okay, so right in this area right here on the left, you can see all of the trades that have gone off. So this very choppy in here. Once this gets resolved, we should get a trend. I'm thinking that we're going to bounce and continue higher now. Looking for a bounce. Okay, Palantir is really looking good here. Palantir.
that is? And
Okay.
how should we do that?
Tesla.
With what degree of
Tesla.
do we look at the ADP number? Of course, the government numbers keep getting revised too. So put that in the, as we talk about, put that in the hat.
Yeah, I think if you think of it statistically, the challenge with the non-farm payroll is that it's 2 surveys. One counts for 2 jobs, the other one. Plus this birth death model that's accounting people for, in the payroll when they.
Okay, what's the top of the list here? AstraZeneca, AZN. Okay, what is PL doing? Planet Labs. That was higher yesterday. Okay, that's still holding there. Planet Labs.
I got a better gauge here where we're heading, in addition to the ISM numbers, which by the way, always important too. The important components there that forward looking how industries think about hiring from here. So I think the payroll number is not controversial because when I started in the 90s trading, you also had a lot of fluctuation in the number too, so different than it is today. But I do think that people that the markets are taking this number more seriously. So that's why I found that probability moving this morning so quickly on this number was telling that the market take this, that the Fed will take a cue from it, saying, yeah, we gotta watch the labor market.
Enphase and knee. Let me take a look. Enphase for Nick here. Nick. I'm spelling your name instead of knee. Okay. Knee looks good. Knee bullish. Okay. Energy stocks, dividends. Let's see. Enphase did pull back recently, right? Enphase. ENPH. As long as it holds the 50-day. If it loses the 50-day, I'd stop.
Sort of use different surveys and construct what actually the non-farm payroll number should be like. I think that the problem is for them from a, let's say, staff research.
Okay.
So they don't rely on government data for that. Yeah. So they use all private data to get a similar estimate as what non-farm payrolls would be.
Okay, Tesla at the high of the day here. Tesla increasing the price of their vehicles. Palantir, S&P. Palantir looks like it's starting to peter out at the highs. Palantir. Okay, let me take some Palantir off. I have a profit there. Palantir.
So, what does all of this mean for yields as well?
Supermicro up nicely. Supermicro, S&P.
It's sort of in a downtrend, and it's sort of, I think, saying that we've got a lot of uncertainty, and stuff like this tariff, for example, really still overhanging the economy.
S&P trying to move through this fair value gap you can see there. Inside day on the daily. I don't want to go down below 5-minute right now because we just a lot of chop. That looks okay. Okay, so we'll keep an eye on this for now. 1-minute chart, S&P. Riot's up. It's off the best levels, right? Riot's back up today. Let's see. Riot, S&P. Let's keep an eye on S&P. S&P still climbing. Riot. Okay, Riot looks pretty good. Riot, if it gets through 20, Riot, we'll see a squeeze. I'm almost certain. A lot going on with Riot. S&P still going here. Grinding higher. Netflix, Tesla. Okay, he's looking good. Tesla. Did I sell that Tesla yesterday? I bet I did, right? Tesla. No, I didn't. Cool. All right, so I'm still in Tesla. October 17th. 445, 44750. All right, I need to roll this out. Create a rolling order. Okay. 45450 and go 455. All right, I rolled out Tesla. Okay, S&P on the move here. Good. Nice move on S&P. Let's go take a look at Trace. Okay, it's got a big turn in hedging flows. Okay, big cap S&P, big turn in S&P hedging flows. Okay. Okay, here goes Tesla. Apple's gearing up again. Apple. Whew. Very active morning. Very active. Tesla looks good. Look at that move. We're going here. Tesla, Apple. Apple's trying to take out the high. We've got almost a 2-week consolidation at highs. Okay, look at what's happening here. We rally up, we consolidate. We rally up, we consolidate. We rally up, and right now we're consolidating, looking for another rally. S&P's back up to the highs. S&P, big turn in Trace. Okay, we're running up against negative gamma here. The dealers are short. Markets are long. We'll run up to 6690, maybe 6700. There we go. There we go. Blasting higher now. Okay, we're taking out the high of the day. Okay.
We attract people that want to work where they're not directed all the time by a supervisor. We find people that want to be able to move big things like trains.
Okay, so far today, this has been a pretty positive response by the markets, buying the dip. Okay, Riot looking good. Okay, so Bitcoin off the screen. Let me get Bitcoin back where I can see it. All right. Okay, so S&P, there's your answer. S&P continues. We took out the high here, the morning high. It's still 10:30. It's possible. Watching fair value gaps. Watching for this to liquidity up here. We got stops overhead. Looks like they're taking out those stops. Tesla looking good. Nice job, Steven. JD breaking finally. Yeah, the thing with Angel, the thing with Chinese stocks is they tend to do that. Chinese stocks. Yeah, let's see. Let's look at JD.com. JD. Okay, nice follow through. Let's look at Baba. Alibaba. These tend to gap up. You know, they'll gap up and fade, gap up, move sideways, gap up and fade. Sometimes they'll drop, gap down. Let's look at Baidu. JD looking good. We got plenty of time on those calls, so we should be fine. Futures at the highs. Just want to make sure that they don't take the liquidity here, the stops out. Okay, we don't want this to reverse here back below the morning high. Okay, we're what, 50% into the gap? Do we fill the gap? Let's see if we can follow through here. UMAC is up today. UMAC. All right, let's take a look at UMAC. All right, watch for a liquidity grab here. UMAC looks like it's going to keep trending. Riot gets through 20. This could squeeze. Yep. Okay, Palantir is still going. Palantir is about to break out.
Let me say this is we get to see products.
Palantir is about to break out of recent range highs. Okay, don't chase. You always want to wait for a dip. Palantir tends to dip.
So whether it's automobile parts, whether it's the brain for automobiles, whether it's paints that people use, or ladders, or you name it. So it's interesting in that the consumer, from everything we see, is still strong at this point. They are still
Tesla ripping. Tesla on the move.
We've seen some products being moving less.
Okay, looks like we're going to go again.
But overall, our business is up. Our volume is strong year over year. It's up by,
S&P looks like it wants to go.
so far, we have not seen
If it gets through this area, watch it.
some people claim that we were going to have with the economy.
Let's go to the 15-minute real quick.
Specific segments there is,
Okay, we're through that high.
but in other parts, it's moving really good.
Call wall 6,700. Call wall 6,700. Let's see if we take this higher.
Well, Brian, thanks for the question. I think we are within 4 to 6 weeks to be able to put the formal merger application in.
Hedging flow is still rising.
Process,
We're into this area. The dealers are short, signified by the red GEX. Markets are long.
we think that it's
See if we can blast this higher through the gap.
It really is. You know, we have we're one of the few
Oracle on the move. Oracle.
railway transportation system that can be seamless from one end to the other. How would you love it
Oracle
if
bounce for Frano.
United States of America, every time you flew, you have to stop in Chicago and change lanes.
Okay, Tesla is doing very well today. Tesla. NVIDIA starting to go. NVIDIA. Okay, what time is it? 10:30. All right. Tesla. Nice move on Tesla. Okay, I just rolled out Tesla. Hedging flows look good. Hedging flows look good. Looking for to fill this gap now. Okay, let's see if we fill the gap. Sorry. NVIDIA, looking good. NVDX. See if we can pop here. If we can pop NVIDIA. Nice, Mondo. Okay, more than New York Fangs are seeing short covering. Broadcom just got a pop. Snowflake. Meta starting to turn. I like buying dips. I like buying dips, selling the rips. Oracle. Okay, Oracle. Let's see what we're doing here. Okay, hedging flows, Charter, Costco. Costco, testing the lows again, Costco. Okay. Costco, I'm going to go ahead and close this position. Not working. Costco. Okay, Costco, I'm out. Okay, Costco. Costco's not working. So I got a credit for it. I basically just gave it back. Okay. Costco. S&P. S&P 500. Okay, futures are at the highs here. All right. Palantir. Palantir. Still going. Palantir looking good. Palantir. Where's my Palantir position? Palantir. Okay, Palantir is up. Let me see what I want to do here. Palantir. Got the 180s. 180s. Let me go ahead and take these off. 180s. Okay, 180s. I'm out of those. Palantir out of the 180s. Palantir. Let's see. I have some 190s too. 190s. Those are up a bit today. All right, so we'll keep an eye on this. Look for a retest of 190. If Palantir can manage a breakout. Okay, that looks good. Palantir. S&P. Let's keep an eye on Trace for you. Okay, we're starting to taper off. We got some resistance right in this area. Okay, let's see how far we can push this. Okay, a lot of zero-day overhead. Okay, all of these are positive gamma. That means the dealers are positive or bullish, have bullish positions. Markets are short below this level, below 60, looks like 66.90. Okay, resistance building right here. Okay, resistance for now. S&P, we're hitting resistance, right? Resistance in this area.
And Carvana, the online car buying platform, getting an upgrade on Wall Street. Jefferies
Come
analysts
on.
raising the stock to buy from hold and boosting their price target to 475 from 385. Analysts see the company continuing to deliver elevated growth and upside to consensus. They also say it's best positioned to benefit from a shift to digital in the massive $800 billion used car market. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trading tickers page. We got much more market action coming up. Stay tuned. You're watching Market Catalysts.
Okay. So, got a lot of resistance here. Let's see what happens. Any of these 99 percentile? No. None of these are 99.
Voice news disconnected.
Okay, let's look at open interest, net open interest. Okay, you can see it on net open interest too. Same on net open interest.
gelatin, used to have probiotic, green juice. I replaced it all with this Arma colostrum. You don't know what colostrum is, it is amazing. But it is a bioactive whole food. It has all the essential nutrients you need for your skin, your gut, energy, focus, mood, performance, your hair, like immune system, strength, and supports all of that. And the first thing I noticed was the energy and recovery that I had at workout. But if you want to try it, try Arma.com.
The digital life. It can get a little weird these days. That's why we built Resolut's all-in-one protection, so you're safe for every moment of it. With antivirus, identity, and privacy protection that always has your back.
Okay, we're gonna push through this area. Oh, that'd be so cool. Got a lot of covering.
US gasoline futures extend losses down 1.8%. US diesel futures extend losses down 0.6% off the back of the EIA storage report.
Okay, we're pushing up against we might get to 6,700. There we go. Follow it through. Nice little rally there.
Stick around because I'm going to tell you about an amazing offer just for our TV audience. Or if you really can't wait, scan the code on your screen now and check it out. Let me just tell you how great it is to have the flashlight. It's really like no other flashlight I've ever had. The one high-beam LED is bright, super bright. You can see it up to 2,000 meters away. It's built in lithium battery.
Okay, we're breaking out S&P continuation. Into the gap. Okay, we're back through the gap here. S&P. A little bit higher. Okay, the gap's up there.
Nasdaq 100 turns positive after a racing opening decline.
Nice rally here into the gap.
According to the Insider, Google cuts employees in its cloud division.
You're on mute. Why are you still talking? That's weird. Weird. Tesla. Okay, Tesla, very strong. There goes NVIDIA. NVIDIA, boom. NVIDIA going. I know Dollar, you love to trade NVIDIA. NVIDIA putting together so many deals. I can't imagine why it's still sitting here. NVIDIA with the deal making, just crazy. Yeah, Dollar is already ahead of me. Okay, Dollar, you're ahead of me. As always, if you trade NVIDIA, keep an eye on Dollar because he's more often than not going to be right. We don't always have winning trades every single trade, but more often than not, Dollar's right. So keep an eye on his NVIDIA trades. That's his go-to. Nice job, buddy. Thank you so much for your participation and your posts in the room. Very helpful. Palantir. Okay, I did sell some Palantir into strength. Palantir is probably going to start to dip now or consolidate at the highs. Merck, the pharma stocks. You only need a few of these trades to make your 500 a day. If you make 500 a day, that's on average, that's $10,000 a month. Why not focus on doing less, looking for more with less trading? Okay. If you got 20 positions open, it's going to be much harder to make that $500 a day unless you have very large positions. But for the average person that has a $50,000 portfolio and you're trying to get it to 100,000, if you got multiple positions open and they're different sectors, I mean, 90% of the time you would think that the sectors are not always going to be in line. So I find it's a lot easier if you like dollar. If you trade NVIDIA, for example, you trade 2 or 3 options, just one option, you make 2 points, 2 points on a stock. That's $100 on a 50 delta. All right. So if you do 5 and the stock moves $2, how easy is it for NVIDIA to move 2 points? Dollar can tell you it's pretty easy, right? We went from 184 to 187. So you'd have made $150 for one contract, 50 delta. So if you buy a 50 delta, you can make it $500 a day and you're done. You know, I don't know. It's just a strategy I employ. I do have a lot of open positions a lot of times, but I'll strive for that 50 delta call. A lot of the time, the S&P is starting to move here. Tesla's still pushing. NVIDIA still pushing. So NVIDIA, yeah, that's a profit. NVIDIA. I have November 190s on NVIDIA. Okay, November 190s. Reddit got whacked. Okay. Okay, let's look at Trace and see what they're doing here. All right, so resistance. We know that there's resistance right here. Okay. So that's net OI. Let's go to GEX. All right, these positions are pretty much building, right? 0 day and non-0 day. Okay, let's go to Hero. I don't know why this has to be done manually.
All these million jobs that could be great contributors to our economy that won't unless we do something. That's probably the biggest cause.
Something, a setting or something that I'm not taking into consideration. All right, so puts and calls both getting sold. All right, total hedging flows. Basket of S&P equities looks okay. S&P spiders pulling back a bit. NASDAQ looks more, has more strength there. IWM looking for a follow through. Qs, keep an eye on the Qs. All right, let's go take a look at the New York FANG components. This should be fine, New York FANG. Okay, we're sitting on the 21-day. RSI is drifting lower. Okay, so I would be taking this opportunity to reduce my risk into strength. Focus on certain names like NVIDIA. This one's blasting higher, NVIDIA. NVIDIA had a good day yesterday, right? NVIDIA. Good day yesterday. Look at the volume.
Well, we have trends programs. We're starting to work with charity companies to spin up trade schools. We need to do a lot more on permitting, so the company has to go in, not the national level, local and state level. We have a lot of progress to make there, and we need to invest as a company in productivity for our essential workers. I want my factory workers to catch up and pass my white collar workers in productivity. That means we got to get AI tools, and that's going to cost more.
Okay, NVIDIA, check that volume. Look at the daily volume here. That's crazy. That's institutions. And what's the stock doing? It's breaking out. Okay, it's breaking out of a 8-week, 9-week base. NVIDIA, 8-week base. NVIDIA.
Jim, is because you keep it real. And you have to reel with this number. $2 billion net tariff impact this year. How does that make you feel as a CEO of a company like Ford? I mean, it's frustrating because we're the most auto company.
Let's see if we can keep this going. Keep this rally going. All we need is Microsoft and Apple to pop now. Okay, Broadcom turning up. I did take Costco off, by the way. Costco's not working. So I took the credit spread off. Let's see. Costco. Let me just notate that. Costco. It's probably going to bounce, but I have one less position for me to manage. Okay, so yeah, it's pretty much break even. break even on Costco. Took it off. Just feels like this could drop again and head down to this level over here on the left, Costco. Okay, so if it gets down to this level, then it starts to bounce. I'll do this again. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. First day of October. I'm sure the fall weather is kicking in up north, Jersey and New York State. I love the Jim. You're in New York State, right, Jim? Love apple picking up there with the family when we're young. The kids were younger. That was a lot of fun. Pumpkins, going on hay rides and stuff. That was so much fun. So much fun. I miss that. I really do. I just don't miss the taxes. Taxes are ridiculous. Taxes are so expensive. It's like another mortgage. You're like paying two mortgages basically in New Jersey. You know, you got a $750,000 house. You're paying $20,000 in taxes. $25,000 in taxes. It's crazy. In the nicer areas, I mean, you could live a little bit more to the west out near Sparta, and even Sparta got expensive, you know, because everybody from closer to Fort Lee moved out towards Sparta, Mountain Lakes in that area. What is he talking about? I'm just rambling. Watching, what was I looking at there? Oh, the fall, October 1st. Hope everyone's having a good day. All right, Tesla's starting to flag now. Tesla. Okay, Planet Labs. Josh Brown mentioned this one yesterday. I really like what he was talking about. I like the stock, the company. Okay, what is UMAC doing? UMAC. Okay, UMAC Doji for now. UMAC Doji on the daily. Okay, a little dip right there. Okay, do I still have my UMAC? Yeah, I do. Okay, I still have shares in UMAC. Looking for that to follow through. UMAC. Okay, NVIDIA pushing. Okay, let's keep an eye on NVIDIA. Sorry about that, NVIDIA. NVIDIA, nice little rally on NVIDIA. Let's look at hedge flows. Trace. Okay, we still got a lot of resistance overhead, so I don't see us getting through this area. 6,700 if we're lucky. Hedging flows turning back down though. Still a lot of resistance up here. So if you're trying to buy the high of the day, you're basically buying the high of the day. That's what I'm getting at. You're at resistance right here. Okay. NVIDIA. Okay, let me take a 2-minute break. I'll be right back.
Is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
It's time now to go inside out on Constellation Energy and the rest of the group hoping to power the AI boom. Joining us now is Ivana Delevska, who is the founder and CIO of Sphere Investments. Thank you so much for joining us. And you're covering basically everything right now, as we were laughing offline, that's hot in the market. I mean, cybersecurity and also nuclear, what's going to power all this AI boom. So let's start with Constellation Energy. How are you looking at that name right now?
again, to step back, we believe that we're going through a new wave of AI investments. The first wave with NVIDIA Hopper infrastructure was going into existing data centers. The new wave requires brand new data centers. And with that comes incremental power generation capacity. With that comes incremental infrastructure and networking equipment. So we're really looking to capitalize on that trend. And this is where Constellation fits very well in the portfolio. They're the leader on the nuclear side. They operate the largest nuclear fleet in the United States.
And obviously it's got a tailwind from these big corporates as far as, you know, the tie-ups and partnerships it's got with some of the names out of Silicon Valley. I mean, no doubt that helps.
That's right. So we believe on the quarterly call, the management indicated that they expect 2 more deals to be announced into year end. We've already seen the announcements from the companies themselves that are building. So we are looking forward to these power agreements being announced as we get into the fourth quarter. So that's really the catalyst here for the stock that we expect will play out in the next 3 to 6 months.
Okay, so you believe that there is room for more upside there for Constellation Energy, and no doubt this is, you know, an entire ecosystem. I mean, obviously you've got the hyperscalers, then you've got the infrastructure that's needed, and also the energy providers to supply the power, but then they need parts as well. So where else are you looking along the sort of supply chain here?
So we really like networking as well. In addition to power gen, the networking is where a lot of the performance improvement is going to come from. So this is why these companies are very important for the next wave of AI investments. Companies like Credo, Astera Labs, Arista Networks would be some of the leaders in that space, but we see upside for NVIDIA as well. They're a new entrant in that space with their Mellanox acquisition in 2000. Now they may have the largest networking business under their belt, given the significant investment. So I would say, if I look broadly, networking, power gen, and lastly cybersecurity would be the top areas right now that not only generate upside but also good risk reward.
All right, S&P 500. Okay, looks like we're going to go again.
Right, okay. And look, cybersecurity has always also been a very popular sort of theme to play right now because of the fact that we have the AI demand.
Got buy order blocks here, looking for a push back up to the highs.
They're in the IT budgets as far as the commitments are. I mean, it's not negotiable, optional now to have cybersecurity. So, I mean, it's understandable.
Okay, 5, 15, 30, 60 minute are all on buy signals. Tick cumulative is green. Tick is green. Looking for S&P to pop a bit more. Okay. We do have overhead resistance though up against this area. 6690, 6695, 6700. Okay, what's that up there?
Companies like Zscaler will benefit on the securing the new applications coming to market. Then we also like Rubrik. They are a recent IPO. The stock has stalled out a little bit here, but they're a core play on the data side, which I think is going to be critical. How you process data and how you narrow
Okay,
down
looking for a
data
little pop.
is going to be really critical.
We're hanging out at 6680.
Okay, so this is a real investment theme. I mean, I heard a quote the other day, for every dollar that's spent on AI, you need the infrastructure, you need the ecosystem, and that could amount to $3-4. So if you perhaps missed out on the NVIDIAs of the world, or you're struggling to pick the winners or losers as far as some of the hyperscalers are concerned, you go picks and shovels, look at energy, look at other parts. Is that sort of you're getting at as far as the spectrum of companies that you look at right now in this AI trade?
Yeah, absolutely, Sam. So we try to spot investments before they become mainstream. So we were very early on the NVIDIA side. We were very early on the AI, the first wave of infrastructure. We think in the second wave, especially
Palantir is still going.
CapEx numbers are getting, it's very important to focus on the risk side as well. So if you look at the networking companies, for example, they're not investing billions of dollars. They're investing incremental R&D dollars and getting very good returns. So we see very little risk there. Similarly, in the cybersecurity space, these companies are not spending $100-200 billion to come up with a new product. They can come up with new products pretty inexpensively. So the returns that they're getting are going to be pretty significant.
And the demand is there.
Okay, Palantir still pushing.
It's been important for some of these companies to also align themselves with US policy, which no doubt has
Okay, let's see what we're going to get going here.
absolute pleasure. Thank you so much.
S&P looking for a push higher.
That is Ivana Delavesto, who is
A lot of stocks pushing higher. We've got, let's see, let's look at tally here. We have, 216 stocks advancing. I would think it would be more than that. We got 5-to-1 up volume on the diamonds, 2-to-1 up volume on the IWM small caps, 3-to-1 on the Qs, 2-to-1 on the SPY, 3-to-1 on NASDAQ Composite, 2-to-1 on the New York Stock Exchange. The Qs, I would expect to see more, but we're only 50 out of 100 are advancing. Now let's see if we can lift here, S&P.
And then against it, because this is a high price stock and it's got a high beta, it moves quite a bit. I want to protect that and make it risk defined. We're going to buy the 310 strike put. So a short $10 wide neutral to bullish put vertical. We're going to collect roughly about a 270 credit, maybe a little
Okay,
bit more than
AstraZeneca.
that.
Still, the pharma is having a great day. Pharma. Merck. Let's see what Merck is doing. Merck. Yeah, Merck's still going. Look at Merck. Pharma. It's a really good bet. Pharma's going to follow through.
And you have a higher probability of success. That's why you've got more risk than you do reward, because you've got a probability of nearly 70% that short 320 strike is going to be out of the money at expiration, which is what you want. You want this to go out worthless and the stock to remain above 320.
Okay, and another name in this space, which Ivana highlighted, is GE Vernova. You've got an example trade that looks bullish for this one. Talk us through it.
Yeah, short term again in this one, but maybe a little bit more aggressive on that pullback. It did get downgraded.
J&J, AstraZeneca,
up over 80% so far this
REGN,
I looked at an unbalanced or broken wing call butter.
Amgen, Vertex,
type of trade going out to October 17th, 16 days to
BMY.
expiration. We're going to buy one of the slightly in the money 600 strike calls. Then we're going to sell two of the 620 strike calls, and then wrap it all up and buy one of the 625 strike calls. So in essence, the strategy.
Are you hungry too, Missy? Are you hungry, my little kitty cat? You're so sweet. You're such a sweet kitty cat. There you go.
So that's your risk, $700 per spread. It takes your
There you go.
even up to 607 over the next 2.5 weeks.
Okay, nice little push. Let's see if we can't push a bit more. Merck looking good. The pharmaceutical stocks are killing it.
You can offset some of the costs. You can still take that bullish stance, limit some of your risks on this one. But you have the potential to make $1,300 if it goes and settles around 620. But anything above that break even of 607 is going to be profitability on this trade.
Okay, Tom White, a good look at Constellation Energy and also GE Vernova. They're an example trade for both of those. Really appreciate your time today. All right, that's going to do it for us. Thank you so much for joining me today on Morning Trade Live. I'm Sam Bartis. Please download the Schwab Network app available in the Apple App Store and tune in 24/7 here on schwabnetwork.com. Trading 360 with Marley Caden is coming up next. I'll catch you later on Market on Close.
Okay, enough of you.
Also, you'll have that Stephen Myron that governorship come up again.
S&P climbing.
Additional changes, but at least it seems through the October and the December.
All right, pushing a bit more. Can we get back up to 66.90 maybe? I don't know. I don't think we're going to get through this area. We're seeing some profit taking. Some of these positions are coming off. You see these wicks in here above 66, above 66.85. You see these wicks? Those are trades that have closed. If I scroll back, you can see them closing. See them close? All right, so hedging flows turning back up. Maybe we get something going here. We got 66.90 as a 90 percentile. That's not enough to like completely slow things down. We'd rather see that 99% to anticipate that this is going to just smack things down. We could run up a bit more. You see that 6,700 level? You see how the wick is developed there? That was a bigger position. See it right there? That was 100. No, it was 10 million before. Now it's they closed that position at 6,700. They were short. Okay, so they're monetizing these puts. Palantir's still going. Palantir's still lifting. S&P, trying to go a bit more.
Yeah, I mean, the problem with ADP is always that it's not very good on a month-to-month basis, but when you take a step back and you use 3-month averages compared to the BLS, along with the BLS revisions, and then even 1-year averages, it's a much better indicator. It's why I'm not very concerned about not having
S&P, come on, let's go some more. S&P.
you lose contact. Now, ADP, of course, really benchmarked its numbers this year, so that caused a downward.
Come on, a little bit more. Let's fill this gap. Let's fill the gap.
When it comes to the jobs report, you saw what happened to the bond market, a big rally there, as well as in the Fed funds, where now there's a lot more confidence in an October cut and a December cut as well. And they're working on a third cut in January or March as well. So all of this is telling the market that the Fed is going to be more concerned about jobs, or increasingly concerned about jobs.
It's really nice outside. Very nice fall day. Can't believe it's almost almost Halloween again. Oracle is a nice drive higher. Congrats on Oracle. S&P's on the move here. S&P's starting to go. Okay, can we stretch our legs a little bit more? We're on a buy signal, 5, 15, 30, 60-minute charts. Tick cumulative is green. I would venture to say breadth is probably bullish. Let's see what breadth looks like to me. I think it was January, right? I was talking about this low here on 707 or so. We were talking about how this was looking kind of iffy if they didn't come up with some sort of agreement with the president. I'm pretty sure it was Lori from Canada. And now it's starting to move above those levels. So this looks good. Looks good for pharma. Okay, you had a second chance to take your position off at the high. Okay, Oracle. That was a nice little short covering rally there. Let's see how far they go with this. Merck is still going. Check out Merck. Check Merck out. Let's see. Merck. Look at Merck. S&P. Okay, look at Merck. Check out that daily. I don't know why a party would be so adamant about giving people who are not here legally health care. You know, maybe there's some way to do health care and be helpful. You know, I don't know. It's a really difficult thing to pay health care. I mean, a lot of people don't even have health care, you know, since Obamacare came in. They dropped health care altogether and they pay out of pocket. I know my brother-in-law does that, you know, because it's so expensive. Used to be back in the, I want to say the 90s, before Obamacare, I would pay 80%. They would pay 80%. I'd pay 20%. And then there was a small deductible. All right. There might have been like $1,000, $1,500 deductible for a family of 3 people. When Obamacare kicked in, all of a sudden the deductibles went to like $6,000 per person. You know, I've since stopped looking at it, but I don't know. Healthcare insurance is it's a bailiwick for a lot of people. Anyway, I didn't mean to get on I hope that didn't come across as a political rant. I just find it weird to fight for something like that. You know, you got more than 60% of the people in these states wanting the opposite. Okay, Merck is trying to push higher. Very choppy up here. And you know what it feels like? It feels like the markets, we're seeing some distribution at the high right here. Okay, we hit the high, we pull back. We hit the high, we pull back. Do we put in a series of lower highs? Let's see. Let's see if we do this. We got a sell order block right there. Okay, so look for a move back down to 66.80. We got to keep an eye on Trace. I didn't mean to bring up a political idea. It's just the whole idea of blaming each other. Just makes no sense. That's why I hate politics. I would never want to be a politician. Especially these days, people get shot for stating their opinion. Anyway, I hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. We had a nice little rally off the low when hedging flows turned abruptly at 10 o'clock, giving you an opportunity to buy the dip. If you missed the run-up, 6,700s were pretty popular. Okay. I'm expecting that see all of these stacked orders overhead? That purple? We're not going to get through 6,700. There's too much resistance overhead. Too many shorts. Unless something happens to push us through 6,700 and all these guys here cover their positions. Okay, all of this purple right here. If we push up through, for whatever reason, we just rip right through 6,700 and they have to cover or close their positions, the dealers will close their positions and we can push up that 6750 we saw earlier. Okay, you see that 6750? There's a big one up there at 6750, starting to build. 10 million now. These are pretty big though. These are still pretty significant. These are 25, 29 million. You see that? See the size of these levels? Okay, 29 million, 25 million, 15 million. And gamma exposure for the dealers, so they have an incentive to keep it below 6,700. Leon Cooperman. I like Leon Cooperman. I people like that. Art Cashin, super nice people, not political in what they talk about. Just talk about the markets. Are you buying at fair value? Are you getting a discount to fair value? What's good? Trends. Even Dan Ives. Dan Ives is all over tech, of course, but love these guys. I mean, they're not political. They just state the facts, right? I'd love to hear more of that from CNBC and less from the political side. S&P 500 still hanging out at the highs, giving you an opportunity to exit if you haven't done so. Honeywell with a good close, might squeeze, but often fades. Okay, so let's take a look at Honeywell. Honeywell conglomerate, right? They do mostly engines, right? Honeywell, yeah, nice turn. I was talking about yesterday that if we started to see a trend into October, November, December, okay, the last quarter of the year tends to be positive. We did expect to see a September that was negative. You can see the third line down, August 16th through September 30th, never materialized. So the statistics isn't infallible, but it's definitely something to understand. If you're going to put risk on the table, okay, what are my risks, right? You got to just write them down. Write down your risk. Now, the risk to expecting a pullback was the counter risk, which was, option volumes dictated that we weren't going to pull back. Through all of this area, we saw the 6,700 call wall build up. Okay, the S&P just kept moving. So while we were looking for a move lower in the S&P 500 during the August 16th to September 30th period, we kept seeing the call wall shifting higher. So what does that mean, Vinny? It means, okay, we have statistics. Sometimes vacations and people taking vacations has an impact, and we see selling or profit taking. And then people come back after Labor Day, after September 30th, after school starts and they start trading again. But the counter to that was that we kept seeing options. If you can imagine a stack of options that just keeps puts and calls that keep moving up, 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 and don't see any kind of measurable selling of those options or moving lower, so that the call wall shifts from moving up over the quarters, over the months expirations, to shifting to downward adjustments. So if we see the 6,700 call wall start to drop to 6,650, 6,600, then that would be the signal, in addition to junk bonds, that we're probably going to see a top. Okay. Now, junk bonds gap down today. That's kind of weird. Okay. We got some unusual activity going on here. So with this in mind, what I'm looking at, junk bonds just dropped. So these people who will invest in junk bonds are showing us a signal, an early signal. The 50-day is right there. If we lose the 50-day, I think 6,700 is going to be tops for the week, at least in the short term. That's didn't realize that was going to be the case. Okay, the number of stocks trading above the 50-day. So you have the September, August through September period. Now we've got the fourth quarter, which tends to be very strong. The fact that we didn't have a pullback during September, August, September, people are now looking to October. And if you've been reading the Gamma updates, Brent's been... Okay, yesterday I talked about this a lot. The remove of the JP Morgan positions has removed a lot of downside protection. That positive Gamma, you can see where the 6,500 strike is building. Lightly Gamma, positive at 6,500. 6,600 GEX, while positive, is still less stable than above 6,600. So we want to stay above 6,600. Okay, so we're up near 6,700. The JP Morgan collar is up at 7,000. Yeah, 50-day. AMD, 50-day. What are we doing? AMD? AMD is on the move. Okay, AMD hit the high. Okay, PL, Planet Labs, follow through. Planet Labs follow through day. Planet Lab, what the hell? Planet Labs. Planet Labs with follow through day. PL, that's taken off to the upside right here. Okay, Planet Labs, nice little rally. PL. Okay, let's look at Planet Labs, PL. Planet Labs. Okay, earnings growth 62%, revenue growth 20%. Now they missed. They beat the low expectations, but missed the high. Okay. Leading provider of global daily satellite imagery and global geospatial solutions. Okay, we'll keep banging up against this level, so keep an eye on Planet Labs. That looks good. S&P 500. What happened here? I hate when this happens. Okay. Okay, if we pop above this level, we're going to take out the highs. Let's keep an eye on Trace as well. Okay, obviously we're above 6,600, so that's not a concern. So 6,600 Trace. Okay, we're continuing to move into this zone over here on the left. Okay, let's turn off 0-day. Okay, some of these positions are coming off. You can see that the short at 6,700 is coming off. They're taking positions off. Okay, so it looks like they're getting scared. Looks like these shorts overhead are getting scared. Purple means the dealers are long, which means Everyone else is short at 6,700. They're selling premium up there. So as we move up, they close their positions that they sold because it's not working, kind of like what happened to me on Costco today. Okay, so the same thing that's happening on the upside to shorts happened to me on Costco today. Costco. All right, so let's take a look at that. So the same thing that's happening at the highs, these shorts are having to close their positions that they sold. All right, you can see what's happening with me. We pulled back. Yesterday it looked pretty good, so this might still work. But I took it off. Took it off on a break even. Okay, so no win, no loss. I just gave the credit back. Costco, same idea. Okay, so I had to cover my position because I didn't want to go into the red. That's what's happening at the highs right now. So these people are having to cover because we're moving higher. So if we do blast through this area, that'd be kind of interesting. Wow, they're pushing this. They're pushing it. Let's see how far they push this. Okay, market's on the move. Okay, market's on the move here. S&P. Okay, so bulls are thumbing their nose. Okay, breaking out. Okay, most stocks are looking pretty strong. Okay, we had a nice pop in NVIDIA that pulled back a little bit. Broadcom pushing back up.
Adults should be doing a couple of hours of cardio at least every week, and they should be doing a couple of days of strength training.
Tesla, nice push on Tesla. There goes the S&P.
Not at all. So the way that we're thinking, for example, about AI is that it creates a personal experience with your instructor.
Okay, we just took out some stops up here, so I'm sure there's probably some liquidity people that have stops up here. Okay, we did have a higher high up here. Okay, so we have this level. That was yesterday's run up.
Sounds like you think pricing, the backdrop for pricing is pretty constructive.
Yeah, what we're focused on is value, right? We know everyone is considering how they spend their dollars these days, but if you're going to invest in something, invest in yourself and your well-being. And when we bring together the
Nice pop here.
both cardio and strength training in the way that we are, and we feel like the value is
Futures trading at the highs. 5, 15, 30, 60-minute are all on buy signals. Up volume looks good. Tick cumulative looks good. Bullish. Palantir starting its morning pattern. Hits the highs, dips during the day. So watch Palantir. Okay, big rip in the markets right here. Okay, big rip in the markets. Here we go. Woo, you hear that? That's flow. That's bullish flow. I'm long right here. You see this?
Yeah.
I bought here. Okay. At $2, it's at 330 now. Those options. Okay, nice breakout. S&P.
Well, on a 1 year and a 2 year, you're beating the S&P, which is interesting. That we should probably mention that. The other is for a company that really was so vertical, right, from the manufacturing to the
Wow, that was a nice move there. Okay, let me put something on for you for lunch. You gonna eat that for lunch? Okay, let me make you lunch, dude. I'll be back. I'll give me 5 minutes. I'll be right back. Nice rally here to sell into.
State-of-the-art software powered by AI. It's those amazing human coaches that we have, and it's investing in our community. We got to get that right. Everything else, we don't need to own that. We don't need to be the best in the world at payroll. We just need to be able to pay people, but we need to be able to deliver the best experiences in our magic formula. What's your biggest competitor? Is it classes? I would say our biggest competitor is probably the couch. Right? I mean, if you think about it, there is really nobody who does what we do, who brings it all together in the way that we do. But getting people off the couch and making that first step to start investing in themselves, that's the biggest challenge. It always is with exercise. I remember in the early days of the company, aspirationally, the idea was that you would take out gym memberships. Right? We feel differently about that now. Our focus is on getting people active wherever and however they like. So, for example, we launched an app called Strength Plus that you can take with you to the gym. We also announced today the launch of a whole new line of equipment, the Peloton Pro line, that's actually designed for more gym-like environments. So, for example, hotel gyms, apartment buildings. These are hardened versions of equipment that are designed for multiple users in a gym location. Wherever you want to exercise, we want to be there for you. I'm really into Pilates classes. We've got great Pilates classes taught by a number of our instructors. So please, take more of them with us. Thanks for being one of our members. What is Peter, now that we've all the time to have the time to reflect, post-pandemic, what is the total addressable market for Peloton? Because I feel like that's where expectations just got out of control, 2020. So the way I would look at this is, first of all, in our home country of the United States, what's the population of people who should be exercising a couple days a week for cardio and should be doing those couple of days a week of strength training? That's basically every adult. So we look at the audience of people who have the ability to pay a subscription on a monthly basis and can afford equipment that is an investment in themselves over their lifetime. It's certainly many, many multiples of the number of members that we have today. I don't want to venture exactly what the number is, but then let's expand the aperture a bit and talk about some of the other things that we've been doing. For example, we just bought a company called Breathwork, which is focused on teaching people how to breathe right. It turns out that can make a big difference in stress, anxiety, depression. It can improve a metric that's called heart rate variability. Every person should be investing in that. Now we're bundling that into the Peloton subscription for our existing members, effective today, but that's also available for anyone. So it's another way to become part of the Peloton community. Let's open the aperture more. I started with the United States, but as we look around the world, Peloton's in just 6 countries. Most of our revenues come from the United States, so there's a lot of international growth opportunity ahead of us as well. I guess I need an AI personal trainer. I haven't been able to look into it regularly. Coming on and sharing the story and the news. Sarah and Carl, my pleasure. Peter Stern, CEO of Peloton. As we're talking, we're getting GM sales. For that, let's turn back to Bill DeVoe. Hey, Bill. Carl, for the third quarter, General Motors sales in the United States were up 7.7%. That is roughly in line with expectations. The big surge happened with EVs. Not a surprise here. This is the expectation for all automakers. They basically doubled. In Q3 of this year, this is Q3 last year, up 107% for electric vehicles, while combustion engine vehicles up just 2.6%. Year over year, again, GM up 7.7%.
Yeah, Merck. This is going to be a multi-day story with these pharmaceutical companies, right? Merck. Look at this rally in Merck. Buy order blocks, buy order blocks. Big breakout on the S&P right here. S&P, big breakout. Nice. Did you guys get 6,700 yet? Let's see, S&P 500. 6,700. Okay, let's see if we can get 6,700. Sorry. We're getting close. Getting close. There's 6,700 up there. Look at this market. This is great. This is great stuff. Oh my gosh, look at this market. Woohoo! What is going on with that? I got some kind of interference in my headset. I think the cable, maybe. I need to replace the cable. Okay, there it goes. All right, so I just shook that up a little bit. All right, so Merck, check out these pharmaceutical stocks. All right, Merck, huge moves, humongous moves. Merck, J&J, not so much. AstraZeneca, these coming off the lows, blasting out of a cannon here. AstraZeneca, Bristol Myers, Pfizer, Gilead, not so much. So those look good. Those look really good. Here is Pfizer, Bristol Myers, AstraZeneca, Merck. Look at these moves. It's crazy. You know, a lot of people have stayed away from these pharmaceuticals because of President Trump's stance on expensive pharmaceuticals. So they've come to some agreements, I guess, to some of their pharmaceutical lines being offered at lower cost. So that's wonderful. All right, so that's working really good. All right, big move today. Big move in the market. Okay, people were looking for government shutdown to be a negative. Turns out it's a positive. We were talking about this yesterday. You go back to the last one that I saw was Ford, President Ford. Then you had Carter. Carter had 2. Reagan had like 4 or something like that. Then you had who was after Reagan? Bush Sr. And then Clinton. And then Bush Jr. Then Obama. And even Biden. They had some slowdowns there. And yet the markets continue to make new highs. So what's the moral of the story? Price action. Price action. And what are options doing? Like I was just saying a few minutes ago before I stepped out. Call wall continues to move higher. Okay. Call wall continues to move higher. Okay. So you can see here, call wall's at 6,700. The JP Morgan collar is now at 7,000. The short collar strike. Okay. They sell some calls to buy vertical puts, or they buy vertical puts and sell calls to finance it. Wow. Wow. What a market. What a day. I'd like to close everything and just go to the park. Okay. Market's still going. Core Scientific off a little bit. Merck. Monster move in Merck. I've been sitting on Merck calls forever. Seems like a couple of months. What do I have? I have the September 26, 90 call. I have the September 6, 90 call, Merck. Those are leaps, obviously. And I'm going to do just fine. If I'm not mistaken, Rick got a lot of people started on what he liked to do. I miss the guy. Really miss him. Miss you too, Dr. Frank, if you're listening. Hope everything's okay. Rick used to talk about leaps all the time, you know. One other thing that Rick used to talk about a lot was his slow-mo trade. Okay, his slow-mo trade is a good way to look at the markets, especially if you're a swing trader time frame or an investor. Rick would look at he would look at the 60-minute chart and trade around those signals. Okay, so if you go back years and years and years, he was following this for like 5 years, and the majority of trades worked well. The win percentage was like 85%, I believe he said. Anytime this moves above the green teal line, I'll zoom into this in a minute. You want to be long, and you take like 3 or 4 months out, a 40 delta. Okay, so here is the same chart zoomed out, and you can see that once we move above the ribbon back here at 542, that was back in April. Okay, we continue to take these trades. Dip to the teal colored line, bounce. Dip below, back above. You want to be long. All right, S&P is still going here. All right, I'm completely out of S&P, so enjoy the ride. Okay, I'll get back in if we get any kind of dip. Okay, look at the hedging flows. All right, so they're taking 6,700 to the bank. Beautiful. Lulu looking better. Lulu. Lulu, I have 175, 185 call verticals. Lulu. Okay, let's take a look at Lulu. I have 175, 185 call verticals. Just grinding off the low. It's currently a positive trade. 175, 185. So I'm looking for it to get back to the 50-day. That would be about 87 or so? 189. Okay, so I got 175, 185 call verticals. January expiration on Lulu. Still a valid trade. Just buy dips intraday. NVIDIA, what are you doing, NVIDIA? NVIDIA popped to the high. All right, there goes Broadcom. Broadcom turning back up. Broadcom. Okay, I have a Iron Condor on Broadcom. Broadcom. Okay, we're on the move. Congratulations on your 6700s, Mondo, if you're still in them. I think you probably are. Okay, Broadcom. Broadcom. Oh. Sorry about that. Okay, Broadcom. All right, so I was telling you this morning, we got these wicks, 4 wicks out of the last 5 trading days. I have an Iron Condor, $1,500 trade. Okay, so this is something that I can just sit, and if I'm at work, I have a 9 to 5, or maybe you work 50 hours a week, and you only have a chance to look at your positions in the morning. You know, maybe when you're having coffee and people are chatting around the water cooler, you look at your phone, everything looks fine. You know, you just sit on the trade. As long as this moves higher to slightly sideways or even a little bit lower, this should be fine. So that's a $1,500 trade. You do one of those a week, that's $4,000 a month, right? $6,000 a month. One trade every week. One trade every week. So you take a credit spread. All right, some of the other ones I have on right now, let me just go check those real quick. So you check it in the morning, you check it maybe at lunchtime when you're sitting having your lunch with your spouse or your significant other. And you're just checking it out, make sure everything's working. Okay, Charter Communications, I have another one, Charter. I closed Costco maybe a little bit too prematurely, but doesn't look right. So Costco looked like it could test this low over here on the left. So I didn't want to take the chance. I want to see this follow through a little bit more. So that wasn't a big position anyway, $700. I took it off. Basically, the $700 I received, I gave back. Not like being long or short calls or puts. where you have to constantly check your position for fear of losing. Okay, Micron, I got another trade on Micron. Okay. Okay, big move on Micron. Okay, I'm going to take the call side off of Micron. Let me do that right now. Call side, Micron. All right, create a, do I want to roll it? Let me take a look at Micron real quick before I make that decision. Do I have Micron on here? Yeah, I do. Okay, so let me open this up. Micron is where? Micron, it's right there. Pretty expensive vol. 78% risk reversal. All right, so let me just roll out. I'm going to roll it out. That's what I'll do. I'll roll out to a higher strike for a smaller debit. Rolling order. Let's see, buy 25. No, $110. Sorry. Okay, so I'll close that for profit. All right, so that's all you got to do. All right, so $550 credit. Profit rather. And I'm out of the puts now. I could sell the same week, October 31st, probably something a little closer, like the 20-day. Actually, you know what? Maybe I'll do, I won't do that right now. So selling premium is a good idea, especially if you are, you work a 9 to 5, or you have a very busy schedule. Maybe you're a mom taking care of the kids, you know, or maybe you have a career yourself, or whatever the situation is, man or female. I don't want to sound like a misogynist, but you know, if you're a very active person and you don't have time to like sit here and babysit an option trade, then sell premium. Let somebody else worry about it and sell it at a 20 delta where you have an 80% probability of a win. So we'll see. Control V. There you go. Now we're talking. Control V. All right, here's your tape at the bottom of the screen. I forgot to put that on. Okay, 6680, 6700. I think this is wrong. Okay, this is wrong. You see that 6680 support? I think he's talking 6640. Okay, let me just change that. Support 664. Support 664. Okay, that's right now. Okay, that's correct. Okay, I hope you guys are having a good day. It's been a great day for me, a lot better than I anticipated. But it just goes to show that whatever the media is scaring you into doing, you got to stop watching the media. You got to listen to it just to understand the flow of the news cycle. But paying attention to option volume, paying attention to where the options are located, which is one of the big pluses that we have in the trading room, is that a lot of people don't follow what's going on with options, and they scoff at Brett over at Spot Gamma. For the life of me, I can only attribute it to ignorance, right? And not being open-minded that maybe there's something bigger going on than what I learned in a you know, trader's book. You know, you read all these books and the markets tell you, I mean, they tell you certain things, you know, patterns and support, you know, the 200-day, the 50-day, what a bull flag looks like, blah, blah, blah. But not until you start paying attention to options and the way the institutions use them are you going to understand what the market's going to do. So one of the benefits we have is that we can follow the daily flow in the options. You know, where is resistance? Not something on a chart, but where are the options positions dominating? You know, you're looking at this trend if you had looked at this on Monday, I was surprised to see that the markets didn't pull back. Friday, we bounced on Thursday at 65, 69. The trend is still up until it's not. Okay, so in order for me to get bearish, I need to see this. I need to see like something like this, a big bearish candle and another big bearish candle, right? So we don't see that. We don't see that. We see a trend that continues, and price is telling us be bullish. Volume is telling you that's institutions, be bullish until something starts to change. Buy the dips. Junk bonds are the one caveat that I wasn't anticipating. We got this big gap down. I don't know what's going on there. Got some big selling yesterday, gap down today. We want to pay attention to junk bonds. Always pay attention to junk bonds. Just give my son a thumbs up. Apple's starting to bounce, so maybe something with Apple right here. Watch Apple. Okay, Apple starting to turn. Apple turning. ABCD pattern. ABCD pattern. Stop under B. Stop under B, which would be Apple. Stop under B would be 255. 255 plus or minus. Okay, let me just take what I'm talking about to the bank. Let me go Apple. All right, so I'll make sure. What is today? Today's Wednesday. Okay, let me take Apple. I'll go, instead of Friday's calls, I'm going to go ahead and take next week's calls, which will be October the 10th, right? So Apple, I'm going to take a 40 Delta. That's a 260. I'll just buy some 260s. Okay, 260s. I just bought some 260s. That's me buying Apple. That's me buying Apple. Okay, got fair value gaps. Got the buy order blocks. Bought October 10, 260 calls. And that's a dollar stop.
Carl, thank you very much. Welcome to the halftime report. I'm Scott Walker. Front and center this hour, the year's final stretch, the fourth quarter getting underway. We will discuss and debate the best strategies for your money with the investment committee. Joining me for the hour today, Joe Terranova, Liz Thomas, and Steve Weiss. We've got a nice turn in the markets.
There goes Apple. Okay, day trade for now. 50 cents or better. Maybe $1.
We got a 13.5% gain in the S&P 500 year to date. Nasdaq up 17, the Dow up 9.
Looking for at least $1 upside. So let's see. Here's Apple right here. Taking off to the upside. Let's see how far we can get. A breakout. Take out today's high. Okay, let's see. Today's high is over here. Okay, so our move back up to today's high would be up here. Apple, a move back up to today's high would be a pretty decent trade. 9 to 1, 10 to 1. Oh, wow, it's 12 o'clock already. Holy smokes.
Sometimes just the fact of calling for it causes it. But all these warnings that we've gotten about rebalancing at quarter end causing this big move out of equities and into bonds and so on and so forth just never really comes to fruition. So I don't know why we keep worrying about that. The government shutdown, on the other hand, is something that I think markets aren't necessarily going to welcome, but if you look over history, they've actually done pretty well through a lot of the shutdowns. There have been a few here and there that have been bumpy, but on average, returning somewhere between 2 and 3% in the 3 months following a shutdown. So even this isn't necessarily something to be that concerned about.
All right, Joe, earnings season is almost upon us. They're expected to be good again. the Fed is expected to keep cutting interest rates. So I hear everything that Liz said, and it all makes perfect sense about, some of the risk versus the reward. But what I just mentioned, earnings good and Fed rate cuts, and just maybe people chasing, maybe some cash on the sideline coming into the market.
Wapner is just like all day yesterday was like, really? Really? You don't think we're going to be moving lower? You don't, I know he's supposed to be the protagonist, I guess. I guess that's his job to be the protagonist. I just don't like it. I don't like it. Okay, Broadcom. Broadcom on the move.
Momentum just does not mean high beta names. Momentum means the Fin5. I've been talking about them ad nauseum. Well, over the last several days, they're not performing.
Broadcom is ripping.
It's not performing well. So I think that little turn within the market.
Didn't I buy calls yesterday in Broadcom? I think I did, right? Yeah, I did. Broadcom took calls yesterday. Those are 2026, June 2026.
Sales of single stocks in the last 2 weeks were the third largest of any 2-week period since 2008. It was driven by large caps.
Okay.
Clients sold 9 of 11 sectors led
Broadcom.
by financials, right? Joe points out a little bit of weakness of late. You had this
Broadcom moving back up into the range. So this is a perfect type of setup for an iron condor. Yeah, Bollinger Bands coming together. Note the Bollinger Bands are inside of my short strikes. So what does that mean? It means the likelihood is 95% probable that I'm going to stay, price action will stay inside of those Bollinger Bands by design as Bollinger Bands start to contract. All right, Bollinger Bands contain 95% of price action by design. They're based on volatility. If you've read John Bollinger's book, you know what I'm talking about. So we're moving back up to fair value, which is the 20-day moving average. Okay, so we're a little bit under fair value right now. So this trade is working out. This is another trade, $1,500 for the week. If this were to, just peter out this week, I just collect my cash and be on to the next trade.
Is that everybody seems to be on the same side of the boat. And when they're all on the same side of the boat wobbles. Sometimes it goes over.
I guess because yesterday I said the same thing on closing bell. We had gotten like 40 minutes through the program and through the 3 panelists at the top and 1 towards the bottom of the program. Everybody, no matter what their discipline was like, market's kind of hard to get in front of here. It's set up pretty well into the end of
Thank you, Grover. Appreciate it.
Raising their forecast for global equities the other day, right?
Okay, Google, Apple turning back up. Of course, Apple, we just took a long on Apple, looking for a follow through.
Exactly, in a more stable mode, maybe a try-hold because to balance it. But that is my concern. My other concern is that as we're going into the quarterly earnings, which is hit in earnest in about 2 weeks, we're going to really hear for the first time the impact of tariffs. And somebody's got to absorb them. We're hearing news that comes out saying, hey, Nike, big on tariffs, huge hit to them. So who's going to pay that?
Stop down here.
And if consumers pay it, the other point is that
Nike's up, by the way, almost 6%. So they can have whatever impact they want.
It's from such a low base with stocks.
Sure, but it's still up 6%. And many companies, we've long stated that
Okay, let me put this over
one of the
here.
greatest things about this country and these equity markets is we have the best companies in the world and we have the best CEOs in the world. And they figure it out. They figure out how to run
Wow, that's a hell of a day. Hell of a day. Been due for one of these.
Maybe they absorb a little there. Maybe they tell their
Charter.
you know what, you're going to
Okay.
have to eat some. They tell their importer, you're going to have to eat a little bit too. And then when you add the pie up, it's not
What's
so
CoreWeave doing? CoreWeave.
looks and tastes.
CoreWeave pulling back a little bit. Doji on the daily. CoreWeave. Okay, still basing up here. Building a base. CoreWeave at higher levels. Currently fading a bit. Planet Labs. I keep wanting to call this Planet Fitness, but Planet Labs looking good.
because of increase in grocery costs.
Planet Fitness, Planet Labs,
So that is
Broadcom, big move on Broadcom.
you know, I think you could be in for some express. Okay.
Apple still going. Apple going.
Maybe all of you have seen
Okay,
these
Apple
consumer
looking good.
finance names. They're in focus because many of them have not performed well. Sort of on the lines of what Weiss is talking about. And he's not the only one talking about it either.
Okay, let's look at. Okay, so these are starting to go away. You see this? See how they're going away? Yeah, these were much larger before. Okay, so it looks like we're going for 6,700 now. Caldwell. Amazon still pushing, looking good. Amazon.
CarMax talked about elevated loan losses in some areas of their loans. That stock is down 27% in a month. BTIG looks at all this today, especially the consumer finance picture, and they ask smoke or fire. Smoke or fire. And what it says potentially about where the consumer is and whether the market is simply too complacent because it's drunk on the idea of good earnings, Fed cuts, and AI overload.
So you mentioned before, maybe we need a bigger boat. Maybe we're ultimately going to just have another boat. And the challenge when I say maybe we're going to have another boat is the boat that we're going to leave is the boat that
Okay, so we can see that's a mixed picture at the moment. Healthcare is the strongest sector. Healthcare, the strongest sector. Lilly up 6%. Lilly up 6%. AbbVie up 3.6%. All the dark greens are more than 3%. Danaher, Pfizer, Amgen. I thought Danaher was automotive. Moderna, Weston, Waters Pharmaceutical, Agilent. These all look good. Pharmaceuticals definitely got the best here.
That's a problem. Look at the airlines and the way the airlines are trading the last several days. They're trading understanding that leisure travel is going to be more challenged in an environment where the economy is contracting further.
Look at restaurants over, not necessarily a week period, but restaurant stocks haven't traded that well.
There's a clear signal.
Quick service restaurants haven't traded all that well. My question is the market ignoring some alarm bells that are going off in the distance? They're not close enough yet for you to get too concerned about it. You had some bankruptcies. The credit markets are sort of awake, and people in credit are looking at that and saying, okay, I'm going to keep my eye on that. It's not, DEFCON 3, 2, or 1 yet, but we need to watch it.
I think the market is clearly understanding exactly what you're saying. Pull up a chart of Royal Caribbean. As I speak, you can see that stock is beginning to have a modest correction. I mentioned the airlines. You're seeing the strong correction there as well. So no,
the overall market
but the overall market is going to be somewhat impervious to that because you have a company that has a $4.5 trillion market cap in NVIDIA that's not reliant on the economy. You have other Mag 7 names like Apple, which appears to be like
Okay, we got a nice nice rally in the pharma. Okay, Apple's trying to push more.
Expression. Sometimes the economy is not the stock market. Sometimes the stock market is not the economy.
For you, Liz, which Deutsche Bank talks about today. For better or worse, NVIDIA continues to be a major market mover. I don't think anybody would be surprised by that comment. But how about this? NVIDIA's market cap, right, above $4.5 trillion. Yes.
Okay, between 12 and 1, I'm not really interested in making any trades. 12 and 1.
Every country's entire exchange except U.S., China, Japan, and India. Now, if you're on the right side of this market, if you're in those stocks, Liz, you're perfectly happy and you're feeling pretty good. Under the surface, things don't look that good.
Under the surface of tech companies?
Well, no, of other names.
Okay, I'm going to take 5 minutes. I'll be right back.
Which is positive right now.
sentiment will stay positive. And then there's sentiment of the consumers. And if you look at even just consumer sentiment measures, they have been under pressure this year. And you've got consumers on different ends of the spectrum. We're talking about consumer finance companies. You also have to distinguish between the quality of those borrowers. If we're worried about credit quality of those borrowers, there is a wide spectrum of borrowers in a lot of those companies. And it's going to matter. Their spending is going to matter. Their delinquencies are going to matter based on the quality that they're coming in with. With a labor market that remains relatively strong, save for perhaps some of the effects of a government shutdown, with a labor market that remains relatively strong, I think the consumer is in fine shape. There are always bankruptcies happening under the surface. There are always delinquencies that are sort of moving around under the surface. There is nothing out there yet that is screaming alarm bells. And to the point about the market not necessarily sniffing it out yet, you have to watch credit spreads. Credit spreads have not budged. In fact, they've gotten tighter over this entire period. Nothing in the market yet is telling us there's a problem here. And the last point I'll make is maybe some of the consumer finance companies are under pressure, but then how do you square that with the fact that private equity companies are under pressure as well? That's a completely different buyer, and that would be maybe a wealthier buyer. So they're both under pressure. I think that we're just at a point in the market where people are looking for opportunities that aren't the things that have led us to this point. So
By the way,
the rotation is underway, and I think will continue.
we got Mark Lasry on Closing Bell today, so we're going to talk to him about what's happening in credit. Whether there's reason to be concerned about some of the recent stories that have made people a little nervous in certain areas of the market. We talk about lending standards and things that happened when money was accessible. Weiss, part of the point of bringing up the Deutsche Bank note about NVIDIA is that you better hope that NVIDIA and these other names keep performing the way that investors think they will,
Right.
or you have a problem. As you look ahead into Q4, that's the ball game. If you have concerns about the economy, are you really going to get a big broadening area outside of large cap financials, very large cap industrials, and then these AI names?
I think you need to see the AI names hold their pole position in order. They don't have to go up, but you can see fundamental flaws in terms of their operating model, meaning disappointment and significant disappointments with them. And just can't be one of them. It's got to be multiple. If you recall, when Alphabet disappointed about a year ago, it was only then. The others continued to march upward. But they're still good. I still think they're going to do quite well because of their spending on AI and because remember, Meta comes out with a new meaningful product. It seems like every week. So they're leading the charge here. Alphabet has a great recovery. See now, they're innovating. They always innovated. Now they're really advertising.
They just saw the biggest quarterly gain in 20 years. Did Alphabet up 38% in the quarter. Now,
after lagging significantly, had a significant clearing event.
No doubt, but the day of the Eddie Q sell-off, which we sort of put as the line in the sand, right? He's in the courtroom. He says, first time ever, we've seen the share of search decline on an iOS. You're like, oh man, this is a problem. The stock performance from there, I think it surprised a lot of people. And that was probably a tremendous overreaction in the market that day. Maybe we overreacted about it that day. Farmer Jim sat over there and said, you guys are ridiculous. He stayed with it. The stock's up 38% in the quarter.
Okay. Apple, a little pullback there.
Because I own it. I'm surprised.
Okay. S&P. What's the S&P doing here? S&P. All right. We're just hanging out at this position right here.
On that day, fell to about 147, 148 early May. So it's been a dramatic rise. But I do think you had
Okay.
and leading up, earnings were okay.
That's fine.
Earnings reported, and the price action was somewhere around 190. But the stock really took off after you got that regulatory clearing moment. And I think from there,
Okay. This is time of day that you want to just chill. I'm talking to myself. You want to chill. I don't like to trade between 12 and 1-ish.
I think you're seeing dramatic rebuilding of position here in the month of September.
It was the only battleground stock in the Mag 7. Aside from Apple, which is always battleground because valuation.
I thought Tony Pasquarello of Goldman, as usual, makes an interesting observation in his recent commentary. Quote, he's talking about the NASDAQ. Price action on the long side suggested a lot is in the price. Talking about the NASDAQ, the biggest stocks in the market, raising plenty of debate on the viability of a fourth quarter seasonal rally. That will be hotly debated. Like, what is already in? The market susses out what's happening, right? The outlooks are so good that stocks have already priced, you would think.
Okay, Merck's still pushing.
So he raises that issue. Then how about this? The questions over a bubble in AI are going to persist no matter what. Since ChatGPT's launch at the end of 2022, the Mag 7 has soared from 7.1 trillion to 18.6 trillion in value. The 7 names now represent 33%.
Google at the highs.
Right? From 7 trillion to 18 trillion in value, right?
Yeah.
It's crazy for good reason.
Yeah.
You can see why. But should that raise any sort of flag to people in any way?
There are lots of warts in the market that aren't flagship. For example, NVIDIA essentially buying billion or whatever they're going to do, billion into OpenAI.
The circular nature of
exactly.
So, right, people have raised that issue too.
Doing the same thing. So this is in a market that weren't so inflated with optimism. Those would start to resonate a little bit, as would, to your point, the two bankruptcies in private company. Now, I've no doubt, know Mark Lassery well as you do. He's a great underwriter. He's a great risk manager. So I'm not worried about him. But there are so many tertiary and secondary, players that have come along, just building books of business for the fees. So the two bankruptcies, one was not small, auto parts manufacturer, $10 billion of private lending money they have there. The other one was a subprime lender in autos. So what they've done is they filled this gap that was vacated by the banks.
Okay, looks like a short from here.
Right,
S&P.
And you can't believe that they have the same risk management the banks had, and look the trouble they got into. So those are things. Right now, we're still in what I think is really a euphoric stage as it applies to Mag 7. We're seeing the others catch up. So I worry about it every day, but I haven't done anything.
Look at the power names.
Hedge flows collapsing here. Okay, volatility could pick up below 66.80.
Year to date, it has a 60 plus 60 times PE.
Apple pulling back a bit.
They say, yeah.
Microsoft trying to push higher.
It's already reflected in that valuation. So what more do you want? So they downgraded today to sector perform. Vertiv, record high today. That's Joe's 35 times it trades. It's up 33% year to date. Oklo, nuclear power player, up 421% year to date. They say they're hoping, at least there was a report today, they're hoping to launch at least one of their 3 planned U.S. nuclear reactors by mid-26. Constellation's up almost 50% year to date. How about this space?
Constellation up again today. Vistra up again today. I think that this is a well-known tailwind for the market. You have several thematic tailwinds that investors have congregated around for the course of 2025. And that's unknown. And the fundamentals there really are not going to change very much. I always say this, portfolios are like families. They're unique to the individual. So you have to say to yourself, okay, if I need to reshape my risk, and I hate when someone comes on and says, oh, we eliminate risk or we mitigate risk. That's nonsense. No one can do that. If you need to reshape risk, you ask yourself the question, where is the liquidity in the market if the market needs liquidity? And that exactly would be Mag 7. That would be the names that you're citing. So if you have an understanding of that, then you therefore know how to size your position accordingly. And say to yourself, if I look forward into 2026, despite really strong fundamentals, guess what? If the market needs liquidity, it's coming from the Mag 7, it's coming from your Vistras, it's coming from your Constellation Energy. Just be aware of that. Set your expectation. So doesn't mean get out.
That's not the only place it's going to come from. It's going to come broadly. Because as you correctly are pointing out, the AI trade is more than just the Mag 7.
it's, as you're pointing out, it is the energy plays.
What do
But you'll
energy?
sell what you have when you panic.
What do energy related names and like utilities? Do they typically trade at such a premium
Never.
to a market multiple?
Never. No, but what's, I'm sorry.
That's my point. It's a rhetorical question in
Yeah.
some respects. When you see that, some of these names that are Vertiv. at
Okay,
35
Broadcom continues to move. Broadcom.
25, Constellation at 32, and Vernova at 61 times.
Okay, so we got hedging flows dropping off. It doesn't mean we have to catapult lower, but it just does look like a short for now.
There's a premium that's being paid, and a lot of what's going on right now in portfolios, if you look the list, energy is somewhere around 3%.
Okay, Supermicro. I'm gonna add to this pretty soon.
So what's happening right now is you have managers who are saying, okay, in a portfolio, Scott, I don't need oil because the Trump administration is saying we're gonna keep our foot on the price of oil, right? I'm gonna
Yes.
replace my E&P exposure
Yes, Rob.
with utility exposure because of the growth that is evidenced right there. And that's a lot of what's happening right now in the financial services industry. You see the redeploying of capital.
All right, we're going to take a break because our halftime headliner is coming up next. The final stages of makeup are being applied as we speak. He is standing right off our set, and he is...
Okay, Supermicro looking pretty good.
It's called How to Make Money in Any Market. He joins us right here at Post 9 next.
Okay, those January 60 calls are looking really sweet. The 50s are doing even better, obviously. Supermicro looks good. Yeah, nice little rally. I'm saying Palantir's got an ABCD pattern. It's not drip. Sometimes Palantir will hit the highs of the day and just go move sideways, like it did yesterday. For the most part, it did dip, but it held the highs for the most part. Right. Let's take a look at Palantir. Palantir, software as a service. These are the first companies that make money from AI. All of these things that they're developing. Their ontology, as it's called. They're making money with AI. Okay. Ontology, the branch of metaphysics dealing with the nature of being, concepts and categories in a subject area or domain that shows their properties and relationships between them. So the second one is the major part of what Palantir is able to do, and with AI, it even more so. So they just continue to add contracts, customers, and people don't. Once they start using Palantir, from what I've read, they don't stop. They don't unsubscribe. They just they need the fix. What new about our ontology is that it's created automatically from large databases. That's probably a quote from what's his name?
as well as contractors who deal with the government, and then a number of other things, including the job numbers on Friday. At this point, the Senate does not seem likely to take another vote on the CRT.
So I believe Palantir is going to be a $500 stock in a couple of years, if not sooner.
Friday, and we'll continue to give you any updates as we give them, Scott.
Okay. Emily, thank you. That's Emily Wilkins on Capitol Hill. As you see, she said the magic number is 8. Apropos, because this is Jim Cramer's
Ontology sits on the top of digital data sets
in any market. Jim is here.
in the Palantir platform. I don't know. I like this company. A lot of people hate it for a lot of different reasons. Alex, what's his name? Alex Tharp or whatever. I don't know. Palantir, I really believe this is going to be a $500 stock. Just looking at what we talked about. Let's see. Palantir.
And they say, listen, I can keep paying up for these and up for these and up for these. And then out of nowhere, healthcare explodes.
Just looking at the CAGR alone for Palantir, okay? And its rule of 40 score.
Okay, so with pleasure is how you talked about the markets and stocks for all of these years, but you do pride yourself on being a teacher.
Q2 revenue growth accelerated 48% year over year. That's huge. That's freaking huge. Right? Exceeding the high end of their prior guidance by nearly 1,000 basis points. Give me a break. And this was the chart back then. Okay, we were trading right around 160. Okay, here we are at 185. Phenomenal quarter. AI leverage. Okay, so people who are using AI, building these big data centers like Meta, they have to have software running on it. And with the federal government, the military in particular, using these data sets, I don't see how you can't like this stock. You got to look past PE, in my opinion. S&P 500. Look at Broadcom. Look at Broadcom. Just shot out of a cannon. Broadcom shot out of a cannon. It had pulled back for like 3 weeks. Broadcom's back on the move. Looks good. Oh, Kramer's on. Yeah. They don't watch Mad Money. Nobody watches Mad Money. Okay, Snowflake breaking out. Snowflake, nice setup.
All right, Jim, first of all, congratulations. To your point, chapter 4.
Daily, squeeze, triggering, long.
Will tell you when to sell. As an investor,
Stop under.
Market structure has changed dramatically. What's the simplest way that you could do that?
What the simplest way you can tell it is that you take a look at what just goes down and down and down. Then you look at the balance sheet. I actually give, but I've never done the multiple stuff, but I've never done the balance sheet stuff. You take a look at the balance sheet. I mean, a lot of people can't read it, but you know what we got? We have chat, we have perplexity, we have Grok, and you can ask them to take a look at the balance sheet and tell you whether there's too much debt. People have to start doing that, and the people who just say, "Listen, you just only need to be in index funds," they don't realize that if you want to go look at Bausch Health, thank you for telling me how bad Bausch Health was. You can go in and say, "Is that balance sheet any good?" It'll tell you, "No, it's horrendous."
But the other thing that you focused on historically, as we've known each other, is that if you know more about the company, you're more comfortable owning it and actually buying more to increase your return in turbulent times in the market.
Yes. I remember my father sold boxes and bags for a living. We used to go to the Franklin Mills, this giant retail mall. And we would go on Saturday, and he says, "We're going to get in front of Gantos," which Goldman liked at the time. There would be no customers. We sat there in front of it for 5 hours. No one bought it.
All right. Wow.
Shorts I ever had.
Pretty impressive move, except for Netflix. Netflix is that near the lows. Meta.
And let me ask you this: has your view of what you think the "quote unquote" right
Snowflake.
should look like?
Snowflake looking good on the daily. Let's go take a look at a different view. Snowflake. Snowflake looks like it's going to bust out of this base. Like 4.5 weeks now. Snowflake. I have a position in Snowflake, but it's a fly. Call fly. Snowflake. Snowflake. Let me see.
Yes, if you want to own an Oklo, be my guest. You can have one of those after it's up 80 points. Only one? But, well, yes, on a 5-stock portfolio, but I also want index funds. And we look at the Trump funds, these new funds where you'll get $1,000.
Snowflake. Let me see.
So maybe you also buy 1 or 2 stocks for a baby. Because I got to tell you, individual stocks, whether it be FANG from 2013 or whether it be NVIDIA, they can change your life. I did a book signing yesterday at Barnes & Noble, and there were a couple people who were moved to tears because
Snowflake. I'm going to take a long here on Snowflake. Okay. Let me just check one thing. Snowflake. Right. Snowflake in here. Yeah, Snowflake's there. Where is it? Okay, Snowflake getting expensive. Snowflake risk reversal, 52%. That's okay. New York FANG's looking very bullish. Yeah. Remember that? That was a big deal in the 80s, right? Yeah. Big hair.
Make money in this market is to be a concentrated investor, right? You talk about diversification in here. How do you tell somebody to stay diversified in a market like this, where it's like, if you just owned those 10 stocks, you made a lot of money. If you were diversified, it was worked against you.
It's a trick of diversification. I say you can only be diversified among growth stocks. I have a list of sectors I say you can't buy because they're trading stocks. And that after you drop one.
Okay, Snowflake looks like it's going to break out. I'm going to buy some Snowflake here. Not at the high of the day, but I'm going to set up a position on Snowflake. I'm going to go out to, let's see, November. And looking at a vertical on Snowflake. 40 deltas are 250. 250 is up here. 240.
And they give you a good sense of how you can move your manufacturing around, maybe able to deal with the tariffs. And plus, I'm dealing with I always like to look at the third quarter.
240, 250.
The third quarter winners are insanely great today. Maybe there's just don't fight the tape, don't fight the Fed.
Yeah.
I love the show.
That's the way a lot of people are thinking. Hey, there's a place for you anytime you want it.
Thank you. And remember, when you guys mention ideas, people should now say, I'm going to do my research. I really like that. And there's plenty of ways to research that didn't exist when we got into
Okay, we're continuing to hang out in this area. Snowflake looks really good. Bollinger Band squeeze, also a very nice flat base.
The White House shared the text of the unprecedented security guarantee today on its website, but the order is dated Monday, the same day Israeli Prime Minister Benjamin Netanyahu visited the Oval Office and called Qatar's leader to apologize for a military strike last month. Activists on an international flotilla trying to break Israel's blockade and deliver symbolic aid to Gaza say they're preparing for interception. And it comes after they said Israeli vessels approached some of their boats and engaged in dangerous maneuvers. Israel did not comment. The more than 40 boats are carrying about 500 people, including Swedish activist Greta Thunberg. And the first batch of tickets for the 2026 World Cup in the U.S., Canada, and Mexico are now on sale. The buyers were selected out of 4.5 million applicants. who entered a diesel lottery last month. Now, the schedule of matches, it is still months away from being finalized, and there will be several more phases of
Snowflake.
months ahead, Scott.
Yeah, can't wait. Definitely can't wait, Silvana. Thanks so much.
Okay, we continue to push higher. Let me look at Money Magic's levels. In particular, I'm looking at Snowflake. Money Magic levels. Snowflake, what do you got for me there? Money. Snowflake, you got 230, 250. Okay, Snowflake. Yeah, once we get to 230, 250, it could go. Call wall 230, 230, 250. Okay, call wall. We're above the first call wall. Two thirty call wall. Ba, 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 ba.
Voice use disconnected.
Okay. Let's see here.
All right, welcome back. Let's talk about Joe's new buy. It is Merck, and it is up 6% today. Best two-day period since 2009. What popped on your list about this?
So I think this is a clearing event, very similar to what we saw in Alphabet. Merck is a name that I've owned in the past, done relatively well with it. I understand the stock pretty good. So you've got a confluence of technical factors here, along with fundamental factors, and I think that's allowing for a rebuilding of positioning, certainly an improvement in sentiment. The stock appears to be breaking out. Keep in mind the stock year to date, it's down 11%, but it's up 17% from its early low in May. Relief on import tariffs over the next 3 years. We heard that along with pricing relief from Pfizer, along with the Trump administration the other day in the Oval Office.
Oh, so that's what you're talking about, the clearing event around
I think that bleeds through to the entirety of drug manufacturers themselves. It basically says the administration is open to a negotiation with each of these individual names, and I think that's going to happen.
Well, I mean, the market's obviously moved a lot on this name. We just said the best two-day period since 2009.
And
so
I think there's
you're going to get
way
to the
more to go.
Okay, because the inevitable question.
Okay,
well, it's obviously pricing
Amazon,
a lot of that upside in already.
So
Google,
the reason why I selected Merck is it's fallen aggressively.
Tesla,
2024 high of 134.
Broadcom,
It's really come under some challenging times. I think
Microsoft,
this is a restart. I think this is the type of catalyst where
NVIDIA.
you see built-in positions.
Okay. We'll do our calls of the day, top ones, and some more committee moves, or committee stocks making moves. We'll do that when we come back.
Snowflake. Okay, that's bearish flow for now. S&P looks like it could move back into the range. Okay, let me go here. Trace. Okay, you can see a hedging flows continue to drop off. Look at the drop that we could see here to 66.50 if there is any selling here. Remember, we have to have options fill in. We lost the 65.05 zone. That was the JP Morgan collar. New levels for that same short call, which was at 65.05, is now up at 7,000. So even JP Morgan is adjusting their levels higher, I believe. Let me just take one look at the settling prices there. Collar. Let's see, collar. I believe I posted that towards the close, right? Yesterday. 3 collar. All right, so I'll look at that. Snowflake. Snow. I got to go make my lunch here shortly. Okay, the New York Fangs are hanging in there, so that's the only thing that's keeping me from going short right now. The fact that Apple could pop, Microsoft is already moving higher. We got Amazon, Google, Snowflake. We got Meta even turning off the low. Broadcom's at the highs. Semis are doing well. That said, the S&P is kind of just settling here at the highs. Okay, Merck is at the high. Okay, I'm going to take a couple minute break and I'll be right back.
Do some calls of the day. KeyBank initiating QXO overweight. Weiss, you own that stock. What do you think? $28 is the target.
You know, the stock's been under, I wouldn't say pressure, but it's not really moved. It will. Brad just being very, very disciplined, Brad James, CEO and founder, just being very disciplined about the acquisition he's going to make. He bought Beacon Roofing, and that is doing extremely well. He went to make another acquisition, but Home Depot is willing to pay a lot more. So I like the discipline. Brad is a permanent compounder himself, like United Rentals, etc. XPO. This will do quite well. Just be patient now.
All right, Delta, I think you mentioned it earlier, Joe. It got upgraded today to a buy. The target's 70 from 62 at Jefferies. What do you think?
I don't like that call. I'm sorry. I think there's a pretty good chance that the airlines peaked in the first quarter of 2025, specifically as it relates to Delta. I don't like the fact that we're mentioning here that it's difficult to fill economy seats and the main cabin itself. They're relying too much on the front of the plane.
Berkshire Hathaway said to be near a $10 billion deal for Occidental's petrochemical unit, according to the Journal. Your stock's down 8% since Mr. Buffett announced he was stepping down on May 3rd.
Not really reflected in the price action today or more recently, but this is a win on both sides. If you think about buying a chemical company, it adds to the 2011 purchase that they made of Lubrizol, which is also a petrochemical company. In addition to that, what he has wanted for Occidental as the largest shareholder with an $11 billion stake is for them to shed a lot of their non-core assets to pay down debt. And this, in fact, does that for them.
All right, it's a new all-time high today for Welltower, initiated overweight, 195 at Cantor, trending well above 20%, they say, on same-store sales growth. Or same-store growth. What do you think?
We own it in the Joe T. I really like it from a fundamental perspective. If you think about the REIT sector, think about senior housing, and and the exponential growth that's going to go on in senior housing. Senior housing stocks outperforming the REIT class itself by nearly 20% so far year to date. Another name you can own there is Ventas.
All right, United Rentals upgraded to outperform from neutral, target to $1,050 at Baird. It was 888.
That's a little bit generous in the price target. Be a little careful with this one. Any slowing in the economy is clearly going to impact the rental market.
All right. Up next, we do have the top-ranked financial advisor in America, according to CNBC's new FA 100 list. He's here at Post 9 next. Welcome back. CNBC releasing its 7th annual Financial Advisor 100 list today, recognizing the best FAs in the country. Joining us now, the president and CEO of this year's top-rated firm, John Mullen of Parsons Capital, here at Post 9. As you see, welcome and congrats.
Thanks, Scott. Good to be here.
You continue. You were 2 last year, so now you're the top dog. What's your strategy?
So our strategy is really to focus on our clients. It may sound sort of simple, but taking the time to get to know them. Every person is different, what they come in with, what their needs are, what their concerns are, and make sure that we're tailoring our approach to fit what their needs and desires are.
Okay, so you're based in Providence, Rhode Island.
Yes.
$2 billion under management. You've got about 1,864 accounts under management. Do you have an investing philosophy that you sort of try and follow in the kinds of stocks that you pick?
So we do. It's a little bit broad. We empower all of our portfolio advisors, portfolio managers, to really build a portfolio that they think is appropriate for their clients. But when we look at it, at a very macro level across the firm, we really try and focus on major themes that we think have long-term, multi-year staying power. We look for leaders in those themes. You think about right now AI, IT security, crypto, the deregulatory push. It's benefiting a lot of firms, things like that.
All right, so your top holdings in order: Apple, 3M, Microsoft, Berkshire, Amazon, JPM, Alphabet, Oracle, IBM. You have the Vanguard S&P 500 ETF. It's the VOO for those of you who hold that, as well as you're a large cap stock guy. I mean, do you think that is the trend that's going to continue into the remainder of the year? As we have this conversation every day, where do you want to be positioned? Do you want to just ride the large cap stocks in the market, or do you think you're going to get a broadening down the caps space?
Well, certainly you've seen the Russell 2000 recently wake up and finally join the new all-time high list. So we'll selectively go down in cap scale, but we are predominantly, in those large cap names. We do think that's the best place to be, especially when you think about some of the uncertainties that are facing markets, facing investors right now. There's that safety with companies that can self-fund, that can avoid some of the volatility that's likely going to come with the government shutdown, with tariffs, with all the other geopolitical stuff that's happening.
I mean, the market doesn't seem too concerned with anything. It's trying to be fixated on earnings and rate cuts. Is that how you're looking at it as well?
Absolutely. And what's interesting is, going into earnings season here, we're getting ready to announce, analysts are actually upping their earnings expectations for the largest companies. Typically, we see them cutting as we go in, so there's a low bar for companies to get over. So that tells us that companies are really feeling good about where they are, and that's getting out into the analysts. And for the Fed, you see them cutting rates. We don't think aggressively, but they're able to do it while inflation's contained, employment's a little soft here, and that's going to be another leg to the stool.
So the hedging flows did drop off a little bit, but the New York FANG stocks are all holding the highs for the most part, with the exception of Netflix. Meta less so. Meta is trying to turn up. So with the New York FANGs pushing higher, it's hard for the S&P to drop substantially from here. So right now we're holding the highs.
dollar's gotten weaker, our budget deficit, growing debt. And so people finally sort of shine the light over on what's going on with the technology companies in the emerging markets. The launch of DeepSeek, I think, also was an important thing this year that really had investors look at the Chinese internet companies and see how cheap they had become. They've been very out of favor over the last few years. So, who knows if that will continue, but certainly this year, investors are much more interested in emerging markets than they have been in a long time.
And in tech and emerging markets specifically, which is where your ETF is, I want to sort of break down and talk about some of the various emerging markets. Latin America is really interesting. We've talked to some executives from companies like Mercado Libre and Nubank here at Yahoo Finance, and those stocks have done well. So Latin America, what is the sort of emerging story there? If there is sort of an overall.
Sure. Well, the story of EMQQ, and I think that really the biggest growth story in the world for the next 10 years, in the next 20 years, is the rise of 6.5 billion new consumers in emerging markets, including Latin America. They're getting their first ever computer, which is not a desktop, it's an Android-based smartphone. It can be better and more affordable. And they're getting the internet for the first time. And they're going online at an incredible rate, and they're leapfrogging a lot of things we do in traditional banking, create the online payments. And so Latin America, amongst the emerging markets, Latin America is 650 million people.
All right, looks like we're going to start a path lower for now.
Mercado Libre and Nubank they're the leaders. Mercado Libre is the largest company in Latin America. It's been best performing stock in Latin America. It is the Amazon.com in every part of Latin America, but it's also because they've also got
S&P, let's see what options are working right now. S&P. Okay, we're starting to move a bit lower, S&P.
Alibaba up 58, Tencent 20, PDD 26, JD up 10. Weiss, I asked you this the other day. I love this part of Tony P's note too. If Q1 belonged to European equity markets and Q2 belonged to the U.S., Asia picked up the baton in Q3. Is there more to the race here for these stocks?
I actually think there is, but I'm pretty sure there is. I'm just going to wait for a pullback, which may never happen. So if that doesn't happen, I'll take a look at consolidation. I don't view BABA, for example, as expensive unless you put the risks associated with it, which is that China does go after Taiwan. That's probably not this year or next year event, but it's something that the U.S. is planning for, at least. So that's the primary risk I've seen. Keep in mind, it's in the country's interest, China's interest, to repatriate a lot of the talent that they sent over here, who now has no interest in coming over here anymore, or little interest, number one, and making themselves not dependent whatsoever on technology outside the U.S. That's their number one imperative right now. And so as they continue to make it easy for companies to do that, I think you'll see the sector continue to move on.
Liz, the emerging markets ETF, better known as the EEM, hit a new multi-year high back to July of 2021. They do have many holdings that I just mentioned, along with Weiss's Taiwan Semi. What do you think about emerging markets, China, as a trade, as an investment?
The EEM.
Bitcoin trailing off a little bit right here. Bitcoin.
Such a big slug in there. I like China. I used China as my final trade the last time I was here. I would use it again today if you guys would let me do the same one twice in a row.
Okay. But I feel like you just did.
I still think there's good opportunity in China. I own the KWeb personally and FXI.
Joey.
Similar to Yankee Stadium last night, a lot of swings and misses. Unfortunately for me, that's what it's been in China. We will reassess at the end of the quarter.
That was only the first game of the series. Is there 2 games worth of
There
activity?
sure is. I mean, it's not going to be like last night.
Coinbase.
Stocks, not the game, Joe.
Big swing and a miss, as I said, at the end of the
Coinbase.
What we will do at the end of the quarter for the Joe T reports is we'll look at a lot of these names which have strong momentum.
Still trying to figure out the boat thing from the top 2. Right, anybody else with me on that?
A separate vote.
We'll do final trades next.
It's this growth curve you can not only get a smartphone in India, but you can get one for as little as $12 brand new. So India is a very special place. They've also got the best human capital. You can just look at the S&P 500, the Google CEOs of Google and Microsoft, and they've also become incredibly digitized. They've digitized the financial system at an incredible rate. They've formalized the economy using technology. And I don't think that most investors really appreciate how special India is, and for its internet companies, how early it is.
So I'm curious, I mean, obviously you're full on all of this stuff, and you're very positive. When I look at over the next year, I mean, we have had significant periods of underperformance for emerging markets leading up to now.
We've had more than a decade of underperformance.
So is there any reason to believe that we will see that reversion to the mean in the short term? Like is there anything that's going to stop this momentum that we've started to see?
Well, I don't make short-term stock market predictions.
I would say like 12 months, 3 to 5 years. I mean, any kind of time frame you can.
Well, 3, 5, 10 years, there's going to be a massive amount of growth in the emerging markets. It's happening right now. In terms of them coming back into favor, certainly this year, there is a much higher appetite. Again, emerging markets have been out of favor relative to the U.S. The emerging markets internet stocks were also out of favor the last few years. And I think the momentum will continue because when we hear it every day, I mean, investors are so much more interested in talking to us today than they were a year ago or 2 years ago. But the flows so far haven't been really that much. I think there's been $15 billion of flows into emerging market ETFs this year, which is a pittance to relative to things like Vanguard's S&P 500. So I my gut is it's going to continue, but longer term, it's definitely.
And just a quick question before I let you go. China, which we haven't, it's a third, but we haven't really talked about that much. And that internet is very
Excuse me.
volatile. Can we expect that they'll continue to be sort of a volatile part with
S&P staying in this range. What it looks like right now is we're in a range. Either we break to the upside or break to the downside. We do have resistance overhead, but if we take off the highs, a lot of those shorts will start covering their or monetizing their puts.
So will Chris Barone and Kevin Gordon and Ida Yoshioka and JP Morgan's Matthew Moss. We have a lot to talk about on this first day of the final.
Micron, nice move on Micron.
Let's do final trades. Steve Weiss, you're up first.
Yeah, first of all, I don't know which of the two boats Joe's going to put this in, but I'm going to go with Netflix.
He had to go back there, right?
I had to come in, Joe. Netflix looked down on a tweet by Musk today saying, hey, you should boycott Netflix. You should cancel the subscriptions. I think it's a buying opportunity.
All right, stock's down 2%.
Netflix.
Liz Thomas.
Yeah, government's having a little trouble agreeing on where to spend money, but I think they keep spending it on defense.
Netflix double bottom starting to set up.
Thank you very much. All right, Captain. What do you got for us?
Apple.
What do you got?
Apple continues to push higher. I am long. I think we're going to make a new all-time high.
In Apple?
Wow,
Okay.
Yes.
All right.
Well, I mean, we're not that far away.
Yeah, we're not that far away. We got a mixed market, and I will see you at 3 o'clock on Closing Bell. Again, don't forget Mark Lasby's going to be on with me, and I'll see you then.
Apple. All right, the New York Times look good.
Thank you, Scott, and welcome to The Exchange. I'm Mike Tampoli, along with Melissa Lee. Tensions on Capitol Hill heating up, but the market keeping its cool. All three major indices shrugging.
S&P is still in a range. Watch this range up here.
Which is now underway. Actually, the Dow down fractionally, the rest up from early losses. Yields lower following a weak private payrolls report. The 10-year touching the lowest level in about a week.
Meantime, Bitcoin is higher. It's up 3% right now, and gold hitting a new record. This is the dollar is declining on pace for its first negative.
S&P is ripping here.
Pace for its worst year in more than 2 decades. Take a look at pharma stocks higher for a second day strongly following the president's drug pricing plan. We'll take a look at whether the last cloud may have lifted for that sector. That is straight ahead, but notable performance here, helping the Dow, for instance.
Absolutely, yeah. The laggard groups, healthcare in particular, are getting a little bit of a bid. The first day
Back to the top of the range.
maybe a little bit of kind of rotation around, and that's the source of the resilience of this market. At least one of the sources. Again, Nvidia making new highs doesn't hurt either, but in general,
Futures are trying to push. We're bullish on the 5, 15, 30, 60-minute time frames.
and maybe that's why it hasn't pulled back more substantially.
Right. Meantime, the government shutdown means there will be no employment report come Friday. That's because the government is shut down. The Labor Department is closed. No one to crunch the numbers and release them. Senior economics reporter Steve Leisman joins us now with more on this. What are we going to do, Steve, on Friday at 8:30?
Maybe get off the data hamster wheel for a little bit. I think take a broader view. The government payroll, Melissa, is still viable over a short period of time. There's still ways to figure out what's going on broadly with the jobs market and the economy. ADP, volatile month to month. We learned that in spades today, but over the course of a year, lines up pretty well with the private sector data from the Bureau of Labor Statistics. In fact, year to date, in
Futures trying to push a bit higher.
a month,
Trying to take out the highs of the day. Futures about to take out the highs here.
like a lot of indicators,
S&P about to take out the highs.
if jobs are at an inflection point right now, alternative data could miss the change. Jobless claims, they're still going to be published, but it will give us data on firing, though not hiring. Michael Feroli of JP Morgan says, continuing claims plus the Conference Board's employment data of jobs hard to get. It's a good proxy for the unemployment rate. Claims, you can see that have been elevated since May, just a little bit lower. Ian Shepardson from Pantheon, he says, the best single indicator of payroll is 4 months ahead. Hiring intentions in the
Hedging flows turned up
IB survey. And you can see
significantly just now.
it's showing some signs of stability. And a big missing piece of the
All right, nice break to the upside now.
government jobs. The Trump administration's layoffs of federal workers were
We're about to tag 6,700. Okay, good call, Mondo.
ADP came in -32 in September, in part because of revisions. Those revisions will keep in place the trend of a softer job market, guys, so it may be a bit softer than we previously believed.
So we have really confirmation from multiple fronts of this slackening labor market.
Yeah. And so and by the way, we never got to inclusion about a slackening labor market unless it was on multiple fronts.
Right, exactly.
That was always the smart way to do it.
And so we have that. It, guys, reinforces the market's confidence that October is a rate cut. What I find fascinating is this debate about whether the labor market, as we see it now, is overstating the deceleration in the economy. Is it kind of off on its own with specific factors, or is it kind of leading to a broader conclusion that GDP is
Apple looking good.
Well, so the smart ass answer would be yes.
Yeah,
Right. All those things being potentially true. I think perhaps one explanation for what happened is all of these changes.
Hedging flows.
Businesses that
Okay, we're blasting through here. We got 6750 as the highest level here. 6750. 99 percentile is now at
way to fall back without some data is to use ratios.
6750.
Immigration, the ratios are all coming down, or they're changing essentially both sides, the numerator and the denominator. And I think you may have been through a period. This is what several Fed officials have said, where you have this reaction of uncertainty by businesses, and then things
6750 is now a target.
So maybe they're starting to go ahead. So we could miss the fall and we could miss the comeback depending upon how long this goes. But I want to go back to the first thing. We always should have been and always should be taking a broader view of what's going on. Jobless claims, ADP, ISMs, NFIB, all these things. We all look at it and say, look, and there are times when like the job market will do this, and I'll be like, no, because none of the other data is doing that. So this is an outlier here.
Meantime, you do have a statement from
Yes, very quickly. Lisa Cook's attorney sending out a statement which said, and I have it right here, that a court's decision rightly allows Governor Cook to continue in her role on the Federal Reserve Board. I will look forward to further proceedings consistent with the court's order.
All right, we're on the move here.
Oral arguments in January, when the court could decide then or sometime in the summer of next year.
Got it. All right, Steve, thank you.
Pleasure.
All right, our next guest says, if
Pressing the highs.
much care about much other than momentum in tech stocks, why would the government shutdown be any different? Joining us now, Steve Sosnick, Chief Strategist at Interactive Brokers. Steve, it's good to have you on. So is that really the way you read this market right now, is that investors are kind of blindly riding momentum and the aggressive parts of this market, not paying attention to the macro fundamentals?
Good afternoon, Mike. I wouldn't say blindly. This is the strategy that's worked. One of the questions that I threw back at people when the discussion.
Okay, we continue to push here, 6,700s right here, right now. Look at this. Looks like an algo. Seek and destroy.
Yes, you can go down the road and extrapolate, government spending, et cetera. But bottom line is these stocks are going to do what they're going to do, and investors are going to keep doing and then what's worked for them before, which is buy dips, chase rallies. Momo and FOMO continues to work for the bulk of the active investors out there.
A government shutdown also doesn't improve the math, Steve, when you take a look at some of these.
We hit the call wall here, 6,700 tagged.
I know DA Davidson had some note today questioning the math here in terms of how much Oracle will have to raise over the next 4 years in order to satisfy even its commitments to OpenAI without even getting paid from OpenAI yet. You also have some questions about how this math is going to work.
Yeah, hi Melissa. Yeah, that I do want.
We're at the call wall now, 6,700. Let's see what's going on at this level. Okay. 0 day.
Most recent numbers were annualized revenues of $12 billion in revenue.
Okay, we'll continue to push.
About $8 billion this year so far.
Okay, there's resistance overhead. You can see that purple sneaking in here on the right, top right. Delta pressure. Okay, volatility above. So if we get into this zone, this could zip.
I think back to like Global Crossing and Northern Telecom and God forbid Enron and WorldCom, but the companies that were laying out the fiber required for the internet to develop into what it is today, and that fiber was necessary.
That was a nice little run to 6,700.
Meantime, it took out some very big companies along the way. A couple of them for fraud, but a couple of them just for having to make these huge commitments that didn't pay back quickly enough for their creditors.
Yeah, it's been interesting, Steve, the way that the bullish storyline has evolved with regard to really.
All right, Coinbase, the Bitcoin stocks. Okay, looking for a bounce here. We're right at resistance.
And free cash flow, they don't even know what to do with it. Now they're spending down their free cash flow. Actually, price to free cash flow valuations are looking really rich right now, and the market is saying yes, of course, but that's because they're building the future in a hurry. So I guess until the price action breaks or until even earnings estimates stop going up, it's hard to fight it.
Well, that's clearly the case. One of the lessons I learned.
Looks like Nvidia wants to go again. Okay, we're coming back into the range. Looks like they took some liquidity here. Some stops overhead. Looks like they took those out. Let's see if we bounce or if we continue to drop back into the range. Nvidia, nice move back up to the highs. Here goes Nvidia.
I saw a statistic recently that only a very relatively small number of portfolio managers and active traders were around during the late 90s. And so this is a way, again, that history sort of goes.
Amazon pop.
Doesn't mean it's going to come out the same. It doesn't mean that we're looking at an impending disaster ahead of us. But I do
Google.
think at some point, people will start to wonder. There's these
Tesla.
All the cash flow required.
Broadcom.
Keep building this stuff out, and is it being spent wisely?
Micron.
Is it generating the same ROE?
Looks pretty good to me. Nvidia going.
Meantime, driving the market, Steve, you say is Momo and FOMO, and so I'm wondering from your standpoint, at what point do you start getting concerned about this as a driving force? I mean, historically, when you take a look at the markets.
Wow.
Some of the things that kill Momo and FOMO.
It's like the butterfly effect, Melissa. It's often something you don't even expect. The Fed is, of course, the biggest killer of these things, and I think while the Fed is certainly skewed a bit more accommodative, certainly with the last rate cut, I do have to wonder whether the market is a bit ahead of the Fed in terms of rate cuts, but it's been ahead of the Fed for years, and so that's not necessarily an issue. I think, if you start to get a material weakness in the economy, and this is where I start to worry that investors
with the mindset of good economic news is good and bad economic news is good too, because it leads to Fed rate cuts. If the economy were to decelerate sufficiently, I think the Fed gets caught behind the 8 ball, and that starts to weigh on company earnings, and that starts to weigh on the market. And we saw in April these very crowded trades were actually the ones that underperformed the worst. They recovered because of the relentless dip buying and ultimately sort of the change in markets tone and sentiment, government change in tone and sentiment as well about tariffs. But that to me is sort of the weak point there.
Yeah, we did see that in 2022 as well, that those big NASDAQ names did underperform in that downturn. Steve, appreciate the time. Steve Soutnik.
Thank you so much.
We want to mention one of today's biggest movers, and that would be Nike, up about 5% for its best day since June after surprising the street with sales growing about 1% versus a year ago. The CEO says Nike is making strides in its wholesale running in North America segments, but China continues to be a pain point for them. Here's what he told analysts on the earnings call.
Greater China, as I mentioned on the last call, is facing structural challenges in the marketplace. Our business was down 10% for the quarter. Seasonal sell-through continues to underperform our plans, requiring larger investments to keep the marketplace clean.
Shares coming off their first negative month since April. They are currently 20 buys, 16 holds, and 2 sells on the stock. But this report, Mike, was enough to convince analysts that a turnaround story is actually intact.
There's a willingness to believe, I think, in this phase of it. If you look at the earnings level, the absolute earnings level for this fiscal year and next, it's back to like 2014, 2015 levels. Wow. So essentially, you've rebased the earnings to a radical degree. The stock is not really far above where it was back then. So it's not as if it's cheap, but it just seems as if people are willing to say, look, there's a long distance between what they're earning right now and what the high market.
NVIDIA's going.
Yeah, I mean, the question, though, here is 1% revenue growth for a stock that's valued at 44 times forward.
It's one of the biggest markets, still kind of unreliable.
Exactly. Yeah. It's a push works there. Coming up, we are 13 hours into the government shutdown with no end in sight. And in that time,
NVIDIA, nice push there on NVIDIA.
$75 million in travel spending has been lost. But that industry is not the only one feeling the effects already. We'll take a look at the impact to the housing market and IPO pipeline next.
Plus, Atlanta Falcons CEO Rick McKay will join us in studio. The $8 billion franchise ranks 11th in CNBC's official NFL team valuations. We'll look at the league's international expansion, next year's World Cup, and more when we return to the exchange. Right back.
NVIDIA, okay. Nice volume there. NVIDIA, nice volume. Little pop. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is October the 1st, Wednesday. All right, markets are ripping higher here. S&P 500. Okay, so we came down and tapped that level. Big breakout here. Any of these 99 percentile, 98s, 99s. S&P continues. Wow, look at this market. Look at this market. Phew. What a day.
High tick alert plus 800.
High tick alert. High tick. Wow. Wow. This is it's impressive.
Welcome back. The Securities and Exchange Commission, among the many government agencies set to see major disruptions in the wake of the shutdown. One of the agency's many responsibilities include giving the green light to companies looking to go public, but that task may prove difficult with staffing already being reduced to just essential workers. One company that was able to IPO just under the wire today, Neptune Insurance, that stock is up about 17%.
Look at this freaking market.
For more on what's to come,
It's on crack.
let's bring in Dan Primack, business editor at Axios. Dan, great to have you with us. Was the calendar full already? Are we going to
Okay, we're making new all-time highs.
put their plans on hold and then all of a sudden the floodgates open again at the end of the shutdown?
I think that's probably what happens. You've got probably about a dozen companies that are on file, to go public at some point. The two that are most interesting to me, there's one called Alliance, which is a laundry equipment company, and then there's University of Phoenix, the kind of the secondary education company. They're both interesting because they both chose to launch their road shows earlier this week, knowing full well there was probably going to be a government shutdown. And I assume the bet there for both of them is it's going to be short-lived.
Right. And Fermi did manage to go public, and that's sort of an energy company with a well-known backer, Rick Perry.
Wow. No more trades for me on S&P. I've been scalping it every few minutes or so.
Dan, are trying to game out exactly when a logjam might really build if the shutdown goes on for a while. Presumably, these companies need to sort of update their financials through the third quarter and then have that get clearance and maybe get on the road again. I mean, what's the process by which we have to worry about stuff getting really stalled out?
I think we need to wait a few days, maybe a couple of weeks, right? Because there's no particular reason for most companies why they need to go public in Q4 as opposed to Q1. So long as they've got all their internal stuff ready to go and their bankers, et cetera, they could obviously wait a couple months. January or February are fine months to go public historically. So I think this is really going to be companies waiting, watching. Is this one of these shutdowns that we've had to watch them the last 24, 48 hours? Well, then nothing changes.
Congrats, Angel.
But if this goes a week, maybe 2 weeks, I think that's the moment where most companies will think, you know what? There's no reason to rush. There's no reason to sit here every day, reading the paper, waiting to see when the shutdown ends. Let's just kick the can into the new year.
I'm wondering, Dan, I don't know if you know this specifically, but if the SEC is not accepting documents for an IPO, I mean, are they also accepting company filings? Because in a couple of weeks, we're running into earnings season, and that could push this IPO pipeline even back further if they have to prioritize reviewing certain documents first.
They are accepting. So if you're already a publicly traded company, your quarterlies or whatever, they're accepting all of those. Where it comes in is anything that they need to approve or to make effective. So that means any IPOs, any follow-on equity offerings, basically any new shares getting introduced into the market. But if you're just reporting your quarterly earnings, those are going to go into the system just fine.
And Dan, what's the general sense of how the recent crop of IPOs have done, both for the investors, the inside investors, and then in terms of just the market action? Because you have these massive one-day pops in a lot of the coveted deals, and then they've really traded off sharply since then. It feels as if there's a sort of stampede to get in through a narrow door, and then they bleed lower.
Yeah, there's been a little bit of a bottom shift for sure, right? Because you said you had a couple of those, Figma, et cetera. You had some of those huge pops on the first day, but the majority of those companies still are trading above their IPO price. So are they 2 or 3 times their IPO price? Not necessarily.
All right, so I'm probably going to do very few trades from here. Maybe I'll take a couple more. We'll see. But I've had a stellar day so far today. For those of you who took the 6,700 calls at the open, right after the open, when Trace turned from the low here, okay, we talked about this low right here, okay, that we'd probably see a move. We got a little early, but we dropped and then popped. And of course, the markets have been up since then. Those 6,700s got tagged. So those were a very good trade. Other than that, we got stocks like Supermicro, which is following through. That's one of Mondo's babies. Supermicro plus 4.5%. Super micro plus 4.5%. What I'm looking at here is potential for a big cup. Okay. Super micro. It's above the 50-day. You could call this a handle, I guess, right? Would this be a handle or not?
But it won't write new policies or renew existing policy. And that impacts about 1,300 property sale closings per day, according to the National Association of Realtors. And this is a delay. The home sales would eventually close if and when the shutdown lifts. Finally, the FHA mortgage program, which provides low down payment loans to borrowers with lower credit scores, it would
Okay, looking for a move to this level. RSI is higher. MACD, stochastic. You name it. You name it.
Critical FHA operations like claim payments, mortgage servicing, loss mitigation, and REO, that's foreclosure property management, they will continue. Some condo project approvals, though, are suspended. That, according to the NAR. FHA, VA, and USDA, they made up just over 33% of all mortgage applications last week, according to the MBA. So it's a big chunk, guys.
Diana, can you walk us through, and if you are in the market, you're a buyer, you're in contract, you're looking to get a conforming mortgage to one of these government agencies, the time to lock, because I think that's sort of the most precarious time for a home buyer. Because of the delays in processing, could we see that window move around more or be diminished because you're just, we're waiting?
The rate is unconnected to that. Now, when you say a conforming loan, that's Fannie and Freddie. Nothing's changing in that. Fannie and
Super
Freddie
micro.
loans are still going on. It's the FHA, that is the mortgage insurance, the federal government's mortgage insurance program for lower down payment loans. That's the one that you're going to see delays at. But when you talk about the actual rate that you're approved for, you're already going to be approved for that rate. It's a question of when they're going to close on the loan. Anybody who's bought a home knows there can be all kinds of delays, not just a government shutdown. This one's a big one, no question, but there can be all kinds of delays in the closing process. That's why it generally takes 1 to 2 months to close on
Look at this psycho market. I can't do any more trades on S&P. I've been hitting this 10 at a time, scalping for $1, $2, $5, and we're still going. Never say never. Looks like we might go some more here. Don't want to do it right when I press the button. Okay, we're breaking out. Trying to break out to new all-time highs. Let's see if we can't break this high. Oh my gosh, look at this market. Look at this market. Ooh-wee. Wow. Wow, that was a nice one. That was a nice scalp there. Okay. Okay, let's go. Let's go. Nice. One more time. One more. Can we get one more? Wow, that's pretty impressive. Okay, so we do know we're taking out stops up here, right? We're taking out stops. Do we continue or are we going to reverse this? So keep your finger on the trigger. So far, this is looking good. I'm looking at the New York FANG components. These are, oh, there goes Microsoft. There goes Microsoft. Popping, Microsoft. Big move on Microsoft. And above the 50-day. Winner. Very nice, Mondo. Very nice. Okay, we just keep going here. Okay, one more shot to the highs. Can we get there? One more shot. One more shot to the highs. All right, the futures are just kicking ass here. Futures. I think somebody has the last laugh. That's not a political statement. Just can imagine. Clean. Clean, clean, clean. Okay. That's me exiting the last of my scalps.
And we're going to Washington right now. Taking a look at a picture of J.D. Vance, Vice President, speaking about the shutdown at the White House. We'll bring you any headlines as they develop. Of course, the shutdown about 13 hours in now. Any news, of course, that crosses, we'll bring to you. Meantime, Mike is taking a look at momentum, which is, we were just talking to Steve Sosnick over at IKBR about this.
And it's been a persistent source of leadership in the market. I mean, it seems like that's redundant, but it's not always the case that technically the momentum factor in the market is leading. This is SPMO. That's the big momentum segment of the S&P 500. SPHB is higher beta, more volatile and aggressive stocks. And SPHQ is high quality. This is a 3-year chart. So the bull market we're in right now started basically almost 3 years ago. We're within about 10 days of that. And what you see is even at the beginning of 2024, you were still kind of in parity with these different strategies. And even as recently as a couple of weeks ago, quality was holding its own. So you can kind of be sort of prudent and careful, and quality was working.
All right, very nice. Okay, I'm not going to push my luck. That's a good day. That's a good day. 5-digit day.
That was basically, that's the April low.
Yes, this year's the April low.
And that's where the differentiation
really happened. Depth of the destruction in high beta, because that's it. Yeah. They move fast in both directions. But, you know, it's hard to say when this becomes unstable, but you obviously have people willing to say that the familiar winners of momentum are going to keep it.
And of course, we have the Robin.
All right, I sold that right at the right time. Wow.
Yeah. Now let's get to Seema Modi for CNBC News Update. Seema, Melissa. Testing and strict
All right, so some people overstaying their welcome up here. I would be taking some profits off. I'm done with S&P for now. This has been a really good day. Let me see who this is. I got a 888 number. Let's see. All right. Well, that made the week, right? Made the day. Let's see what else we want to take off here. I'd like to reduce my exposure because I had such a great day. No need to hold on to some of these positions. All serve their purpose. What's Bitcoin? Bitcoin's starting to bounce. I'm going to hold on to Coinbase. Coinbase, I'm going to hold on to. I have some calls on the leveraged ETF, CONL. Okay, we're at the upper Bollinger Band. Probably could come back a couple of days and then follow through. All depends on Bitcoin, BTC, USD, Bitcoin. Okay, big move there. Bitcoin. So momentum is clearly bullish. So this is probably going to last at least 2 or 3 more days, I would think, trading days. The way RSI is ramped up here, okay? So strength of trend is improving and persistent. Over the last 6 or 7 trading days, we've reversed and moved higher back above the 50-day. Top Bollinger Bands right there. Note the Bollinger Bands are about to open up. All right, so whenever you see Bollinger Bands do this, okay, whenever Bollinger Bands turn up and outward, okay, that's if you've read John Bollinger's book, Bollinger on Bollinger Bands, great book, by the way, still applicable. Always, volatility will always be applicable. When the Bollinger Bands move away from each other quickly, look for RSI to tell you which direction. It's telling you look for a fast move. Now, we haven't even moved yet. Yes, we have in sense of the move off the low, but the bigger move is probably just around the corner if the Bollinger Bands and volatility continue to pick up. And I suspect that they are. Okay, so Bollinger Bands do start to open up like they did over here. Very similar. Look at the similarities here. Okay, Bollinger Bands opening up. And what does price do? Price takes off to the upside. Okay, then we consolidated for 10, 12 weeks. Now we're setting up the same condition that we have over here. This condition is where we are right now. That condition right now. That's where we are. Okay, RSI rising tells you which direction. The volume is saying institutions. MACD stochastics says the momentum is in your favor. So I would say, yes, I'm going to hold on to this. Bitcoin looking good. But I do want to close a few positions. What do I want to do here? I'll keep all of my condors and credit spreads. Those are fine. Broadcom, big move on Broadcom. So I had an iron condor on Broadcom, and I wanted to see exactly what we have now. Okay, so Broadcom, we kept drifting below the 20-day for 5 days straight. But look at the wicks. Okay. Out of the last 5 trading days, we've made lows right in this area around 325 up to 330. And what happens? Every time it dips into this area, somebody is buying. So there's probably a buy order out there, not to be confused with buy order blocks, but there's probably an institution out there sent off their request to buy, what, a couple of million shares or a couple of thousand shares, whatever it is, of Broadcom, okay? And they've been just doing that. 1, 2, 3, 3, 3. Now, if this confirms, we'll move back above the 20-day, which is fair value. We're currently trading at a discount to fair value, the 20-day. Note the Bollinger Bands. Bollinger Bands have come inward inside of the strikes that I chose. I chose this specifically because Bollinger Bands were turning in, and I sold this like, what, Monday? Looking for price action to consolidate right in this area, which is going to be perfect for me if I'm selling premium. I only sold 4. I meant to sell 5. It would have been about $1,800 credit. Okay, one of these a week is all you need. And it doesn't take a big account. So with this particular trade, I think, let me see, Broadcom. Okay, so the dealer, Schwab, requires $4,000 put aside. So basically, if you got a $10,000 account, now you can trade with 6. Okay, so they take $4,000 just in case the trade blows up on you, you fall asleep, you go into Rip Van Winkle mode and you forget about it. The worst that can happen to you is it's actually about 3,600. 3,600 would be the loss. I would never let a trade go like that. So I'm always managing these. But the beauty of credit spreads, iron condors, flies, etc., is that time is on your side, literally. As each day goes by, theta kicks in. And if you've had calls before and it didn't go anywhere, you know that over time, your calls just keep losing value, losing value. That's the beauty of credit spreads, iron condors, flies, whether you're going long or short, iron flies, etc. I like iron condors and I like credit spreads. They're the same thing. Two credit spreads, one overhead, one below. And I always like to see when Bollinger Bands are really wide, and then they start to contract. When they start to contract, what that's telling me is, okay, you can collect some implied volatility premium because those people are paying up for their calls or puts, and the implied volatility is higher. All right, the dealer makes you pay up for those calls or puts. Once the volatility starts to collapse, if I had 20, 30 basis points in volatility premium, I'm collecting that premium. And when it collapses to zero, or like 30, 40%, I collect that premium aside from the intrinsic value, okay? So consider trading credit spreads, iron condors. Do yourself a favor. There's plenty of literature out there. Just focus on it. Understand it. And with a smaller account, you can build up a small account very quickly by doing this, you know. One a week is all you need. Start it with a $10,000 account. Over the month, maybe you do a trade like this a week. Okay, by the end of the month or going into the next month, you've collected, maybe your $10,000 account just went to $12,000 or $15,000. And all you did was put aside $4,000 of your available capital, just in case you go into Rip Van Winkle mode. I know I'm repeating myself, but go on YouTube. There's a guy called Investing with Henry. He's ex-Goldman Sachs. He knows exactly what he's talking about. Understand what he's doing, and you too can trade these trades that I'm taking with you. I don't have the time during the day to do too many lessons per se, but when we take these, I'll let you know. I'll put it in the spreads channel. You can see the ones that we've had in the past. I just took Costco off because it wasn't working, or so it seemed. And now we're trading at all-time highs. So many of these trades are working really well. Let me go take a look at Charter. Charter Communications. I have another one on Charter. Okay, now Charter, all it has to do is continue to grind higher, stay right here, or pop to the upside. Now, even if it pulls back a little bit back towards the 20-day, that's fine. This is a $2,000 credit. Okay, so this expires out in November. So by the first week of November, I'll be probably thinking about taking this off for like $25 debit. For a $25 debit. So I'll make what, $1,800 total? That's how you grow your account with less stress, and you don't have to sit here and watch what other people are doing. 80% probability of a successful trade. Okay, you're selling 20 deltas. This right here, I sold a 23 delta, only because I could see that this was starting to move higher and the Bollinger Bands were opening up. All right, so what else do I have here? I want to take a look at Charter. Micron. Okay, Micron, I already rolled out once on Micron. Okay, let me see what it's doing here. Micron tends to fade the high. Okay, so I rolled this up to 180. No, that's not right. That's not right. I thought I updated this. Micron. Okay, I'll get this sorted out, but I moved these up and out. I have the 185, 190s now. Maybe I didn't save it. Okay, volume looks good. Look at all this volume. All right, so I'm probably going to wind up taking this call side off. I rolled out another week on this to the end of October for a $30 credit. So I'm winding up making about 100, because I closed the put side too. Okay, I don't have any calls left, right? Let me just double check. I don't think I have anything left on the S&P. S&P, no, I'm done. I'm done S&P. That was a really good day. 5-digit day on S&P options is always a good day. Snowflake, let's see. Okay, so that's Micron. What's Riot doing? Riot? Okay, Riot pulled back. That was up earlier, Riot. Okay, Palantir, I sold the 180 calls earlier. Palantir doing what it normally does. Okay, Palantir usually dips during the day, give you an opportunity. I've already told you that this is most likely just going to be a $500 stock over the next couple of years, if not sooner. The CAGR on this one, the CAGR, let me see here. CAGR on Palantir, I think I have it here. I remember doing the research for it. Okay. The first post that I did for Palantir was back in May. Okay, so let's see if this worked out or not. Okay. Palantir at the time. Okay, when I first wrote about this in May, Palantir, everybody kept saying it was expensive. Okay, it was trading at $117. Okay, so that's a $70 move. $70. Merck, I'm not trying to say I'm as brilliant because I do have bad trades too. You know, I have bad trades. Sometimes I'll take calls and Brandon will be taking puts, or Brandon will take puts, or take calls and I'll take puts or whatever. I've seen trades in the trading room, even this week, where I took the wrong side of the trade and it didn't work. I got stopped out. But Palantir looks good. Let me think. I think I have the CAGR. You know where I have the CAGR? Is on this one, NVIDIA. So this is telling you what to look forward to. Okay, the CAGR for artificial intelligence, compound annual growth rate, is 36% per year. We're talking 1.73 billion now. It's going to be something like 10, 20 billion in 8-9 years. Why wouldn't you want to be part of that? Okay. So NVIDIA is trading close to what, 190 now? Close to 190. So when we wrote this, NVIDIA was trading 172. Okay, 30 days till earnings. We had that. Meta. Think about Meta for a second. They're building this supercluster, right? 600,000 H100 GPUs. 600,000 of those suckers. And that's just Meta. Think about all the partnerships with OpenAI, and yesterday was announced UiPath. And they just keep bringing in these deals. NVIDIA can't help but profit from this. Yeah. So the choice is yours. You know, you can follow price, you can sell premium, or you can listen to CNBC or Bloomberg. I don't think anybody in the trader room listens to them. I'm the only one that listens to them mostly. And that's just for, you know, news flashes. Anyway. Mm-hmm. Nat gas stocks, I like them all, basically. LNG, not so much. Apache, let's see what Apache's doing. APA. Apache's looking good. I like the refiners a lot. I like the refiners. Damn it, I hate this new interface. It keeps doing this. BLO pulling back. Phillips 66. Shitsky. PSX, Phillips 66. Okay. ExxonMobil, the energy stocks pulling back today. The strength has been in tech. The strength has been in tech today. Okay, without a doubt, tech is leading, as well as pharmaceuticals. IHE is the pharmaceutical ETF that I follow. That's a nice breakout. Now look at RSI. Look at the Bollinger Bands. Okay, that's what I was saying before. Whenever you see Bollinger Bands open up like this, like it did over here in August, you see Bollinger Bands start to move like that, watch RSI. It's going to tell you which direction to look for. Look for a fast move. Imagine being long one of the pharmaceutical stocks like J&J back in August. J&J, while J&J is taking a break today, look at August. Okay, J&J went from 162 up to 182. Okay, in 6 weeks. Imagine being in leaps or selling premium, selling put premium. This is going to be a bullish trade, sell put premium. That's pretty elevated. You could make up a trade where you put $2,500 aside in your brokerage account. You have $7,500 left to trade with if you have a $10,000 account. You sell, 5 options, you make $1,000. The stock just keeps going. 3 or 4 weeks from now, you close your trade and you just made $1,000 by doing not much of anything except sitting on a trade. And it is pretty much that easy. The trend has to be in your favor, of course. S&P is on the way up. So let's say the S&P was on the way down. Let's say S&P was moving lower like this. Okay, this is S&P inverted. If S&P was inverted like this, I'd be selling premium overhead, call credits. Same thing. That's not the case, though. S&P is up and to the right. So I could be selling put credits down below. Now, I don't like doing it on the index. I just like doing it on individual stocks. But you got to be doing this, folks. At least some of it. Riot continues to pull back. Okay. Riot's still pulling back. So that's the one thing that's not working right now, Riot. Are we going to go again? Tell me this is going to go again. S&P. S&P. Looks like they want to take this higher again. Close it at highs. Okay, I can't take any more trades on S&P. I've had a stellar day on S&P. I know that if I take a trade here, I'm going to wind up regretting it, so I'll keep my hands off the trigger. Okay, let me just do some cleanup here. Clean up on aisle 13. Let's see what I want to. Oh, Super Micro looking good. Super Micro. I do want to add to Super Micro. I have the 50 and the 60 calls for January. I also have some Super Micro 100 call, which is out of the money. But that's not too far off in terms of a profit. Everything else, the 50s and the 60s are doing good. I have January 50s and I have January 60 calls. January 16th. These are doing well. I added some yesterday. Plan on adding again. Super Micro has turned the corner. Okay, building a cup and handle pattern. Okay, so we're building the cup. Okay, we're building the cup. There's your cup right there. Okay, pushing higher, out of the handle, above the 50-day. What else do you want? You got volume down here. Okay, volume is coming in. That's institutions right there. Okay, this is looking good. Super Micro, winner. Riot, I don't want to look at Riot. Riot's not working today. Wow, what a day. I don't want to jinx it, but this has been a hell of a day. Okay. Oh, I'm just going to Bitcoin pulling back a little bit on the 1-minute chart. Bitcoin off the highs of the day. Bitcoin's probably going to continue over the next few days. Okay, whenever you're feeling good, this is just a general rule of thumb for me. Whenever you're feeling really good, it's time to start reducing your exposure. Now, I'm just talking about people that are day trading. Day traders, scalpers, short-term swing traders, 1 or 2 days. Maybe you have options that expire next week. I've found over the years that whenever I start feeling as good as I'm feeling right now, it's time to start reducing exposure, which is what I've been doing today. A few things here and there. We got Merck. Holy smokes. Look at Merck. Oh, shit. Look at Merck. Oh, my gosh. I have September calls for Merck. September. Look at Merck. 2 Viagra candles in a row. Look at this, Merck. Beautiful. That's a beauty. Wow, that is beautiful. Farmer Jim, you still in Merck? I know you were in it at one time with me. I've been sitting on calls, Merck calls for a while now. Okay, I have September calls. September 90 call. Okay, so we're in the money. We're in the money. Okay, 90 call in the money. I've been sitting in calls all this time. Now, it hasn't hurt me that much because they're leaps, right? They're September 90 calls. But still, it hasn't gone anywhere. Not like it has the last 2 days. I'm inclined to do something with this now. Maybe take some profits and drop down to maybe a month or 2 out. But this is another stock where, it's up huge. Maybe I take some profits off here. What's United Health doing? United Health just reminded me. United Health. Okay, still consolidating. I have a credit spread on United Health too. Iron Condor, rather. Okay, can you see why I would sell a credit spread or an Iron Condor on United Health? It's not going anywhere. I do have some January 400 calls. June 400 calls for next year. June 400 calls. So I'm looking for this to move higher. It's $50 out of the money. But the point is that once you see the Bollinger Bands turn in, it's the exact same idea as Broadcom. Once I saw the Bollinger Bands coming together, I want to capture some of that IV premium, 20 or 30 basis points of it. So I want to sell premium. I have 5 of these. Okay, so that's what, $1,400? $1,400 in premium. That's another one. Okay, just keep adding these up. Imagine adding these up. You have 2 or 3 of these a week once you build your count up. And you're not doing anything else but watching this. And you go play golf or whatever. Seriously, I don't want to recommend anything to people because I don't know your individual circumstances. But if you have a small account, one of the ways, I won't say it's an easy way because you still have to do some work. But you can ask me, what do you think of this? What do you think about, Vinny? What do you think about selling an Iron Condor on UNH? I'd pull up UNH's chart. I'd look at it and say, yeah, absolutely. Why don't you sell 5 of these? Put $3,000 aside of your $10,000 account. You'd still get $7,000 to trade with. And you know what the other thing about this is? You got $3,000 set aside. You got an $1,800 trade. Okay, so think about that for a second. You got an $1,800 trade. All I have to do is just sit and wait. Now, you have so many variables. You can trade off of the other 7,000, do nothing, or you can add another one, right? And you can do nothing but condors or credit spreads, and just chill and not be worried about the markets. I don't mean to be pressing this so much. I'm sure I'm coming across that way, but just do some homework. Go check out Investing with Henry. Invest with Henry on YouTube. Guy's really good. He's pretty articulate, and he's not bullshit. I know the trades he's taken. I've been taking some of those trades too, and I know he's making the money he's saying he's making. He shows you his brokerage account and stuff, whatever. Okay, S&P turning back up. Sell premium. Then he said sell premium. Absolutely sell premium. Sell premium. Do it on stuff that you won't lose any sleep over. You can do some stocks like Intel, for example. Intel. Let's go see what Intel's doing. Let's see. Intel. Okay, Intel. All right, so another one. Here's another credit spread. This one, I believe, was about $150 per contract. So $750 going to expire in 21st November. Remember, I have a couple of these that expire 21 November. So, you know, $3,000 or $4,000 a week. You know, each week these come off. Each week they come off. Having 3 or 4 of these, just having a cycle. You know, buying a couple today for a month from now, and tomorrow buying a couple of more, or taking profits off, or some that expiring in a week or two. You know, but having 1 or 2 of these a week, that's a good way to supplement your income, especially if you're working a day job, okay, or you're very occupied in whatever it is you're doing. Because all you have to do is come in the morning, look at it, and say, "Oh, it's not too bad. What kind of market are you in? Markets are going crazy, but yet this isn't going anywhere." Trust me, if you start doing this, you're going to wonder why you didn't do it for all the years you've been trading. Why in the hell didn't do this? That was my my feeling at the time when I started doing this. I don't know what's in that, 2025. The 2007 was the financial crisis. It was 2000, somewhere around 2008, 2009. I started doing this. It was back in GTO's room. You guys that know GTO, I had a one-on-one with him talking about credit spreads. He didn't like options very much, so he told me, you know, check out some other people who do it. You know, he was an expert at trading SPY with big size. S&P's. Oh, there goes the S&P. Here I am chatting away, and the S&P is breaking out. Oh, look at the S&P go. What happened there? Oh, man. Okay, just taking a few things off here. What a day. What a day for a daydream. Bum, 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 bum. What a day for a daydream. Okay, Merck is at the high of the day. Merck pulling back a bit.
Public debut on the NASDAQ. The company stock opening at $25 a share. This company's AI-related IPOs have seen strong investor demand this year. Fairly America, a developer of next-generation electric grids, aims to deliver.
Okay, so we got a little pop, got people to chase. Looks like it's going to pull back in a little bit right here. I don't trust it. The market looks like it just wants to keep going. Look at the hedging flows. Look at the hedging flows.
And lastly, AT&T hit with a downgrade over at Barclays. That firm lowering its rating on that stock from overweight to equal weight. Barclays showing its industry tailwinds now starting to moderate and growth optionality being fully priced in. Next, we got Finance Market Minutes. Scan the QR code below to track the best and worst performing stocks in the trading session.
Yeah. I feel like just selling everything, go all cash.
Where we dish out the latest Wall Street buzz to keep your portfolio sizzling. I'm Kenny Polcari coming to you live.
Kenny Polcari, this guy is really good. If you know Kenny. All right, we're pulling back in now.
I'm going to share my thoughts on the Fed rate cut. I'm going to sit down with my good friend Barry Knapp, and I'm going to share my pear gorgonzola risotto recipe. We'll get to that in a moment. Now let's jump into the big take. So the Fed finally pulled the trigger and cut rates. Wall Street cheered, politicians took their victory laps, and the media blasted out the usual hot takes about stimulus and supporting growth. But let's cut through the noise. A Fed rate cut isn't necessarily a free lunch. It's a flashing signal about where we are in the economic cycle. When the Fed lowers rates, it's telling you something. The economy may need help or maybe not. Maybe it's growth, maybe it's slowing. Inflation is under control, or credit markets are showing signs of stress. Whatever the reason, the Fed is stepping in to grease the wheel. That can feel great for investors in the short term. Borrowing costs fall, stocks often pop, and risk appetite rises. But don't confuse a sugar high with long-term strength. Here's what investors need to remember. Rate cuts shift the playbook. Growth and tech names often benefit first as liquidity pours back in. Dividend stocks and bond proxies lose some of their shine as yields fall, and the dollar usually weakens, boosting commodities like gold and oil. But the bigger picture is this. If the Fed cuts, they may see trouble ahead. Markets may rally on the move, but the reason for the cut eventually matters more than the cut itself. The smart money uses the moment to rebalance. It's a chance to pick up quality growth names on pullbacks and stay disciplined on risk management. Don't chase every rally. Look for companies that can thrive, whether rates remain low or volatility returns. And remember, rate cuts can buy time, but they can't fix structural problems in the economy. The bottom line, the Fed's cut may be good news, but it's a warning label. Enjoy the short-term boost, but prepare for what comes next. In markets, as in life, the easy money usually comes with strings attached. Now, I'd love to introduce my next guest, Barry Knapp, who's a veteran Wall Street strategist with 4 decades of experience in advisory, trading, and macroeconomic research. I have 4 decades too, so I'm good. Barry began his career at Merrill Lynch and Fidelity for a decade at Lehman Brothers, where he helped pioneer derivatives products that paved the way for today's ETFs and asset allocation tools. He went on to serve as U.S. portfolio strategist at Lehman and then Barclays, and later held senior roles at BlackRock and Guggenheim, advising institutional investors across all asset classes. Today, Barry is the founder of Ironside's Macroeconomics, where he provides in-depth research and strategies for investors, banks, and corporations. He blends the corporate data with big picture analysis to uncover signals that others miss. Ladies and gentlemen, please help me and welcome Barry Knapp to the conversation. Barry, it's a pleasure to have you. Thanks, Barry. I love the fact that this ended up working out. You just happen to be in town because you do live in Vail, Colorado, which is absolutely spectacular. So thank you for making the time to come in.
Happy to do that.
So look, let's talk about market cycles, right? And you often emphasize the importance of historical context in the markets, but what past cycles do you think most closely resembles what's happening in the economy today, in the investing environment today, and then what?
I had this discussion at my last meeting a little bit earlier, and it was within the context of expected earnings growth as we get into 2026 and beyond. And I wrote a note early in the pandemic called Deja Vu All Over Again, the 1960s. And the idea was in the 50s, we had very similar monetary policy. We had explicit interest rate caps, which were the equivalent of large-scale QE, large-scale asset purchases. We had very tight bank regulatory policy, very low credit creation, very weak uneven growth, tepid earnings growth. But because of that monetary easing, we had a pretty good stock market throughout the entire decade of the 50s. In the 60s, inflation started to accelerate, earnings growth accelerated. Eventually, it was a crack up as a consequence of that, led into the great inflation. The cycles are different in as much as we had an inflation shock at the beginning of the cycle. We still have that lingering inflation risk later on. But as we move into 2026 and 2027, and by the way, the 60s was a very strong cycle for capital spending. So earnings growth accelerated from roughly 9% to 15%. The market was expensive, but returns were still pretty good because earnings growth was strong. And it sort of underscores the point where faster inflation is a problem for the bond market, but not necessarily the stock market within reason.
So let me ask you a question, because you just made that point about capital spending was strong in the 60s. Is that anything like the capital spending we're seeing today, specifically in the AI space?
Well, it built throughout the 60s, and it began with JFK's supply side tax.
Okay, it's a little after 2 o'clock. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is absolutely gorgeous outside. It's that fall weather. You know those days in fall where it's like you walk outside and you go, oh, wow, this is a perfect day. The sun is out. It's not too hot. It's got a cool breeze. You know the fall is coming. Some of you look forward to winter. I don't miss winter in New Jersey at all. The ice, black ice and stuff. But man, today is so beautiful. I'm going to take a couple of minute break and I'll be right back.
We build our electricity grid, energy grid, manufacturing, onshoring. All of those things could lead to a better mix of growth.
All those things are in fact happening. Specifically, look, the energy grid has to be rebuilt because the demands on energy are going to be tremendous with AI and data centers and all the energy that they suck up.
That's right. That's right. So there are differences. There's always differences. Like, you know, my brand is never different this time. It's never quite the same as the last time.
Right.
But, you know, history does inform the present. And so I do think that there could be a lot of similarities to that business.
Good. We'll get into that because I want to talk about that. But we'll get to that in a minute. Now listen, you've spent years analyzing kind of the intersection of macroeconomics and policy, right? So how do you see the current Fed policy shaping the outlook now for growth, inflation? Because we know that Powell and the Fed is concerned about inflation. We see it kind of brewing under the surface. Friday we're going to get the PCE report, which is the Fed's favored inflation gauge. And so how do you see it affecting asset prices now and over the next 12 months?
Sure. The Fed eased primarily using their balance sheet. And that easing by buying asset purchase, by buying treasuries, by buying mortgage-backed securities, continuing to do that in 2021 was a tremendous benefit to large banks, less so small banks. Tremendous benefit to households who held assets, less so to ones that didn't hold assets. When they tightened, rather than a symmetrical tightening process, meaning they were more aggressive unwinding the treasuries and mortgages that they bought, instead they decided we're just going to raise the policy rate and run QT in the background. That created an exceptionally unbalanced policy that hurt small banks. Their profitability is much weaker than large banks. It hurt households living paycheck to paycheck. It hurt floating rate borrowers. It hurt high yield borrowers to the benefit of high quality investment grade companies. For me, the equilibrium or neutral policy rate is 3%. The way I came up with that is because in September of 2022, when they raised through 3%, the third consecutive 75 basis point hike, the yen cratered, gilt market cratered, U.S. mortgage-backed securities market cratered, the pound sterling flash crashed.
Right.
That was the point when the Fed's portfolio started losing money and the bank portfolio started losing money. We need to get back to 3% to restore an upward sloping yield curve for those small banks so they can provide credit to real estate developers and small businesses. And one of the big manifestations of this, and what finally was the 2x4 that hit the Fed over the forehead, was that third consecutive large first estimate of the annual benchmark revision to employment that said we created 911 fewer thousand jobs in the year ended March because small business is really struggling.
Right.
So the Fed needs to get that policy rate down a full percent, including what they did last week, in order to take the heat off of small banks and small businesses.
So rates have to go down a point a quarter.
A point total.
A point total.
A point total.
Which we could see by January. We get 25 and 25 in October and December, and then 25 in January. There we are. That's
correct. And they've essentially pledged to do the first two, October and December. I mean, the Fed doesn't have a median forecast for the next two meetings when there's only two meetings to go. Right. Intending to do that.
Right.
Whether the next one happens in January or not,
yet to be seen.
Incoming data.
Right. But it's interesting because now that the meeting's over, you're starting to have different Fed coming out, talking their own thought process, right? So Fed came out yesterday and said, not so fast. She's not so sure.
Hi, Tickler plus 800.
She was the lone, right, the one guy. I didn't know that, but that's in there. But
I'm surmising that.
Right.
I could say that with a high degree of confidence that she's the one that either wanted to reverse the cut
right.
or never wanted to cut in the first place and sign like dissent because she wasn't a voter.
Right. Okay. So she doesn't think rates necessarily should be going low at the moment. St. Louis Muslim doesn't think at the moment, thinks we should be more cautious. There was another guy that came out, Boston. There's another one that thinks that maybe we should slow down. So even though it's 2 rates for October and December may be in question. But hold on about 1 minute because we're going to take a break and come right back.
Okay, your home, auto, and business vehicle are all protected from Progressive. Nice. It's a bit overwhelming running a business and a family. Ooh, sounds like someone could use a vacation. A what? A vacation. Like taking a break from the stresses of life and work. Oh, like when I'm logging everyone's hours so I get to sit for a while. Yeah. Oh, like when I'm making a delivery in my van and a song comes on that I like. No. So like when I take my work van to the car wash and I fall quiet in that tunnel for like 5 minutes. No, it's like when you go away and you take pictures and I don't know, I've never been on
Welcome to the internet, a magical place where anyone can be anything they want to be.
I'm pretending to be an elderly man's thing.
Yeah, you are. I'm a doctor. That's what you need to see real results. Fantastic. And I said I can remodel a kitchen.
Wait, can't?
On the internet, I can.
Don't leave your job to an unfiltered internet search. Angie has 30 years of experience finding the best pros.
Angie, jobs don't grow. Because you can set up logos not created by GoDaddy. It uses AI to create great looking logos in minutes. You know, the logo that actually looks like a horse.
At Vistaprint, we print signs so people can see your brand up close. But we also print signs so that people can see your business here. See it here, and see it here. So you stand out. Even when they're way back here. Get 50% off signs and banners at Vistaprint.com.
Actors, we can make you believe we know what we're doing, but in fact, we do not. I have no idea what these buttons do.
I've never driven a stick in my life, but my heart is full, yeah!
I have no idea what I'm doing. But that Arrow does, using AI to build logos, website, and social content. Walton Goggins goggle glasses. Because if your goggles ain't goggles, they don't belong on the goggles. If you get Arrow, it's like you know what you're doing.
A lot of big projects that we work on really require me to lay down systems or technology systems or infrastructure to buildings. I really just had to self-teach myself, and it was really through AutoCAD Lite that I landed with Autodesk Build, and I've been happy ever since. And I have recently deployed Autodesk Build into my company, and I think it's going to be a lifesaver.
Download Bingo Blitz today. Enjoy magical bingo moments and find out what's all the fuss is about. Bingo Blitz. Now that's a bingo.
Oh, and it's free!
All right, so Barry, we're back. I got another question for you. When you talk about micro to macro, the approach that you take at Ironside's macroeconomics, and you're known for starting with the corporate data and then building it up into a bigger macro picture, right? So share an example. Kind of what does that look like from the bottom up approach? How do you spot these turning points that maybe others miss?
So let's consider what's likely to happen, what has been happening, and what's likely to happen with third quarter earnings. I looked through this morning. The consensus estimates for Staples earnings are marginally negative. The consumer discretionary earnings are slightly negative, yet with revenue growth that's marginally positive. Margin. So what would cause margin pressure on?
Oh, look at this freaking market. This is insane.
Right? And so, there was always concern at the Federal Reserve that tariffs were going to cause inflation. So inflation is always and everywhere both a monetary and fiscal phenomenon. Every inflation episode since the War of 1812 began with excessive fiscal spending after the war. The central bank.
Wow, looks like they're just going to keep taking this higher.
Never do politically. In 2021, March of 2021.
And we got a little bit more, a little bit less than 2 hours and 42 minutes to go.
Government spending was increasing at a 45% annualized rate. We sent 500 billion of checks to everyone. Money supply growth was 27% in March of 2021. So that demand associated with that huge fiscal and monetary stimulus is what caused goods prices to go from 0 to 12.5% in a year. And then services inflation, as the great reopening happened, exploded as well. Today, money supply growth is 4.7 against a long-term median of 6.7. Government spending growth has decelerated to 6.4% against its long-term median of 6.5.
Okay, look at this hedging flow.
In third quarter GDP, it was negative 4.7
Wow.
in second quarter GDP. So the consumer does not have the wherewithal. So then you look at corporate earnings.
That's a $9 billion swing.
Decline on stronger revenue growth. There's going to be margin pressure. Who's eating the tariffs? Companies are eating the tariffs.
Companies are
Right. And then you look at the same thing in China, and you look at what's happening to profit margins in China, and producer price inflation in China, it's getting crushed. So the Chinese are eating it, the companies are eating it, consumers aren't paying for it. Demand is already weakened in services when they rushed out to buy goods like autos before the tariffs went up.
Yeah.
That caused services spending to go down. So there you sort of intersperse the micro earnings data, and you answer that question about who's actually.
Right, so you just said they were expecting too big. So you already know what the expectation is. So the market knows what this expectation is. That's right. Right. So the market's already expecting it to be.
What a hell of a market. What a hell of a day, huh?
Discretionary staples have been the worst performers.
Underperformers. Correct. Right. Consumer staples, I think, are negative on the year. I think it's the only sector that's actually negative on the year. And it's only two. I think healthcare just went positive.
67.25 is now 99 percentile.
0, right? Which I think is interesting. So when these earnings happen, if this is true, is it going to be a negative market reaction, or is the market already priced this in?
To a great extent, this has been the performance all year. So I've been underweight these sectors as a consequence of that. The question would be, what would cause an inflection point? What would cause earnings to suddenly accelerate? You'd need stronger consumption, stronger final demand.
There's a lot going on today.
Stronger final demand. Now, the tariff
Merck.
rate is only likely to get a little larger. Could we get into the beginning of next year and the Trump administration get frustrated with growth and do a stimulus package, the tariff rebate stuff they talked about? Possibly. It's been one of those things I've been exploring with clients the last couple of days.
Right.
There's no talk of it in Washington right now. It's not imminent. So you look at that and go, what would likely cause a change in trend? Nothing. Could earnings modestly surprise and the stocks go up on the day? Sure. But do you want to be positioned for outperformance in those sectors? Probably not.
No, but as always, it's really going to be about, they're going to report their earnings, and it's going to be what they say about the next 6 months, 4 months, 6 months, right? So it's going to be about that. And is your opinion that they're going to be kind of mixed forecasts?
Most likely, yes. I mean, when Walmart says we think we may have to pass the prices through, Walmart has the most sophisticated pricing models other than Amazon in the world. If they could have taken price already, they would have taken price.
Right.
So they're not in a position to pass it through because the consumer is not in a position to absorb it.
So you don't think then there's all this information about the consumer being strong? Do you not think the consumer is strong?
The consumer's not strong. I mean, consumption has slowed decidedly this year. Services spending has gone from 3.5% to closer to 1.25%.
Right. But when you look at like advanced retail sales and consumer spending, those numbers continue to be.
The August number was distorted by faulty seasonal adjustment factors related to back to school when there was no back to school.
Right.
So we always have to be careful with this data.
Right.
Like my diatribe about the BLS, getting small business employment wrong, getting immigration wrong, getting back to school wrong, 3 major areas of weakness. By the way, the same thing happened after the global financial crisis. When the world stopped, when Lehman went bankrupt and I went down with the ship,
Right.
For the next 5 years, we had weak employment data in the third quarter and strong data in the fourth quarter because the seasonal adjustment factors that smooth the data got distorted by that event.
Right.
And the Fed eased in the third quarter in response to weak labor data, QE2,
Yeah.
Operation Twist, and then
Yeah.
QE3
Yeah.
because they got fooled by the data.
Right.
All of us sitting on the trading desk knew that this was coming and the government statistics were distorted.
Okay, so again, this is like it's confusing because you say all of us sitting on the trading desk knew it was coming, yet the Fed that's supposed to know it's coming doesn't know it's coming.
Correct. Because they don't have guys like you and
Right,
me
they don't
that
got
sat
right.
at the trading desk.
Which goes back to the point that they should.
That's correct.
Okay, listen, I want to talk about your asset allocation views, right? Because you provide these insights across equities, rates, currencies. And so right now, which asset class do you think investors are most mispricing and why?
We've been at 70% equities, 30% fixed income all year.
Yeah.
We've moved around the fixed income positions at times into different places, but within fixed income, we have no credit exposure. Credit is exceedingly tight. I do think what CoreWeave and others are talking about, that you cannot possibly finance this Gen AI build out without some debt. It can't all be done in equity.
Yeah.
It's going to change the technicals that have helped credit spreads get tighter and tighter. I like mortgage-backed securities because I do think that small banks will start to accumulate them, and we will have some loosening of regulatory policy that will cause mortgages to do a little better. That may lead to a 5 handle on the mortgage rate, which could help loosen up some of the supply from existing home sales. Within equities, I've been avoiding consumer-facing sectors, as I said,
Okay.
healthcare as well, for
Right.
the Make America Healthy
Right.
related disruption. Long, anything to do with investment. So we've scaled tech and comm services back a little bit because it's
They've outperformed.
crazy
Right.
expensive and outperformed, but overweight industrials, overweight
Yeah.
materials. Energy's been a tougher trade, but I still like energy.
Wow.
financials have,
What a day.
For small banks, potentially a steeper curve. They're going to have regulatory tailwinds for the next 3 years.
Right.
The loan to deposit ratio of big banks is at historic lows. I strongly suspect that Treasury Secretary Bessent is asking every candidate for Fed chair, what do you think about bank regulatory policy?
Right.
It's been a big theme for him.
Right. So it's never different this time, which is your tagline. It's your research series, right? So it suggests that history repeats itself in powerful ways. Am I right? So what's one lesson from history that you think investors are ignoring?
Well, so one of the ways I tried to think about this in my latest note was to look at capital investment as a percent of cash flow. Right? And so I looked at the energy sector in the mid-2010s when we had the shale boom and then crude prices dropped 75%.
Here we go.
Over the course of 18 months. I looked at
Here we go.
from the telecom sector, CapEx from tech and from telecom in the late 90s.
Merck.
And I looked at it today.
S&P 500.
Include,
Here we go. Breaking out.
closer to 96 and 99.
Holy smokes.
35% for telecom, not 80, 85. But you have to watch that really carefully. When they start to blow through all of their cash flow and spend it all on CapEx, you'd have to think we're getting close to another blow off investment boom and bust.
Right. And listen, I really appreciate this conversation. We could talk for hours for sure, but we have to move on. So I want to bring you to my dish for the night, which is a pear and gorgonzola, right? A pear gorgonzola risotto. And the pear gorgonzola pairs two
Gorgonzola risotto. That sounds good.
almost instant, right? The sweetness of the fruit against the sharp creaminess and the tang of the blue cheese specifically, right? It traces back to northern regions of Italy, particularly Lombardy and Piedmont, where pears and gorgonzola are traditional staples.
Pears and gorgonzola risotto.
In the world, said to have been first made in the town of Gorgonzola near Milan, somewhere around the 9th century. Risotto is a northern Italian creation born out of the fertile ripe patties of the Po Valley. The combination of risotto with pears and gorgonzola emerged in the kitchens of Milanese and the Lombard household, where cooks blended the local rice with fruit and cheese into a refined yet rustic dish. The walnuts are a natural addition. Northern Italy has long-grown walnuts, and their earthy crunch balances out the creaminess of the risotto and the cheese. Overtime, the dish.
High Tick Alert plus 800.
Uh-oh. High tech.
Very elegant dish. Today, pear gorgonzola risotto is served on most fine dining menus around the world. You can scan the QR code on the screen for the full recipe, and you can thank me later. That's a wrap for today's Trader Talk, but the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music, or wherever you get your podcast. If you've got questions or topics you want me to cover, email us at tradertalk@yahooinc.com because we're always listening. Until the next time, stay sharp, stay disciplined, and stay in touch. Take good care.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
He doesn't listen public. He doesn't care. When a young homeowner starts to turn into their parent, it helps to show them just how bad it can get. So they just hang out.
No, we seem overdone, but man, we just keep going.
They don't have change in rooms here? No, they do. Progressive can't save you from having your parents, but we can't save you money when you're on home money with us. Why is he even so much here? You're asking the right questions.
I used to not have time for cases like these. Luckily, GoDaddy Arrow uses AI to build websites that manage appointments from different places online, so I don't have to do it. That way, I can focus on fixing the work of parents who thought I could learn how to cut hair from social media.
I thought it was perfect.
Cutting edge websites that manage appointments? GoDaddy Arrow can.
This is you. You have student loans. So you say, why have you?
TTI. Merck's still going here.
This is the moment you refinance your student loans with Earnest, so you can start saving with lower interest rates. Feels good, doesn't it? Earnest.
When I'm doing my family's laundry, I want something gentle and free of any pressure.
Wow, Merck has just gone ballistic. All of these pharma stocks doing well today. Apple. Still pushing Apple.
High Tick Alert plus 800.
My job is to help parents make the best possible choices for their child's health. Parents ask me many sometimes, especially children. I did the research. I looked into the clinical support, the ingredients, the team. Sure, it was built on science, with a deep understanding of what kids actually need. The truth is that parents today are overwhelmed with choices. I try to simplify that by recommending only what I would give to my own children. And true high makes that list.
All right, we got an hour and 29 minutes to go. All time frames are on buy signals. We are extended at the highs.
I'm Kenny Polkar, and I'm coming to you from the center of the action, where markets move, fortunes are made, and history is written one trade at a time. Today, we're exploring one of the biggest transformations of our time, the rise of AI in its future direction. Daniel Newman, CEO of Future Research and a leading voice on the state of AI today and tomorrow, is here to discuss the opportunities, the risks, and what the future may hold. Over the last
Merck.
few years, AI has gone from a curiosity to a revolution. What began as simple chatbots and recommendation engines has exploded into general purpose platforms. Today, AI is everywhere in healthcare, finance, logistics, and education. Generative models are mainstream, and now a new frontier is emerging. Agentic AI, systems that don't just respond, but act. They plan, they reason, and execute tasks with minimal human oversight. They're digital teammates, not just co-pilots, and the opportunities are staggering. Medical breakthroughs, scientific discovery, and wealth management.
Amazon at the highs.
Biases, cybersecurity threats, job displacement, and even national security concerns. In the future, the convergence of agentic AI with quantum computing could reshape entire industries. The question is no longer if AI changes.
NVIDIA trying to push a bit higher. NVIDIA,
The story's only just beginning. Daniel Newman,
Apple,
CEO of Futrum Group and an expert on the state of
Apple
AI,
pulling back from the highs. Apple.
is here to tell us that story. Dan, it's so great to meet you. Thank you for coming to New York Stock Exchange. You've had a busy day. You just flew from London. You were upstairs.
Amazon.
Investor Day, which is so appropriate.
Amazon pushing a bit higher. Amazon. Broadcom pulling back a bit. Broadcom.
Just a little bit of sense of how you ended up where you are in terms of your love for technology and research.
Yeah, we founded Futrum about 8 years ago. Before that, I was an author, written books, and I've been a CEO and operator. I was in the systems integration space when I was in my late 20s. I wrote my first book called Millennial CEO. I'd actually been the CEO of an IT bar in Chicago. And when I was done doing that, I spent about a year as a COO of a company that did Cisco systems distribution on the tech side. And I started writing more. I started,
S&P, we're going to do it again.
Entrepreneur. I was getting hired by
Jesus.
companies to consult, right, based on
Crazy.
as running businesses.
6715.
I wrote the book Millennial CEO. And as I was doing this, I kind of came to realize that as social was proliferating so quickly, Kenny, that the market really needed people that could translate. This stuff's hard to understand. 100%. And so that turned out to be a bit of a skill. Definitely good at speaking on the social platforms. Hopefully good on these interviews.
Listen, you're good on set. You're good on interviews. You're good on TV. You are good everywhere we go.
And now we've built quite a company. We work with nearly 500 of the world's largest technology companies. I advise 100 plus of the CEOs of Fortune companies. And we've built, AI-powered, evaluative products that we use. So we're using AI now to actually build the future of market analysis, technology analysis, and even sell-side analysis.
Well, it's interesting. Look, you may or may not know. I spent 40 years here during time before.
Looks like it wants to break out. Looks like the markets want to break out.
And I live down in Florida now, so I'm a chief market strategist at a wealth advisory firm. Manage off the long-term, that kind of stuff. And I'm very interested to see because I can already see how AI is not only changing that industry but changing so many other industries. But it brings the issue. But it brings to the top of the conversation is a lot of things that people worry about. Am I going to lose my job? Is the computer going to replace everything that everybody does?
Maybe. I mean, there's this fun, so I've written a number of books on digital transformation.
Right.
And as we know, with each transformative era, you've been through it because you watched the markets revolutionize, right? I mean, think of how much trading now is algorithmic, right? There used to be, used to be paper.
Oh, trust me, I was one of those guys.
Right, you were there.
I'm a boomer, so I was one of those guys.
Hey, boomer. But you know that this stuff is changing very, very quickly. Now, in every revolution of the past, it's been about more jobs, not less, right? And so you go through the industrial revolutions, you went through, the printing press, you went through radio, television, social, mobile, all these things, more jobs were created. But I'm more cautious this time. And the reason I'm more cautious, you kind of said this in the introduction to this show, is these agents and this technology.
6735.
I've never seen technology kind of more directly come after both white collar work and blue collar work at the same time so quickly.
Right, and I think that's a concern for a lot of people, right? Because they don't necessarily know, it goes after blue collar work. That's kind of what it's always done. But now it's coming after white collar work. And so,
We got an hour and 24 minutes to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. October the 1st, money flowing into the markets after the end of the month. Window dressing, I guess.
Uber has been amazing, but now Tesla's building robo-taxis. Right. And I'm in Austin. They're driving around my city right now. Waymo. This is great technology. By the way, more reliable than humans.
Yeah, but you get in a Waymo?
Absolutely. Absolutely. Don't even think twice about it. Look, the Waymo drives much better than the average Uber driver. It's a data-driven fact. I'm a data-driven guy.
Right.
But the bottom line is like, do you care if DoorDash would be delivered to you by a drone, or by Optimus robot, or by right? We don't. But the thing is, think of how many people created a gig during the gig economy. Now, either they couldn't make enough money in their first job, and they now are driving Uber. What happens now when all that gets replaced? That's just one example, though, of potential replacement, disruption, displacement. So what we see overall is that it's time is the biggest issue here. Because what I do believe fundamentally, as a techno-optimist, what I do fundamentally believe is that the revolution of AI will create a boom. We think $30 trillion in economic growth. But historically, the transformations have been over years, maybe 5 years, 10 years. This has happened so quickly.
Right. This is not happening over that period of time. It's happening much quicker. And I think that's what can be so overwhelming to people, right? So when you think about it, you think about the birth of AI. When would you actually pinpoint the birth of AI?
I mean, there's a lot of debate, but there were, universities and academics back in the 1950s were talking about AI. Algorithms were started to be played with 40 years ago. So the
Continue to
idea of
stretch
AI being something
a bit
new,
higher.
It's not. It's been around a long time. But in 20,
It's new to the mainstream.
well, yeah, I mean, look, a lot of us have been sort of doing things that were AI-ish for some time,
Right.
not really realizing it, like voice to text translation. Like, how long have we been able to do that on our devices? We didn't think twice about it. You've been using Google applications for a long time. Google was kind of starting to finish your sentences. It's been several years that this kind of technology existed.
Okay, looks like we're going to keep going.
Recommend to you. So these are all things that are kind of considered ML, machine learning, considered advanced analytics. The ability for it to say, oh my gosh, you like this movie or you like this coffee, you want some. This is all AI,
right?
But obviously now what we're seeing is instead of it kind of maybe recommending something to you or filtering a result in a Google search to get you the right thing, now it's actually creating stuff for you. And to your point about agents, Kenny, it's not only creating stuff,
Just reducing risk.
They will create this document and post it on my social.
Right.
I mean, just a simple example.
Well, no, it's a simple example, but it's very real because what I find is that ChatGPT, as you use it more, it really gets to understand who I am. It understands my voice. It understands the way I talk, how I write my sentences, how I use my language, right? Might be different how you use yours, but it understands me, which is that's perfect.
All right, let's see. Constellation Energy. Okay, that's finally got something going there. Constellation. Big move on Constellation Energy today.
Remember the way I write this, or when it gets to an end and you're like, hey, this creates, we're doing a lot of research with AI, and I'll talk to you more about that. You see, but you can get to a result, Kenny, where it's like, this reads just like me. And then you can say, remember this.
That's right. And that's the part that, on the one hand, it's exciting. On the other hand, it can be unnerving to people that there's this machine that actually remembers how I speak or how I write or how I present.
You prefer to be the NSA?
They might not at all, but I'm sure they're there anyway.
Yeah,
right?
so-
I mean, look, all you have to do is walk around with your phone. It's listening and doing everything you do. It's following everything you do.
In the spirit of a little bit of fun here, everything you said was super right. I mean, the net of it is like the average, I'm a millennial. I'm an old millennial, but I'm a millennial. I have been signing and agreeing to privacy policies for my entire life without reading most of them. And the younger generations are even worse. They aren't even aware. They've been getting on TikTok for years, sharing their most intimate secrets with
Microsoft still pushing. Microsoft rising.
The average consumer, though, will trade any amount of their data. They don't value their own data.
Microsoft back to the highs.
All they value is the experience.
Hold that thought 1 minute. We're going to take a break.
Are you ready to match?
Microsoft pushing higher. It's above the 50-day. This is probably going to continue.
Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom. Key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on YahooFinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
Bring your phone, wallet, keys, loose change, and more all between the seat and center console of your vehicle. It's impossible to retrieve. Oh no, not again.
S&P
With Console Catcher.
pushing higher. S&P.
It's flexible, easy to clean, and even easier to install. Simply place the Console Catcher on the base of the seatbelt buckle, and that's it. The Console Catcher keeps anything from falling between the cracks, and it even doubles as a handy organizer. Scan the code on your screen right now to get a complete set of console catchers for both front seats. And if you scan the code on your screen and order right now with this special TV offer, you can take 20% off. If you have a car, truck, minivan, or SUV with that frustrating gap between the seat and console, you need the console catcher. Simply push it into place, and the console catcher moves with you. Scan the code on your screen now and get your console catcher today.
If you've ever tried to clean a garlic press, you're going to love this. Introducing the Great Garlic. No chunks, no squeeze, no stuck pieces. It's faster, cleaner. If you cook even a little bit, you're going to need one of these. Scan the code on your screen now.
Introducing the Great Garlic, your ultimate kitchen companion. Just place a peeled clove of garlic under the grate, lock it back and forth. Say goodbye to tedious chopping and messy mixing. Scan now and find out for yourself just how great the Great Garlic is.
We are really this in the innovative space to help people that are prepared. When we talk about equipment reliability and safety, that's key. You need reliability. Having an online platform like Large changes the game. In the past, disposing of surplus apparatus was basically done by the Department of Public Works. Basically, take what we could get, which wasn't much.
Tesla, what are you doing, Tesla? Tesla still grinding. I rolled that out this morning. Tesla rolled out another week. Futures continue to climb.
Not a very good feeling, is it? I'm Blake Anderson, and if you've ever dropped your phone, wallet, or fries between the seats,
S&P still going. Where is this thing going to stop? We're at new highs, new all-time highs. Somebody on Pennsylvania Avenue is sitting there smirking.
if you don't have one yet, scan the code on your screen now and get a console catcher today. And stop feeding the seat gap monster.
All right, so when we talk about that exact point, is that they just they have been the data all along. When Facebook started, it was all about your data or my data is what made them money.
The service is free, you're the product.
That's right. And I think it took time for a lot of people to recognize that. I don't think that became obvious to people, or at least a lot of people right away. It's certainly obvious now that you know, if the data is free, you're the product.
They don't care. Most of them.
They don't care. Yeah, they don't care. And so let's talk about this. Let's talk now about the leap from, you know, we went from AI, simple chatbots, then to agentic AI. Now we're going to make a leap into this thing called quantum computing, quantum AI. Because I think we're very much at the beginning stages of that. So let's talk about, you know, we started with AI, which was very elementary. Apparently it feels at least now elementary, right? Now we're talking about agentic AI. Now we're going to make this next leap into quantum computing, right? Like we started out.
Got an hour and 14 minutes to go.
Here at the New York Stock Exchange today, and it's listed here at the New York Stock Exchange, is in that space, on the cutting edge of quantum computing. Yeah. Talk to the audience about what that means.
Well, again, quantum is a leap, not just a show mover. Sorry, but quantum is going to be this next really powerful wave of capabilities. It's going to kind of work in parallel. Right. And that's what a lot of people don't understand. It's not like AI is going to go away and quantum is going to enter the space. Quantum is going to be additive. By the way, quantum isn't all one thing. You get quantum networking, which we talk a lot about crypto, for instance. Right now, one of the biggest risks in the world to our monetary and financial systems is the fact that quantum cryptography quantum technology could break the problem. It could break the security, RSA security that's used to secure blockchains, secure Bitcoin. And that could happen in just a few years. The Department of War is looking into this. One of the things that was presented today was that is a big concern. So quantum security can actually help prevent that. So that's one really important use case.
Well, could it help prevent it, or could it actually be both? It's both.
It's both. It's just like AI, right? AI can be used to hack.
Right.
AI can be used to secure.
That's right.
Quantum technology can be used to break. Quantum safe cryptography can be used to basically prevent that from breaking the.
So let's talk about this. Let's bring it right.
That's just the first thing.
All right. Let's bring it right back here. Here we're at the New York Stock Exchange. Billions of stock. billion of transactions happen every single day in the financial markets in the United States, right? What's going to prevent, to your point, what's going to prevent quantum computing from breaking the code, getting in here and creating chaos in the markets?
Well, it's going to be the companies that are heavily invested. It's companies like IonQ, it's companies like IBM and Google who are making massive investments to build this technology in parallel with AI,
Right.
To make sure that they are going to secure these networks.
Right.
These networks that, by the way, all these transactions take place on these networks. There's no money. Nothing's really.
There's no money.
It's just ones and zeros in different states. And then, of course, quantum computing, which is the next phase of computing. And again, it's going to be quantum with AI. So companies like NVIDIA are partnering with companies like IonQ. IBM is building things with IBM software and IBM's mainframes, transactional databases, to be able to ultimately deliver the future things like anti-money laundering. You asked about financial, right? Quantum could potentially help AI do better. Drug discovery. So IonQ shared an example. They partnered with AstraZeneca to try to accelerate drug discovery because they're already good at using high-performance computing and AI. But quantum can do things and does things differently. So, for instance, quantum tends to do very well with things that have less available data. So quantum can, where AI needs lots and lots of data to solve a problem, quantum might be able to address a different part of a similar problem with molecules or drug discovery to be able to help identify the best mix of chemistry to be able to build the next generation of drugs. And that's really where they're looking at quantum, is to solve those kinds of really hard problems. But it's not quantum or AI, it's quantum and AI. Right, agreed.
S&P still going.
Here's another question. Do you think that there are going to be 2 or 3 or 4 industry field, medicine, healthcare, financials that are going to really go? It sounds like it's medicine and healthcare really on the cutting edge.
Well, you have DARPA getting behind companies like Google, like IonQ, and investing bigly, that's a word, because they do see it in really critical fields. Also in engineering, right? Like civil planning, civil engineering, because those are really complicated issues, getting people power, food, water. And by the way, quantum and AI is really interesting because quantum is very power efficient. So one thing about AI that everybody's talking about is energy.
Is energy demand.
Yeah, right.
And quantum doesn't draw that much energy.
So quantum can actually help with problems. And quantum and LLMs can actually make LLMs produce better results, but you can also make them produce better results with meaningfully less energy utilization. So that's, for instance, something that can be really useful if you can get LLMs and AI and quantum more.
So that's interesting because that's not a story yet. And maybe that's a story that's coming out because when everyone thinks about AI and they think about this computing, we've all been talking about the massive energy demands that are going to be on the grid around the world, not just here, but really around the world. That's an interesting point that I had not heard myself. It's more efficient.
It is more efficient. It is something that's being studied, and it is something that we should be talking more about.
Okay, so is quantum, in my mind, when I think of potential quantum medical, quantum ultimately, quantum computing and AI ultimately design a protocol for me that's different for you, even if we have the same types of disease, whether it's cancer, whether it's dementia, whether it's Alzheimer's. Ultimately, do you think my treatment could be different from yours based on, I don't know, my genetic makeup?
That's a pretty specific problem. I think applying quantum to solving things like chemistry or medicine.
Right.
What I'm saying is right now, with the problem you described, is actually something that AI does incredibly well. Without quantum. Now, could quantum and energy efficiency drive those things so that when you're doing those particular types of queries, it does it more efficiently?
Right.
Yes. I don't think we've gotten to that layer yet, but for instance, like, I went on and I had like a bruise, and I took a picture of it and I dropped it in AI, and I got a better answer for what was wrong with me than 3 doctors I talked to. I mean, this stuff is really efficient, and I'm super into my health. I'm a big peptides guy. I'm invested in sleep, in data tracking. I mean, you combine, your health data. You put your diet into something, right? You put your sleep habits in, your exercise habits in. AI is an amazing optimizer. And I do think in the world in the future, we need to go from a reactive, pharmaceutically driven society to a proactive, longevity-focused, personalized medicine society. AI is going to empower that.
Yeah, I would absolutely agree with you. I think actually the pharmaceutical industry is are in business to keep you sick versus to your point.
Oh, Supermicro's on the move here, right? Supermicro.
Using the AI with the data that they have, your own data, right? Your sleep data, your workout data, just what you're eating, right? Are you putting it in there every day? For instance, you're putting in what you eat every day, or is it telling you what you should eat?
Yeah, I mean, for me, I've been on a pretty on personal narrative here. I've been on this really, really intense wellness journey. Like I said, at the beginning of the year, I put on more weight. I was a little heavier than I've been in a long time. I was a soccer player in college. I fell a little out of shape, and it was affecting my everything, energy, my work, my focus, my clarity. And that's when I started, got my diet straight. I did a GLP for a month, reset my diet. That was super interesting. First peptide I ever tried, by the way. And then I actually, cleaned up eating, got focused on sleep again. I quit drinking a long time ago, by the way. Big recommendation for anybody to get off it. It's great.
100%.
But I got an Apple Watch. I used to kind of joke about people that tracked everything.
Yeah.
Started tracking my sleep. If I get 2 hours of restorative sleep. So I started biohacking. And by the way, and then with all this data I could put in, I could start to optimize my workouts. I can figure out what foods I eat that, what bothers me. Like, what do I not want to eat on a day I'm going to be on a plane?
Right.
To know that I'm going to be feeling my absolute best.
Right.
AI plus data is amazing for personalizing these kinds of journeys.
Well, I gotta tell you, because we gotta wrap this up. We're out of time, but that whole story, that personal part of the story is great because it brings it home to a lot of people. Certainly, you look great. I don't know what you looked like before, but you look great today. So it's certainly helping you. We should talk about that.
Happy to share. I love it so much. I'm invested. I'm going to launch a business pretty soon in the peptide space, personal medicine, telehealth. I'm going to invest in a couple of great young founders because I actually did this stuff for the last 7 months of the journey to reduce my body fat from 22 to 12%.
Right, so
I'm just telling you for AI, but AI was at the core.
Yeah.
Every part of this journey for me because it helped me so much more than any medical professional I've ever worked with.
All right, so we're going to talk about that after this interview. Anyway, it was such a pleasure having you here today. I want to do this again with you because once I launch the show, I want you to come back.
Absolutely.
I think this is a fantastic, conversation. It is the future. You are right at the center of it because I see you everywhere, and I think you just do an outstanding job. So thank you for joining.
Thanks, Ken.
That's a wrap for today's Trader Talk. But the conversation continues. Subscribe on Apple Podcasts, Spotify, Amazon Music.
Okay, seeing some profit taking up here at the highs.
Questions or topics you want covered? Great. Email us at tradertalk@yahooinc.com because we're always listening. Until the next time, stay sharp.
Markets feel overdone up here.
And stay in touch.
It's only an hour and 5 minutes to go, but it does feel a little overdone.
This content was not intended to be financial advice and should not be used as a substitute for professional financial services.
Are you ready to master the markets and, dare I say, become a better leader in the process? Well, Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor or just starting your financial journey, we offer invaluable market insights and strategies to help boost your portfolio, build your wealth, and make you a successful investor. Podcast that will make you a smarter investor. Welcome to Stocks in Translation. I'm your host, Jared Woodbury. Welcome to Financial Freestyle. Hi, I'm Bob Powell, and welcome to Decoding Retirement. Welcome to Living Not So Fabulously.
Welcome to Trader Talk.
I'm Elizabeth Cora. Welcome to The Big Idea. Welcome to Yahoo Finance Sports Report. Welcome to Word Money. I'm Patrick Murphy. I'm Dan Coons. From Wall Street to Main Street to the C-Suite, we are your daily lifeline because behind every great investor is Yahoo Finance. Join us on yahoofinance.com, the Yahoo Finance app, or wherever you get your podcasts. Are you ready to master the markets and, dare I say, become a better investor in the process? Yahoo Finance has you covered with our new full suite of original podcast content. Whether you're a seasoned investor picking up new trends or you're just starting your financial journey, we offer invaluable market insights and strategies from some of the most influential minds on Wall Street and the boardroom for key insights to help boost your portfolio, build your wealth, and make you a successful investor. Join us on yahoofinance.com, the Yahoo Finance app, your favorite streaming platform, and wherever you get your podcasts.
Get you on the flip side. you're starting a GLP-1 medication, here's why many people choose Brelo's offering. Brelo offers two options, semaglutide and tirzepatide. Both these support appetite regulation as a part of a provider-guided care plan. But the main difference, semaglutide is a more affordable starting point. Getting started is easy. Just complete a quick secure questionnaire.
Oh boy, what a day, huh?
And securely. Start your Brelo journey today from the comfort of your home.
When it comes to bath time, our dogs deserve better. During their most personal moment,
Oh, please, this stupid commercial.
it's built in.
How stupid can you be? What's going on here? Let's try this again. Let's try that again. Hope you're having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is 3 p.m. straight up. Okay, let's see. We got an hour to go. Hour to go. One hour to go. All right.
Love to hear your stories about work slop. Thanks for watching. Closing bell. All right, Brian, thanks so much. Welcome to Closing Bell.
What was that? What was that? Let's see. Hedging flows continue to edge higher. Okay, all of these trades have come off now. You can see they came off recently. The markets are moving higher. You can see these trades coming off on the left over there. Okay, these trades going off, pushing higher.
This make or break hour begins with a new quarter for stocks and what feels like a one-sided argument.
It is a one-sided argument, and you're losing the argument.
Stocks are heading higher from here.
Net OI. Okay, there's a little gap in here between these two levels, 67.25 and 67.50. We got an hour to go, less than an hour to go.
Okay. There's a bankruptcy of First Brands. It's an Ohio-based auto parts manufacturer. But a lot of stories being written about it. People are talking about it, wondering whether it's the canary in the coal mine, so to speak, of private credit. They borrowed a lot of money away from banks. You've had talk.
I don't know what's going on with CNBC. Their broadcast is messed up.
About the so-called shadow banking system for a very long time. And there was another, a subprime auto lender, Tricolor Holdings. They filed in September. They had strong credit ratings, and then all of a sudden,
Futures headed back up to the highs of the day.
things to worry about in what people
Set just a few minutes ago.
one of the hottest and fastest growing asset classes out there, private credit.
Look, it's an issue, and the reason it's an issue is pretty simple. What ended up happening is you were able to borrow money very easily. So you borrowed more than you needed, and you did it on aggressive. Assumption. So if anything ended up happening that was bad, you were going to have a problem. And that's what's happened with these two companies. So if you look at what's happening in the market, what's happening is the economy is slowing down. So because of that, you're less earnings, so you're going to have more issues. So this could be the beginning, but the one thing that you got.
All right. So they're having a bad problem with their broadcast.
Leading to the downside down 1%, led by Meta. We'll take a look at that in a second. Also, materials off by about 1%, always XLB. Now, here is the NASDAQ 100, and you see a lot of green, especially in the larger issues. There's Tesla up over 3%, there's Amazon up over 1%. And as I said, Meta kind of dragging down communication services, which it also shares with Alphabet there. Meta down about 2%. And by the way, NVIDIA hit another record high yesterday, so it was persistent in the close. That'd be another record setter there. So lots of records to watch today. And we're seeing this also play out, some of this strength in the Dow. You got some of these larger cap names, but guess what? Financials, energy, a little bit in the red here, along with some of those consumer discretionary names that are not the many cuts. So like Walmart down 1%, Home Depot down 1%. By the way, Walmart
S&P making new highs. S&P.
Up about 2%. And I'm going to flip over to make sure that we get to our pharmaceuticals here. Check out this. Healthcare is really surging today. Eli Lilly up almost 9%. AbbVie up 5%. AstraZeneca up 10%. So really impressive work here by the XLB pharmaceutical sector. Thank you, Jared.
All right, thank you, Jared. Turn to Washington, where the government gears have grinded to a halt. Ben, can you unpack for us the fact that we are in day one of this, but also the Trump administration may be positioning here, Ben, for some more permanent decisions on spending?
Absolutely. Yeah, there's an old maxim here in Washington that you should never let a good crisis go to waste. And I think you're seeing kind of a version of that here in Washington today in some of the Trump administration's moves, especially in the economic policy realm. On the one side, there is some moves to wall off a lot of their economic work from shutdown effects. Tariffs is a big one. Tariff investigations are going to continue in a way that's different than previous shutdowns. So Trump's tariff rollout will be apparently unaffected by the shutdown. More importantly, though, are moves that I think is going to expand Trump's economic powers, potentially using the shutdown as an opportunity. I think it's notable that sort of two moves right off the bat came from the Trump administration to move on funding that they've been wary of for years now. Budget Chief Ross Dobb announced a hold on roughly $18 billion in infrastructure money for New York City. That's, of course, the home of Chuck Schumer and Hakeem Jeffries, so that's pretty notable there. And then there's also the canceling of nearly $8 billion in green energy money for blue states. These are projects that the Trump administration
Looks like they want to push this a little bit higher.
And clearly the shutdown is an opportunity to move there. The second area of expansion is in terms of this Trump promise to conduct mass firings or even cut whole departments using the shutdown. We don't have a lot of clarity on exactly how that's going to play out. We've heard some conflicting timelines. Do the firings start in 2 days or in 2 weeks? We still don't know a lot of those details there. But either way, these are both efforts by the Trump administration to kind of use the shutdown to move forward on their priorities. It both puts political pain on moderate Democrats to flip them to their side and the shutdown, but it's also, these are things that Trump has been talking about in some cases back to his first term, that he's clearly using this as an opportunity now.
And then we did see a lot of language on Capitol Hill Wednesday and more going to end the shutdown. Any progress there? Yeah.
Not a lot. Definitely, you're right that there was a lot of talking today, a whole lot of television appearances, a lot of press conferences. But I think the overall sense here is we're in a similar place in terms of the chances of a shutdown as we were last night. I think a good indicator of that is votes in the Senate. We had votes
making new highs, making new highs.
On a Democratic and Republican plan, so 4 votes in total. They all failed to reach the 60-vote threshold, and it's notable that they all failed with exactly the same margins. The Democratic plan went down 47 to 53. The Republican plan went down 55 to 45. The exact same senators voted the exact same way on both days. I think that tells you that it increases the sense here that this could be a longer-term shutdown. There's not going to be a quick out or a quick collapse by Democrats on this front, and I think it's increasing the focus on Monday. We're going to get votes starting not tomorrow, but Friday after the October holiday, but Monday is when all the lawmakers are back in town, and that's when real negotiations might begin. In other words, we're in for this for at least a few days, is the sense at the moment right now.
All right, Ben Woodsworth, thank you. So let's bring in Tobin Marcus, head of U.S. policy and politics.
Hey, watching these trades close here, these 0-day trades. If they start to close these, we could see the markets drop off.
exactly this is going to go on for? How and when could this end, Tobin? What are you telling those clients?
Yeah, absolutely. Thanks for having me. Duration has certainly been a common question we've been getting from institutional investors as they try and get their head around the outlook here. In terms of timeline, I think we're probably looking at a shutdown of a week or two. I don't think that we're set up for a very, very long shutdown like we had in 2018.
IBM.
That shutdown, a partial shutdown, went on for 35 days. I don't think that there's going to be an appetite to hold out that long from Democrats, as I think we want to most likely to vote first. But it also doesn't look like something that's going to be resolved in a day or two, because we've had some very, very short shutdowns in the past. So in general, I've been saying that the closest analog
Apple.
shutdown is 2013.
Apple's just grinding along, taking its time getting back to the highs. Apple. Apple just flagging here a pennant pattern. It looks like a triangle. All right, I had day trade on Apple. I'm going to go ahead and take this off.
Yeah, the mid-month military paycheck cycle on the 15th, since those are semi-monthly, whereas the civilian pay across agencies is bi-weekly. That's something that a lot of people in Washington have circled as a possible end date. That doesn't really differentially apply pressure. That's something that neither party really wants to see active duty service members go without pay. The administration has already talked about, maybe fudging around some lines, using some mandatory appropriations, including the money from the reconciliation bill, the big beautiful bill, to try and keep those paychecks flowing, minimize that pressure.
Supermicro, good day on Supermicro. Good days ahead, looks like.
Have you seen any good polling suggesting who the American public is going to blame for this shutdown?
So the polling heading into the shutdown, perhaps somewhat counterintuitively, has largely suggested that Republicans get the plurality. As always, the blame is spread around. I think people generally look at dysfunction in Washington and think there's plenty of blame on both sides of the aisle. But I think particularly for a lot of voters who are not paying a ton of attention, the intuition is Republicans are in charge of both parties in the White House. And so if something's going wrong, it's probably something they've been watching Democrats have no influence whatsoever on policy outcomes all year, whether that's taxes or tariffs or DOGE or anything else. And I don't know that there's a ton of appreciation.
Okay, you can see them selling this. You can see them selling this right here. This position at 67.18. Okay, looks like they're taking that off right here. They're taking those positions off, so we're rolling over, starting to move lower. I just think we put in the high of the day, and we're going to pull back in a little bit. Markets are very strong. New York FANGs, for the most part, looking pretty good.
To the extent that they are not being a real lightning rod for blame, I think that's going to make a little bit easier for them to hold up.
So a shutdown means that some economic data does get delayed. How, if at all, in your opinion, does that impact the Fed?
Yeah, so I think the payrolls this Friday look very likely to be delayed. It's hard for me to see how we can get the government real time to prevent that from happening. Beyond that, we're looking at CPI and PPI. CPI coming out on the 15th, so that's possible that we'll be back by then, possible that we won't. That's a closer decision. And in the meantime, the weekly unemployment insurance claims also will be delayed. So, market participants are going to be operating a little bit in the dark. There's a little bit of extra focus on today's ADP data for that reason, because we may not get jobs data this Friday. But by the time the Fed is doing its next meeting on the 28th and 29th, I think in all likelihood they're going to have that data there. It's going to be very unlikely, in my view, that we're still in a shutdown at the end of the month when the Fed needs to make that next policy decision. And so I think the rate cap is not really going to be influenced by the potential absence of that data, and it's just going to be market participants' ability to kind of look forward, anticipate what that decision is going to be. That's going to be a little bit delayed during this pocket when we don't have the visibility.
What impact, Tobin, as we sit here right now, would you expect this to have on the market?
Generally, very little. I think everyone's heard at this point. There's been lots of people saying it, that shutdowns tend not to influence the market, and that's been the strong historical regularity. The question in this case has been, is something different this time based on these threats of permanent firing
that President Trump and OMB Director Russ Rhodes made. Ben was talking about that a moment ago. I don't think those threats are terribly credible. A shutdown is really neither necessary nor sufficient to make that happen. And so I think in an environment where they first floated mass reductions in force back in February and March when DOGE was really at its peak, and I think we've seen Hannah touched the hot stove on that a little bit within the administration as they got their cabinet secretaries in there, as there were some more power centers within the administration to push back on Elon Musk. Generally what we saw was agencies have jobs to do. The people who President Trump is charged with running them want to be able to do those jobs, and so they're not really that eager to cut their workforces. And whether we're in a shutdown or not, I don't really think that calculation changes. They're not going to be compelled to do mass firings by the back of the shutdown. It doesn't enable them to do anything they didn't otherwise want to do. So the Democratic side of the aisle is mostly that that's cheap on. We'll see if that changes. But absent those permanent firings, mostly we're just looking at the timing of economic activity. The amount of sort of economic output that's permanently lost is quite minimal. And for now, we're not really expecting there to be much of a permanent effects.
Gentlemen, great to see you. Great to have you on the show. Thank you. Coming up, Corteva is growing in new ways. It's separating its seed and pesticide businesses. We'll explain what that means to your portfolio and the future of that company. Plus, Reddit stock taking a tumble. We'll explain why. And we're watching Netflix. Elon Musk has some strong opinions about some of its programming. Those stories and more coming up when we return. Stick with us.
Stronger than steel, lighter than aluminum, trusted in aerospace, medicine, advanced engineering, and now redefining the way we prepare food at home. Titanium is prized for its strength, purity, and resilience. Resists corrosion, never absorbs oils, remains flawlessly food safe without ever breaking down. Microplastics, a breakthrough. 3-piece cutting board set, double-sided, ultra lightweight, and built to last. With a sleek, metallic finish, it transforms your kitchen. Titanium Edge, now available through this exclusive television offer. Scan the code to order now.
Wish you could yell at mosquitoes to stay off your skin. Now you can. Mosquito Band. This tech marvel harnesses sound waves to create an invisible shield. No nasty chemicals or odor. It works up to 130 hours on a single fast charge. Get a cool looking mosquito band for every member of your family. It's the healthy way to yell, "Stay away, mosquitoes."
Sigue siguiendo de nuevo esta mañana.
Los precios están subiendo, pero no en enero. Bajamos los precios y te los garantizamos por 5 años. Una línea con 5G sin límites, solo $40 y punto. Y te regalamos un teléfono 5G gratis. No en la tienda o la web para más. Solo en Meta.
What sort of got me last night, I needed a website. Figuring out how to make one was pretty hard. Oh, to go to Eddie Arrow, I used to
Microsoft, nice move on Microsoft. Would like to take some of that off, actually. Microsoft. Okay. Lulu. Lulu.
By accusations, the Mike Burge only won to sell wings. What they're saying out there? They're saying the quarterbacks are scrambling apparently to sell eggs. Oh, Baker Mayfield's a bread influence. Football is not employed to sell food. When football makes you hungry, order Uber Eats.
investors appear to be shaking off the risk of the government shutdown for now. The S&P 500 touching a new record. Joining me now is Keith Gangle, Radiant Investments Senior Portfolio Manager, and Lorena Arucci, T. Rowe Price Chief U.S. Economist. Welcome to you both. Keith, I'll start with you with this government shutdown, and what do you make of this market reaction or the lack of reaction?
Palantir, turn it back up. We're just seeing some profit taking up here at the highs. You can see this position. If you look close up here, you look close at this level right here. Watch, this trader's coming off. This trade's coming off, so they're taking profits. You can see that trade coming off right there. And that selling is causing price action to push lower.
Keith, when you saw as an investor that it looked likely a government shutdown was on the way, and now it's here. You know, just most basically, Keith, did it cause you? Did it motivate you in any way to change how and where you were going to put money to work?
No, not at all. I mean, what we're looking at is the overall performance of the overall market. It's been very strong the last 2 years. This year, the S&P is up 14%. So we're more concerned about what's happening now and kind of fundamentals. Earnings have been fantastic in Q2. Q3 is right around the corner. I think that's going to be the next big pivot point, deciding if we need to shift our portfolios. But right now, we think we are participating. I think the market is running higher to year end, so you don't want to get too defensive. But on the other hand, you don't want to get way over your skis, and all these names that have had a big run, you may want to dial back a little bit.
Marina, I want to bring you in here as well as the economist on the panel. How are you thinking through this shutdown, Marina, and possible impacts and ripple effects? Doesn't look like we're going to get that jobs report on Friday, Marina.
So a couple of things to remember here. I think we need to know how long the shutdown will last. The longer it lasts, the bigger the economic effects. But as we just discussed,
Yeah, whatever.
particularly this morning, the change that we saw.
Okay, we got some selling coming into the close.
Fewer jobs, particularly in smaller and mid-sized businesses.
Just profit taking. Supermicro still pushing. Supermicro still pushing. Apple.
Opinion of ADP data was not particularly strong, and this is showing, a continuingly weak labor market.
Amazon, just off the highs of the day, Amazon.
Biggest drop we've seen in 2.5 years. How, if at all, do you think that this affects the Fed's actions in October and then potentially in December, since you noted that we could see some further delays with any of the labor reports we get, depending on how long the shutdown lasts for?
Just because investors are reading the data doesn't mean that government officials will not be able to get a good read of the economy. So now we do believe that the next two Fed meetings are live, but we do expect that October would signal a rate cut. And this is for two reasons. You are clearly still seeing a weakness in the labor market. Now, how much weakness is the big question. The Fed summary of economic projections believes you can get to an unemployment rate of 4.5%. But when it comes to payrolls, which again, we may not get this month, or at least this Friday, rather, you still have things in line with Fed sees the direction of travel going. They're not really watching necessarily for that overall unemployment rate.
Big move on the daily, Supermicro. Finally getting that move where Bollinger Bands, if that lower band starts to open up too, look for a follow through towards 60. That's my target at the January 60 calls and the 50 calls.
said, we've hit 6,700 for the first time. We believe that we would get
Super Micro, pretty decent move today. Plus 7%.
Yeah, I mean, we had an uncharacteristically strong September that really defined what is typically some seasonal weakness there. So on equities then, Shanali, what is your outlook when it comes to October? Because you are anticipating some volatility on the horizon.
Jane Goodall's passed, yeah.
October remarkably low. So yes, of course volatility could be expected. We've seen a really major run up. It's not surprising here to see any pullbacks. We think they'll be limited. Now we think that the financials will really kick off the earnings season in a very interesting way here, because with all of this going on, you have seen the yield curve at a level that has remained quite steep, or steep enough to make investors happy and comfortable about both the loan growth you're seeing in all the economic data that's coming out, and all the data that's coming out about loan growth. You can see money made there. You've seen the big IPOs come back. You've seen debt capital markets remain strong. That is all money for the banks. Now, with that said, the question is, how strong will trading results be? I would also say, and the thing that my team and I are preparing for, you've seen a lot of deal announcements recently. Banks typically make money off of the deals that are closed, which means all the deals we've seen of late, they're probably not clocking the fees for those deals yet. But that does mean that's future money down the road. So we don't think that everything is baked in yet. We think that there's more room for the banks, albeit we hope to see that credit quality holds up. Because in this earnings season, we are also watching closely for the health of the consumer. There have clearly been a lot of concerns about a K-shaped economy, lower income consumers, and really the rubber hits the road there, not only just for retailers, but also for banks, particularly smaller banks that might be more exposed to low income consumers at a time where people are getting more concerned with the labor market, are getting more concerned about the ability of what is a larger portion of the population to spend. Now, the low-income consumers don't account for as much of the PCE as the top 10%. But with that said, we are watching closely for credit quality in particular. And Shanali, with all of that said, as we look into coming into earnings, expectations to be rising close to 8%, in terms of the third quarter. But with the choppiness that we've seen and these continued rallies, we're hitting another high on the S&P just today. Do you think with the valuations where they stand that we can sustain this upward momentum that we've been seeing, and can the market just continue to keep shrugging off these major events? In conversations with clients and other investors, I've got to say, there has been a tremendous range of views here. Everything from are we in 1990?
Okay, Super Micro looking pretty good.
We could be at the beginning of a new cycle here where we see a lot more growth from the biggest of the big companies.
All right, we got 32 minutes to go. 32 minutes to go. I'm just reducing exposure across the board.
Those are two widely different views. Now, with all of that said as well, what really stops the rally from here, that's yet to be determined. I've got to say, one thing that's been encouraging just in the past couple of days is that you've seen those yields come down once again. I think there was a lot of worry in the market about a decoupling. If you see lower or shorter term yields decline, whether you see longer term yields rise anyways. We certainly saw that last year on the last rate cut. You saw the 10-year yield still take off.
Super Micro going vertical.
Again, we have hit that 4% lower bound, if you will. We are now back at 4.1%. We were drifting closer to 4.2% last week. If you can see that continued momentum in the 10-year yield falling, there is a lot of promising signals in there, because you could see that mortgage rate continue to decline on the heels of that as well. That could have serious implications for the mortgage market, housing market in particular. Unclear all the ways that will shape
Do yourself a favor and take some profits off the table. Reduce the number of open positions. Okay, let me just check my credit spreads and iron condors. Broadcom. Okay, Broadcom, good. Charter. Fortinet. Gemini. NVDX. New NVDX, watching that. NVIDIA. Okay, NVIDIA having a good day. NVIDIA breaking out yesterday above this baseline around 185. 190 is the next level, call wall.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
Supermicro.
I'm Diane Kinghall on the floor of the New York Stock Exchange. When markets react, we are live with analysis that matters. Watch now, only on SchwabNetwork.com.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smart with Schwab.
Welcome back to Market on Close. I'm Marley Caden alongside Sam Bottis in New York. Shares of General Motors are higher on the day after the automaker reported a sales increase of 8% year over year, powered by strong sales for its EV cars. Now, they sold 66,000 electric vehicles as customers sought to take advantage of that EV tax credit, the $7,500 credit that expired yesterday. So total deliveries for the year have now topped 144,000. That all of 24 was 114,000. As we take a look at the previous 4 quarters, you can really see the change over here. In the first quarter of 25, we saw a delivery of just under 32,000 here. But as people rushed to get ahead of this expiration of that $7,500 tax credit for EVs, we did get up to 66,501 EV vehicles delivered here. So General Motors seeing a huge uptick in EVs. This, of course, comes ahead of Tesla's anticipated third quarter sales, which are set to be, according to analyst notes, are supposed to be impressive. So those remain to be seen, but GM posting very strong third quarter sales of EVs, obviously looking at Q1 of 2x over that. But we'll have Tesla's numbers tomorrow to see if they performed as well. With that, Sam, I do want to send it back to you in New York.
Thanks very much for that, Molly. Okay, well, let's discuss artificial intelligence now and how more and more companies are mandating AI adoption. Joining us now is Sumit Dhawan, who is the CEO
All right. Guess they're not done.
We know that the pace of AI adoption is
Nice reversal.
Dan, thanks for having me. Listen, it's good and bad. You know, as a CEO, I want AI adoption to take place in my own company because it's truly delivers significant value because it can do things much faster, we can innovate things, we can serve customers better. So it has a lot of promise because it can do the job of humans in many cases, a repetitive task with some degree of non-deterministic intelligence really well. However, the problem is that it's being adopted without any kind of governance and control over what it can and cannot or shouldn't do. There aren't any kind of regulations. And more enterprises are adopting AI and then just later on realizing that when they adopt AI, it's kind of like feeding the entire company's enterprise information into this technology system, which it doesn't know how to handle. And now they're sort of reacting to it and somehow catching up to what the right degree of governance that's required to make sure that it's being adopted in a safe fashion.
And Sumit, you have Marley here now out of Chicago. You know, as they're adopting faster than governance can keep up, what are some of the resulting risks of that action?
You know, I sort of say that AI is like the drunk uncle, as we saw in Saturday Night Live. You know, AI feeds off of data. So it knows all the information about your business, everything. Customer information, proprietary information that's about how products are made or any kind of programs and M&A that's going on. Once it's got that information, AI just doesn't know who it should share what information with. Okay? And that's where the risks come in. Because once that information is there, if this system with AI and multiple employees are interacting with it, you just have this huge risk of oversharing information in the wrong way, which leads to compliance risk of reputation because you're sharing information that should be shared, and potentially losing some core advantages that AI was designed to be put in the first place.
Okay, yeah, we've all got that drunk uncle. I'm not pointing any fingers, but look, you have identified a risk. You are in the business of cybersecurity, so obviously you have your finger on the pulse here. So then, what's the solution? I mean, you know, this is a good and a bad thing, but I mean, what's the prescription here as far as some of that governance? Which companies are best placed to kind of address some of the risks that are out there right now?
I think there is a technology thing and there is a governance thing. First of all, I strongly recommend this needs to be a board-level topic. Just like AI adoption is, adopting AI, you know, if you want to drive fast, you're going to put brakes in your cars. You're not going to go fast without brakes because brakes help you go fast. They're not designed to just stop the car. They're designed so that you can drive fast. And that's where cybersecurity comes in with AI adoption. The two are highly interconnected because of just how vast the information connection is with AI. So that's the first thing. And the board and the CEOs need to take the accountability and really assess AI adoption, not necessarily in terms of how many people are using it, but how safe.
Okay. Allowing it to bounce a little bit and taking some more profits off. We got about 23 minutes to go. New York Fangs look pretty good for the most part.
Transformational digital workspace that we're seeing where humans are working alongside of AI, my first question is, how can they collaborate securely? And then the follow-up to that is, who is responsible if AI unintentionally leaks information because there's no physical person to blame there?
Firstly, I would say, I'll answer the second question. You know, if AI leaks information, at the end of the day, the current compliance rules are there for every business to follow, regardless of any technology losing information that it shouldn't be. Okay, so there's no new regulation here.
I'm just sitting back and relaxing right now. The market, it's been a good day. It's been a good day. Don't need to do anything else right now.
companies, and that need to be part of the agenda and the conversation on a regular basis with appropriate controls set up. Okay, that responsibility is clear on who is assuring that that's not happening.
Supermicro. I'm taking some of the 50 calls off, the 50 strikes. I had some October 17, 50 calls as well. Supermicro. Let me just clean up my positions here.
Cyber chiefs like information security officer or digital chiefs, chief digital and data officers, that clear ownership needs to be appointed sooner rather than later. But unfortunately today, Marley, that's a bit unclear, and that's the risk that enterprises face.
Okay, so then the fascinating chat.
Wow, Supermicro just keeps going here.
Very important for investors is cybersecurity, and this whole AI demand and boost that we've seen has certainly been a hot topic of conversation. So thank you very much, Sumit Dhawan, who is the CEO of Proofpoint there. Coming up next is Options Corner, and Rick Ducat will join us and Marley over in Chicago to look at Carvana shares after they were upgraded this morning, and shares have climbed 9.
Okay. All right.
Papers expired. He refused to renew them. They issued a removal order in May of 2024. We're already past that. It's been a year and a half almost. Then he already had a weapon charge, so that's already a problem. Remember.
Welcome back. We're headed for another record close for the S&P 500 today, just as we kick off the fourth quarter. So what is in store for the rest of the year? Let's bring in Charles Schwab's Kevin Gordon and Wealth Enhancements. Akiko Yoshioka from what they're watching now. It's good to see you both. You first. I feel like everybody's on one side of the boat as we enter the last quarter of the year. Seems everybody's bullish, expecting gains in the remainder here. You?
Now,
We are. It's hard to imagine what's really going to derail this trade. I mean, we've had tariffs thrown at us, changes to fiscal policy, tax changes, and tech has continued to roll forward and power the markets higher. So we don't know if anything really comes about that really changes that narrative.
You're in agreement with all that?
Yeah, I mean, I think when you look at certainly what's driven the indexes higher, over the past month, there's been a little bit of that weaker skew just towards the mega caps at the expense of everything else in the market. I will say, positive development, I think, in the third quarter, which is really interesting, is that you had two of the opposite styles of large cap growth and small cap value actually doing the best in the third quarter. So it was really the middle part.
Supermicro's still going.
But you got a lot more of an upturn from more the cyclically sensitive parts of the market, presumably because I think, the turn in monetary policy, the expectation that rates are going to move a little bit lower provides some of a benefit and a boost to them. But I do think that considering everything is, as I just, mentioned and laid out, you still have to be 500 above their 200-day moving average. Anything to disrupt that and pull that lower when the indexes move higher, that's when I think you have more room for concern. But right now, it's still a relatively healthy setup.
What could go wrong here? I mean, literally everybody's on the same side of the boat. Hardly anybody, if anybody, come on and say, you know what, I'm negative. This valuations are too high. It's a one group of stocks show here. Is the earnings momentum and the rate cut momentum just too powerful, and thus all of that optimism is simply justified?
Yeah, I mean, a lot of this does come back to earnings momentum being relatively strong. It is really not just momentum for one particular group. I mean, the breadth has been pretty healthy, and I will also point out that as we go into this next earnings season, one of the things that's been, I think, a really solid boost for this market has been that expectations have been really low going into each earnings season. We're probably going to see the third consecutive quarter where it is the case that as you move throughout the reporting season, estimates continue to improve and really outpace.
Okay, we're making another trip lower here. Futures. We got 17 minutes to go. I'm not doing anything. Wait for tomorrow. We'll see how the options settle. We're looking for options below current levels to fill in. Okay, we're looking for options in this area between 6,500 and 6,600 to fill in so that we have more support. If you look at yesterday's S&P, I think it was yesterday, or was it Monday? Monday. Going into Tuesday's Monday, Tuesday, Monday, Tuesday, Monday morning. Yeah, Monday morning. You see how much better this looked? You see this double hump here? Had a lot of positive gamma in this area on S&P 500. And if you look at what we have currently, make a mental picture of this, that double hump. Now look at this. All right, you can see that the left hump is gone, which means this support over here needs to be filled back in. We want to stay above 6,600 right here. 6,500 is a major level noted. And we need to build some positive gamma in this area. So that's pretty good. Still, we got stocks making new highs like Supermicro. Big move through the 50-day. Merck making new highs. Merck. Big move on Merck. Maybe take some profits off into strength. All right, just looks like people taking profits. It's been a really good day today. Don't let that go to waste. Supermicro. Big day today for Supermicro. Other stocks having good days. AstraZeneca, big gap up. Micron having a pretty good day. Micron's at the highs. Micron, I got to take the call side off of that credits, that Iron Condor probably. I think I did that already. Actually, I did. I rolled that out. Fortinet pushing through the 50-day. Fortinet. Oracle, nice bounce for Frano. Let's see how the watch list did today. The watch list for the week, Apple a bit higher. Agnico Eagle Mines, gold stocks following through. CyberArk, Cyber Security ETF, CIBR, that one continues. Futu holding on the 50-day. Google, nice bullish day. Bollinger Bands contracting. Hims and Hers trying to muster a bounce. These are stocks from the watch list. IBKR looking for a follow-through. Joby Aviation holding on. Carmen Pharmaceuticals and Holdings. Life 360 trending. Microsoft above the 50-day, looking for that to continue into the end of the week and next. Nukes, the nuclear stocks. What is Oklo doing? Oklo holding, basing right here. Oklo. Nanonuclear, basing, starting to bounce. SMR. Nukes look good. Okay, so this ETF is doing well. It's only $65, $66. You can control many of the nukes without any worry about earnings and stuff. NVIDIA continues to break above that 185 level. Palantir, very strong. We talked about Palantir ad nauseum. Cup and handle pattern, looking for the follow through and a breakout. QuantumScape breaking out. And Reddit dropping off. Riot flagging. Sunrun breaking higher. And SoFi fading. Tesla, new highs. And TVTX, Therapeutics following through. XLC, and XLK breaking out. So tech is leading right now. That's a good sign. Hope everyone's having a good day. We got 10 minutes left to go. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is October the 1st, Wednesday, first trading day of the month. So we more than likely have institutions rolling cash into new positions that they sold into the end of September and started buying new positions for October. The fourth quarter is always the most strong period of the year, so looking for about a 32% upside, not in the S&P, 32% upside potential for the next 2 months, next 3 months total. So definitely expecting to see prices higher. We got JP Morgan's short collar moved from 5,500 up to 6,500, sorry. Moved up from 6,500, 6,505 up to 7,000. So the short is now 1,500 points higher. So as the call wall shifts and the JP Morgan collar shifts higher, we can expect to see prices continue to grind to the upside. Supermicro is going vertical. All right, we continue to move higher. Supermicro having a great day. Supermicro. Oh boy. Looking good. Looking good. All right, I took a few things off. Let's see what else I want to do here. I'm just reducing exposure. Short-term options that expire within the next 10 trading days. I'm culling many of them. What's Bitcoin? Bitcoin moving back up to the highs. Bitcoin. Core Scientific, looking for that to turn back up. Core Scientific. Okay, got two dojis on the daily. Core Scientific. We had a little dip intraday. Okay, NVIDIA. Okay, NVIDIA. Let me take a look at NVIDIA. NVIDIA breaking out yesterday above 185. 190 is the upper call wall for now. Fortinet. Let's see what Fortinet's pushing above. Another security stock, Fortinet. Big reversal, Fortinet. Back above the 50-day. 50-day is the blue line on the right. 50-day. So what I was saying yesterday, as we go into the fourth quarter, what I like to see is what are institutions going to be buying to make their bonuses? Because I think the bonuses cut off somewhere in the first or second week of November. So what are they going to do? Are they going to buy stocks like Fortinet that have potential for upside? They start upgrading these and get this back to the 200-day over the next month? Those are the kind of things I'm looking for. Stocks that have turned the corner, like Lulu coming off the low. Not as much, but similar kind of idea. Merck, as of 3 days ago, this was pretty much at the low. Now they're starting to buy. Shorts covering. So I'll be looking for stocks with the fourth quarter looming. October through November should be pretty good. And we'll be buying stocks that are turning the corner, breaking back above the 50 and the 200-day moving average in the short term. We got about 5 minutes to go. 5 minutes to go. Hope everyone had a good day. Really, really good day for the S&P. If you traded it, congratulations. Meta, I don't see anything. Meta lost the 50-day. I don't see anything. MU. Micron breaking higher. Okay, I got to take the call side off here. Micron, it's not working. Micron.
Okay, down 6% today, about 17% over the last 2 days because Kalshi launched a parlay product. This is a product that gamblers love. FanDuel was really leading the way, and then everybody got into the action. And once Kalshi on Monday came out with what they call Make Your Combo, then it really made investors wonder whether it's going to take some share away from the giants in the space. We saw Vanguard drop yesterday too, and then we recovered some of that today. It's down about 0.5% right now. So why is it hitting DraftKings so hard? DraftKings is all U.S. business. Vanguard's parent, Flutter, has the big international business. It's more of a hedge thing. But interestingly, the CFTC, which is the regulatory agency that oversees these predictions markets, wrote a letter yesterday warning Kalshi and others.
Micron looking really good. Okay, Micron having a good day. For those of you in Micron, congrats. I just closed the Micron call side. I closed the put side this morning for a nice win. About $100 per contract. This one. Okay, there goes Microsoft. Got a nice little pop here. 2 minutes to go. 2 minutes to go. 2-minute warning.
That's absolutely right. What we've seen is Needham saying, we think that Kalshi got 7% of the market share in football. Are they getting that from people who otherwise would be gambling offshore? For instance, California, Texas, Utah, Florida, you can only bet on the Seminoles Hard Rock app. So is it those people? Is it underage bettors who can go on at 18, 19, 20 and use a prediction platform and make a wager? We don't know. We'll see.
Thank you, Contestant Brewer. All right, Mike Santoli, first day, the final stretch, the final quarter. What do you make of it?
have you see some leaders like Meta leading to the downside, and it sort of translates into this opportunistic rotation into things like healthcare that's burst higher, very oversold levels, and then just enough strength in some of the high beta. The beta chase is absolutely a signature feature of this phase of the rally. The high beta ETFs up well more than 1%. It's helped the S&P clear that 67 level. Names like Bloom Energy that was killed last week, and it's already hit new highs of 29% this week.
Woo! What about a sell in a close? That was something else. Wow, that was a nice little. Let's see what happened here. Okay, we probably had somebody closing their position 0 day. Okay, you see these 0 day? Look at this. Look at this. Look at these positions. Look up at 67.20. They just closed all of that. See it? As they close all of that, the markets are going to dump. Okay. Short term. I'm not talking about dump, bear market or anything like that. But look at how these things have changed. Up top, the purple. See how they're selling these positions? They're closing this position, so you're going to see the markets drop off a little bit after hours. All right, folks, that's it for me. This is because of Vinny coming to you from theclosingprint.com at the closing bell. I hope you had a good day. If you didn't, let's regroup tomorrow, 9:15. Hope to see you then. Take care. Have a good evening. I'm going to grab a beer and go sit out in the backyard and enjoy the weather. Take care. We'll see you tomorrow. Ciao.